Good morning, everybody, and welcome. I'm Soledad O'Brien, and I am your MC today. Welcome to the third and final day of FII.
أنا سوليداد أوبراين وأنا مقدمة الحفلة اليوم. مرحبا بكم في اليوم الثالث والنهائي لقمة الأولويات لمبادرة مستقبل الاستثمار. سوف نبدأ أولا بالتحدث عن التنمية الحضرية الخضراء. سوف نتحدث عن دور الحكومة في الذكاء الاصطناعي، كيفية إدارة الأصول وذلك في العالم، أيضا مستقبل الألعاب الدبلوماسية وأيضا الفضاء، وكيف يمكنكم إذن بناء إمبراطورية على الرغم من التجزئة. وفضلا عن ذلك اليوم سوف نستمع إلى رئيس الولايات المتحدة الأمريكية. فلنبدأ أولا بالتنمية الحضرية الخضراء. إذن إحدى التحديات التي نواجهها هي العلاقة بين الرأسمال الخاص وبين سلطة الدولة. وعندما
have to do basically to ensure sustainability in the long term. There's a new generation of cities that are being designed and built, and we're wondering if they're role models for cities everywhere. So as I take my seat, please welcome my panelists who will be joining me today to talk about that.
Very
Good to see you.
Let's hop right into it. Michael, I want to start with you. You obviously have deep experience with the work you're doing in Riyadh. First of all, describe what we're even talking about when we're talking about green urban development, and are you seeing a major shift to the way that's being done?
Certainly, thank you, and good morning, everyone. If we take Numaraba is a physical manifestation of Vision 2030, particularly the three pillars in terms of quality of life, which very much speaks to the green agenda, a thriving economy, and a vibrant society. And ultimately, what we're doing is essentially taking a piece of prime real estate, which is connected very well to the airport, to the business district today. We're neighbors with Jerry, and we're a front door also to the North and Riyadh's expansion in the future. So not only are we in a fantastic position, but we have a duty and a responsibility to think very long term. And what that means is, as we know that society demands more power, it demands more horsepower to actually enable the things that we've heard much about today in terms of AI and such like. We have a responsibility to create a place which is not just a bunch of assets, but it's actually a place where people want to live, work, and play. And with that being the case, and our physical location, we also provide the ability, working very closely with the Royal Commission for Riyadh City and the Mayor's Office and PIF and the Kingdom more widely, to enable between 2 and 3 gigawatts of power, as an example, to come into Northwest Riyadh, which is what we need to actually enact and enable all of the phases of Numaraba. But that provides resilience for the future in the same way as we do that for water, sewage, and the like. So ultimately, we have this very unique responsibility, but all of this is in service of the wider ecosystem.
Diane, the first wave of these projects are now open to residents and also to investors. Can you describe what you are seeing in design, but also in infrastructure?
Absolutely. It's terrific to be here, and especially with this amazing team of developers, many of whom we've worked with, many of whom we'd like to work with. Gensler is one of the largest design firms and architecture firms in the world, and we are working across the world on new communities, on revitalizing existing communities. And at the core of all of those projects is resilience and sustainability. You know, we could frankly be sitting here talking about what it takes to do large-scale development, because that is a thread that runs through all of our practices. And it's challenging, but the table stakes, fundamentally, we know that these are communities and buildings that are going to last 100 years. And when you're thinking in those timelines, you have to recognize the fundamental ideas around sustainability and the fact that the climate, the context is changing. You know, we were talking about designing in places like the Middle East, and that, working with the land, working with the natural patterns of the cycles of the seasons, as well as how the land works in terms of drainage, is fundamental. In most parts of the world, we're also really focusing on how do we create efficient buildings. And those technologies are there. We are creating net zero buildings. We're able to be extremely energy efficient. But I think what I wanted to mention to this audience, because this conference is about investment. And investment in places, investment in cities and communities is essential for every other kind of investment that you are making. So bringing that into your portfolio is really important. And on top of that, yes, we think about the buildings, we think about the transit, and we could be talking about mobility, and are we in AVs or EVs, and what stage we're in. But in addition to the buildings, the residential, commercial, again, transportation infrastructure, we also today now have to include data centers into that mix. We're seeing over and over again now that as people define community, how energy works and is brought in and shared among the data centers, as well as all of the kind of community functions that we think about normally, is the way of the future. And we have to be thinking about those energy sources and how do we balance the cost, and also how do we do this all in a sustainable way.
Jerry, if we could talk about the Diria project for a little bit, do you think that these cities can become and will become a blueprint around the globe?
Yes, salam alaikum, good morning to everybody. Thank you for being here. I think what you'll find from all of us, one of the attributes that we admire the most about His Royal Highness the Crown Prince, is that he took an opposite approach to development. Instead of being a master developer and telling your community, this is what we're building, you will adapt or accept what we're building, His Royal Highness is insistent that the development reflects the personality of the community. Now, Diria is particularly sensitive and special because it's the birthplace of the kingdom and it's the home of Al Saud. So 300 years ago, you had 30,000 people living in a mud city, right? So he wanted to give the feeling to the community of what it would look like in that way, but with all sustainable new modern technology standards. So he didn't see Diria, which is the size of Beverly Hills, over 14 million square meters. He didn't see it kinetic like a Cairo or a Rome. He saw it more like a Florence or a Marrakesh, where people could meander, right? Not a New York avenues and streets. So in order to do that, we had to put 60,000 parking spots underground in rock, 10 million cubic meters of rock, finished. We're operating it now. So in the next round, I'll tell a little story about what happened last night at Diria, which was beautiful, and seeing people enjoying themselves during Eid. But we used the highest levels of sustainability to create what that image was 600 years ago, 300 years ago, in support of the community. So Diria reflects the personality of its community.
Really moving forward to look back in a lot of ways. I'm curious about lessons learned, John. How have the designs and infrastructure, all the things that you're talking about that you have to sort of put in day one, determine whether on year 20 it still makes sense and it's still working? Talk to me about lessons learned for good and for bad.
Well, look, I think a lot of my fellow panelists have already touched on some of the key attributes. I mean, to build a sustainable city, you need, today more than ever, you need to think about it differently to the way cities have been built in the past. In the past, you had traditional business districts, you had residential areas, you had suburbs. I think that construct is no longer relevant. Today, you build a mixed urban development where people live, work, and play, as Michael has said. Infrastructure is a very key part of that. To make it sustainable for the long run, I think we need to look at our world today and climate and the challenges that we face. So, renewable energy becomes a core element of that. That's what we've done at the Red Sea. We built 2 towns of 20,000 people each, all powered by renewable energy 24 hours a day. And the significance of that is, A, it future-proofs, right? We don't know what's happening with carbon emissions and all the rest of that. But I guess we don't want to take the risk that we get that wrong, so we go renewable energy. The technology exists, as Diane said. It's the willingness to actually implement it, and we've done that. And then you build your community or your city around the way people want to live. It has to be a walkable city. Even in a place like the Middle East, the weather is actually much better than people imagine for the majority of the year. So making it accessible, making it walkable, sets the foundation stone for that city to grow and to be there and relevant 20 years in the future.
Have there been decisions that have been made, either personally or others that you know of, where you'd say, boy, that was a lesson learned. We did that so well. That was brilliant. Or, boy, that was not so great.
Well, look, we're early in our evolution. Our cities are now just becoming populated. Our destinations are coming alive. But I think the decisions that we made, so far have worked out really well, because as we've now opened the destination, and the towns are there to support the resorts that we've built, but we built these towns and communities as a resort community, as a place where people want to live. And what's really satisfying to me today is I'm watching it come to life. I'm watching the families move in. Seeing children running around in the areas that we created, the parks and the various other amenities, I think it's a proof of concept that we've actually delivered on the ambition that we set at the very beginning.
Craig, obviously what makes a city sustainable, as we're hearing, is not just sort of the infrastructure and the materials, but it's how you figure out how to integrate art and culture and the people's lives. How do you think about that? You've obviously had a ton of success in that.
So I agree with everything that's been said. And what our point of view has been is to try to create a desirable sense of place. And in a way, like this neighborhood that we're working in now, the design district, in Miami terms, it was the desert. It was completely abandoned. And we had to think about how we were going to bring it back. And part of it is you have to have time. Time is an important thing. You can't do it all at once, because you want it to evolve over time and become a place that people have a real emotional connection to. Using culture, art, architecture, and design is a fundamental part of that. It's not the only part. Adding other things that are cultural, like music and content, gives the sense of place. The urban design is absolutely critical, because you need for it to be a neighborhood that is pedestrian friendly and desirable to be in. You need diversity of uses, because the more it is a 24-hour place, the safer it is and the more desirable it is. And so very briefly, it was nothing, and then we added pieces to it. First, we brought in furniture design showrooms. Then we got the idea, let's bring Art Basel to Miami and let's make it a cultural place. Then we founded a show, Design Miami, which made the design district like a place that had actually invented global cultural content. And then we started to add fashion. There was always residential, office, and it just evolved. And today the fashion brands consider it one of 15 places in the world.
Does it de facto have to remove folks? I'm sorry. Go ahead, Diane.
No, I was going to just build on something you mentioned, which I think is rarely talked about, but is so critical today, which is the factor of time and duration that we have to build a city, to build a community. And I love the story about Miami, but also, with the world's population growing at such a rapid pace in many parts of the world, we don't have the luxury of those long periods of time. And it is, again, today's challenge. How do we build those great cities with amazing experience, with, again, the children playing outside and the wonderful thriving businesses, but do it in 5 years or 10 years or 15 years? And most of the cities we all love were built in 50 years or 100 years. And that's really what is going on today. We've been involved in the creation of master plans for, the DIFC back in the mid-2000s. And, again, I'm super proud of the role we played and so many others in making that, making Dubai one of the great cities in the world. We've been involved in Doha with the Masharib project, which was 100 buildings all at once to create a very localized community. And, again, it was achieved, but I felt like it needed that duration of time to turn it into a market economy. So it was like buildings with no uses, right? I mean, we see that in China, we see that in lots of places where we want to go fast, but how do we really do that? And I think this is one of the modern challenges as we look at the growth of populations around the world and so many places that are looking at what's been done before, wanting to learn from the challenges, and then how do we turn that page and really help to create those thriving centers?
I think that's a super important point. When His Royal Highness sat down to write Vision 2030, he was very concerned that Saudis in general were not outside enough for family activities, physical fitness, stuff like that. And he wrote in Vision 2030 that one of the aspirations of the kingdom would be to create programs and amenities that would have people outdoors at least 3 times a week. Now, I can say this in a minute. I vividly remember 8 years ago sitting down and looking at the UNESCO site of Dareya with His Royal Highness with a pen to sketch what was in His Majesty in his head for Dareya. And then a few days ago, I'm walking around Dareya, the UNESCO World Heritage Site, which has been restored now. We've already broke 4 million visits. Last night, we did 3,400 covers in our restaurants and our festival area around the UNESCO site. Chinese, Japanese, Omani, Bahraini, all people laughing, having a great time. In our wadi, which is by the UNESCO site, we have planted 6.5 million trees, bushes, shrubs with smart city technology. We know exactly how much water, how to do what it is. But last night, on a Thursday, thousands of people on bicycles, skateboards, picnicking, and the community are happy. Right now there's a lot of drama, but to see what he drew on a piece of paper where the community has responded to it with such happiness and a quality of life, where people are outdoors by the thousands, right? So it's just so beautiful to see that with vision and with the resources, and His Royal Highness doesn't give you much time, as you know, it's a different timetable, that people are really enjoying what the vision is.
What you're describing is something that I've seen, obviously not in the cities that you're talking about, but even in a city that's been around for a while. And I'm curious if there's anything that's applicable to those cities that are not new. West Palm Beach has had massive growth, and it's absolutely been designed, where I live, around we want people to be here all the time. We want them to walk through. And really ingenious designs, just making a walkway, right, that only will allow pedestrians, has changed so much in my neighborhood. It's as a non-architect, it's amazing. So I'm curious what the lessons can be learned for those cities that are not new, and if you have to have a massive budget to be able to make this happen, because of course in many American cities you've got politics and policies and sometimes not so much money. Who would like to jump on that? Go ahead, Craig.
So first of all, it's an advantage to start with a city that has been there, because there's infrastructure, but I don't mean infrastructure in the physical sense of like meeting the needs. I mean, it's a place that people have visited. And there's a great book, The Death and Life of Great American Cities, that was written in the 60s. And it explains how you keep the old, but you add the new, and it continues to evolve. And so that's a very important part of the equation. Now, if you're starting and there's nothing there, you're just at the beginning of that phase. And a key thing to think about always that we do is things have to work economically, but we're not trying to make the best return now. We're trying to focus on long-term value creation. And long-term value creation is an economic thing, but it really is a thing of making a place work. Because If you're focused on making it work in a special way, then you get the economic return. So you don't focus on the dollars, you focus on the value creation. And to that point, you need to keep adding things that will make it more dynamic. So you get to the point of critical mass. At first, that empty place has nothing. You build a few things, it's still not that exciting. But if you keep adding really dynamic things and you add the cultural dimension to it, it becomes an exciting place.
Yeah, and I could add to that. I think, and I agree with what Craig said. Look, existing cities have infrastructure, have the civic infrastructure, which is the key part, which is really the expensive piece, right? Hospitals, schools, et cetera. You're not destined, your destiny isn't set because of the way the city operated in the past. Cities evolve, and they are evolving. I mean, New York, Toronto, other parts of the world, the UK, London, where traditional business districts or industrial districts have been converted. They've been converted into places where people can live and enjoy. Old warehouses are no longer warehouses, they're now places to live, they're places to dine. So I think you're never stuck in a particular place. You have that opportunity to evolve and leverage what's already there. The converse to that is if you're going to start from scratch, don't go back to the way it was once done.
Right.
You have a clean sheet of paper, as I described earlier, and you build all of that in day one. You build those public spaces. You build the walkability of a city, which I think is vitally important. And that's what the youth of the world today are demanding. They don't want to be stuck far away and having to commute. They want to get out of their apartments and walk to a place of work or go to their favorite restaurant or coffee shop and the like. So,
I think I'd just build on that, if I may. Craig, I think it's absolutely right what you say in terms of how do you enrich what's already there and how do you leverage that. And equally, John oversaw Canary Wharf. And I can remember going to Canary Wharf in 1985 and seeing the first piles put in the ground for Canary Wharf Tower. And when you go to Canary Wharf now, it's a thriving place. It feels like it has soul, but it's taken decades, hasn't it, to get there. And I think if I translated that to Riyadh and Numaraba, we're probably the modern day equivalent, but at a different scale of Canary Wharf, whereby we have all of the benefits of Riyadh today, but actually we have the ability to do something new and smart, and we have an obligation to ensure that we design in resilience at source. Now, the one thing being somebody from London is the fact that, for 350 years, 80% of the streets have been in the same place. So if you actually took your shoes off in November in London and walked the streets, your feet would feel moderately warm because the pipes and wires underneath the roads, the sidewalks, are absolutely jammed and packed. The beauty of having this extension to the city is the fact that we're able to define, design, conceive, and bring to life a place which is born smart, which means that you can add to the existing fabric and what have you. If I may just add, you referenced a question earlier about what are the lessons that you've learned. It's almost 2 years to this day that we went out for our first architectural competition for Numaraba, for our first community. It's our biggest community, about 23,000 people will live there. Similar to Jerry with your avenue, we have a 1.7 kilometer spine, probably more consistent with this Ramblas in Barcelona, but it's an amazing place where people will live, work, and play. But what we received back 2 years ago were lots of incredible designs, but when we put it to our architectural review panel, they said, this is not Riyadh, to Jerry's point.
Right.
Yeah? And we said, well, what do you mean? And they said, well, you have to be of Riyadh. And what we learned...
What do they mean by that?
Well, this is precisely the point. We said, well, what does that mean? And actually what we learned through the great and the good and really delving back through heritage and history is that, we know Saudis are nocturnal characters and love to be out at night, which means you need to create a place which is going to be vibrant and inviting. But probably more importantly, in the daytime, as John said, much of Riyadh is very, very livable, even in the hottest months of the year, because it's arid and it's dry, it's not humid, which means that when you look at how Riyadh has been conceived, largely driven by the Salmani Code, there's a lot of balance between community and privacy. And actually, what we didn't have in our first architectural designs were that balance. So in other words, being able to step off of the spine and actually find a small courtyard. And actually, that small courtyard is just a hubbub of activity and energy and community. But equally, Saudis also value privacy. So you have to think about how do you create setbacks? How do you create lean-tos? How do you create shade? And this is all the sort of stuff that we've learned. But I think the benefit for us is we've had the ability to learn from the best in the world, but also to apply it in a very tangible way to Riyadh. And, Jerry, what you're doing is remarkable. And the nice thing is we're not cannibalizing one another. Jerry has something unique and we have something different to add, and together it just adds to
Yeah,
the
see, now
whole of the
we're
city.
building 30, at some point, we'll be up to 30,000 homes. We've already announced the 10,000. But this is very interesting because Riyadh, as a behavior pattern, behaves like a Los Angeles. It's all car-driven. There was no walking when we got there years ago. We didn't even have curbs and sidewalks and street lamps. We put in kilometers of it. But this is very interesting. We've sold 17 billion SAR, almost $4.5 billion US dollars in pre-sale residences. But what was the number one reason why people bought in Diriyah? And what's the average age of the people that bought the apartments? All different economic levels. You would think it would be older because today is a little bit more expensive. But the average age of the apartment buyer is 37, average age. But what was the number one reason why they bought? To what my very wonderful colleagues have said, people, the young Saudis, want to walk to pray, walk to school, walk home, walk to the restaurant, have their children outside playing, right? And now we have evidence of it because we've already sold 17 billion SAR before they occupy. Now, the good thing about today, which several of us are doing, is that we'll have our first residences move in this year. We'll have most of historic today of 5 kilometers finished by 2030, including the Opera House, the new Kingdom of Saudi Arabia Contemporary Art Museum, along the great work you've done. So we're seeing Riyadh now where it won't be dependent on a car.
Do you need sovereign wealth to be able to make this city building on a massive level happen, replicable? Or can it happen elsewhere?
I'll just chime in one level on that question, which is, what is the scale of the ambition? And, we were talking about when we have been involved in designing master plans for, new cities or very, very large districts within existing cities, there's a real tension between who is going to build the infrastructure. Often that means all the parking below grade, certainly all the utilities, the connections even to, mass transit and all of the things that kind of make the community before you put the buildings on it. Who is paying for that? Is that the municipality? Is that, an investor community that is like sovereign wealth? How that question gets answered makes all the difference in the success of a master plan community.
Absolutely.
And we've seen where the ambition is to have kind of a very consistent, very, exciting master plan with below grade parking and only walking and, again, a great urban experience, but there isn't that sovereign wealth or there isn't that will of the municipality, and so it gets parcelized, and you then start selling off the parcels to different developers. You start with above grade parking. There starts to be a breakdown in the overall master plan. So I think that question and how the investment happens actually determines the potential of the success. But the flip side is we have overambitious money sometimes that goes toward a project where there really isn't demand. And so then a project gets actualized without the community that wants to move in or the retailers that want to be there. So I think that pacing of how both, very anxious money and the realities of how to really build a city, how it layers over time, have to come together.
We have only 1 minute left, so Craig, I'll give that to you.
I would just add to that and saying the same thing. Having resources is valuable, but if you don't have the discipline so that what you're doing is going to work, then it's like a fantasy. And it doesn't mean that you have to get, as I was saying before, the greatest return, What you want to do is you want it to work economically, and at the same time, you want it to create a lot of value to everything around it. And that's the philosophy that will end to the ultimate goal. So having too much money without the discipline is the problem, and I'm just saying differently what you said.
And having too little money and having things parceled off also a problem as well. Gentlemen?
But again, you can control that, whether it's through a master plan or through an urban plan. There's the discipline point. You need somebody to be saying, okay, this is what you can and can't do. The infrastructure is key. Does it need sovereign wealth? Maybe, or the governments, right? I mean, sovereign wealth governments, pretty much one and the same. It's important that the government does take the lead and builds the enabling infrastructure, because private developers can't afford to invest in civic infrastructure on that scale in order to make a destination feasible.
And that'll be our final word. Thank you so much. A big thanks to my panel. Appreciate it.
Thank you very much, Dan. Nice to see you. Thank you.
Anna, we're gonna go this way. Thanks, Jerry. Appreciate it. So continuing along these very lines, we turn to our large-scale development. Forgive me. And as you can see in that panel, large-scale development really only works when the underlying model works. It can't just be about vision alone. That's what our panelists said. Vision matters, of course, but obviously systems matter as well that make a place function, attract demand, and sustain value. So travel has become about much more than just destination appeal. Increasingly, the real value is behind the scenes in airports, logistical networks, connectivity. And as global travel grows, what systems and what infrastructure actually pays off? So please join me in welcoming Sir Martin Sorrell and his panel.
I'll go around the back, sorry.
Extensión al agua. ¿Le extensiona eso? Buenísimo.
So, good morning, everybody. I'm subbing. I was thrown into this late last night, so with a group of friends from the travel industry. So I did what I did yesterday for the AI panel. I went to my friends at Gemini, and I said, I have these three luminaries from the travel industry, and how would you describe them? So Manfredi, you are described by Gemini as the investor. Alejandro, you're the operator. And Marco, you're the infrastructure visionary. So high expectations from the audience. Let me just start off. Top of mind, obviously, is what's happening in the Middle East. How does it affect your business, if at all? Manfredi, kick off.
I think one common feature will be the price of flights. If people have to spend more money flying to a destination, they will be less willing to spend money on the destination. That's a problem that we all have, I think. So I think that this will affect shorter to home, closer to home vacation choosing until this matters continues. So then specifically, of course, cruising, which is one of my traditional areas, is affected in more ways. Cost of fuel, that affects the bottom line. And also certain parts of the world are difficult. So I have a ship which is in Asia, it has to come to the Mediterranean. Two ways, either through the Suez Canal or around Africa. It makes a big difference. So, and this will affect future planning unless we get a very stable view, because you don't want to pass around Africa. You don't have revenue there. So these are the main things. Then there's a psychological thing, uncertainty in the economy. Will I be able to afford this? What's going to happen to my employer? Is it going to cut costs, etc., which adds on what we already know, the uncertainty of people, the impact of AI, robotics, etc. So this is a bit what is the, I think. But
Okay. Yeah, we'll come back to the travel pattern in a minute. Marco, you're in the teeth of this, if I can put it that way. How's it affected you?
So thank you, Sir Martin. It's good to see you. Thank you, everybody. So the way I will describe it is two aspects. Aspect number one, in a large-scale project like the one that we're managing, is all about logistics strategy. So the logistics strategy is something that we have been working for the last 2 years. So we have already in place how it's going to be all the deliverables coming into the airport. So far, none of the different suppliers have tell us that they are going to come with a delay on the project. So that means that we continue on schedule as is previously determined. On the second aspect is about on the day-to-day activities. We have more than 4,000 people currently working at the airport. We're ramping up the amount of labor that is going to be there. So far, the kingdom is moving well. As always, in an airport, you are never looking at the short term. We're always looking in the long term. As an airport investor, you are always looking in what is going to come better into the future for the airport. So anyway, we still manage the consistency for the involvement of business that want to be our partners and they want to continue being with us in the long term of this future airport. We have 12 kilometers squared, Sir Martin, that is more than welcoming people to invest at the airport, and everybody consistently comes with more solid business plans.
Okay. Alejandro, how's it affecting you?
Thank you, and thanks for having me. The impact is complex to analyze. I mean, we have 9 properties in the Middle East, and obviously thoughts and prayers to them. I mean, our teams on the ground are in a difficult spot right now, and basically there's been a contraction in business in terms of the activity in the region. I have to believe that this is clearly temporary and that, that desire to travel and to experience will come back, and, it would be an amazing destination as it has always been. But right now the situation is difficult, particularly in the places that it's mostly directly impacted. This is, broadly speaking, causing a shift in travel lanes. Like people that would used to go now to the Middle East are rethinking about where do they vacation. More than 50% of our guests are Americans that travel within the US to Europe and to Asia and the Middle East. Obviously, all that business is gone for now, and they have basically reshifted where they travel to other places in the world. We'll have to see if there's an impact for the summer. Typically, Americans, they travel to Europe during the summer. If this prolongs, there's going to be an overall concern around travel in general, not only to the Middle East, but traveling in general. Because people to travel, they need to feel safe. I mean, sort of a thing that it's pushed by how do you feel about going into a new destination. So, I mean, in summary, the short-term impact in the region, it's very direct and very impactful. Worldwide, we're seeing a shifting in travel lanes, which we'll see how long that lasts. Midterm, I hope that and we were discussing that this morning, that the travel sentiment towards the Middle East will come back soon, but we'll see, because for some people in the region, going back to the region is going to be perfect, but for some people which are coming from the US or Europe, it might take a while. So that's a question mark. I remain very bullish, optimistic about the region and the future prospects and how it's going to evolve over the years to come. But right now, it's a situation that, it's mixed.
So one of the things...
I would add one thing.
Go ahead.
Because he has a very diversified portfolio, but certain brands are very concentrated in the Middle East. I think, I don't know, but you can teach me. I think that the Middle East is one of the most profitable operating locations because you have global pricing revenue and some of the operating costs are India costs. So the margins are phenomenal. And everything which is lifestyle, everything and the season is very long also.
Yeah.
So you use the asset very long time and the margins are phenomenal. So for certain brands which are not diversified, the impact is much bigger. Am I right?
No, you're right. I mean, and obviously our view of the business in the region is very long term. And we have amazing partners in Saudi through PIF. Jerry's here, Viria, John Pagano as well with the Red Sea development. And we we are looking at the business in a very, very long-term basis. This is going to be temporary, but you're right as well. I mean, this is a region that for us as an operator is profitable given the
So, but
dynamics.
you're painting this picture of a K-shaped world. You know, everybody talks about K-shapes in a number of areas, and this is, you know, you're servicing the top 1% or 0.1%, whatever it is. I don't know what the addressable market is. I mean, do you know? Can you say what the address? There's the travel market, and there's your market that Four Seasons,
Yeah.
Abercrombie and Kent, King Salman Airport, trying to target. I don't know whether you can quantify that, but you're really basically saying this is an insulated market.
Yeah, I mean, what we have seen so far is that people continue to travel. I mean, 2025 was our best year in record in terms of growth of spend, and particularly coming from that top 1%, which is basically people that want to continue to have unique, curated, elevated experiences, and they continue to travel. And that was the case as well as we started 2026. And we don't think that that's going to go away. I do think that there's a shift in travel lanes at this point in time, but the desire for that cohort, which is the one that we focused on in terms of spending their money on experiences versus goods and traveling for unique, curated experiences, that's here to stay. And that's going to be something that will continue to grow.
Let me just turn to you, Marco, on the airport. You recently signed MOUs with, I think, 7 major real estate developers.
Yes, absolutely.
For the 12-kilometer square mixed zone use at King Salman International Airport. What's the specific yield per square meter target that makes the airport a self-sustaining city rather than just a travel cost center?
So let's bring a little bit of background about what is this airport. I will say the King Salman International Airport is the most ambitious airport project I ever seen. This is a brownfield, so it's currently taking the existing airport that has 41 million passengers, and we want to ramp it up in phase 1 to 100 million. So it's a very surgical process that we have to do. It's not every asset has to be finalized in order to deliver the experience. We have to do it asset by asset in order to continue no impacting the existing airport operations. So that's number one. How are we developing the airport? As mentioned before, we have 12 kilometers square. Those 12 kilometers square are dedicated to support the aviation services that are happening in 45 kilometers square. What do I mean with that? We want to create the headquarters for the airlines. We want to create areas for living and having experiences for all the cabin crew. We're going to create areas for MRO. We're going to create areas for warehouses, but most importantly, for logistics. Riyadh is a city that has 7.5 million people. It's a logistics hub that we need to create there. So in the 2030, we have to bring 2 million tons of cargo with a projection of 3.5 million as the city grows. Riyadh and the kingdom with 35 million people is the hub in the Middle East. How are we going to attract the passengers? How are we going to attract the different investors? So number one, you have to go for the priority investors. In this case, we signed FedEx to come into the kingdom. It's the first time that FedEx is coming into the kingdom. It's a tremendous advantage for us. We're going to bring a logistic distribution from Riyadh. So that shows you, the capacity that is going to start growing there, where you're going to generate with logistics 100,000 jobs on airport side. That's extremely important for the GDP of the city. So that's the beginning in this sense.
Okay, so Manfredi, in a month's time, you're going to take another big leap, but the Crystal Grace is your first new build in 25 years? Is that true? The Crystal Grace?
Crystal?
Your Crystal Grace, your
No.
steel cutting?
No, I've built many ships, no?
Okay.
All my life. I think that we ordered the first purposely built cruise ships in 1986.
Yeah.
With a brand which was called Sitmar at the time. Then we continue with Silver Sea. I don't know how many ships I've built.
And now how are you ensuring that this ship avoids the high volume, low margin trap?
But I think that we're going to a totally polarized travel business. One is big volumes, lower margins, a lot of people to be processed in a fast way. And then there is the top-level market. Top-level market is attention to detail. Every passenger is an individual. And you go to the extreme of the so-called white glove service, which now is spreading. Now you have white glove service in the hospitals. Everywhere, people who can afford want to be treated in a special way. And so everything which is something which gives the perception to the person that you are special, you've been successful in life, and that way you deserve something more. You don't want to have now anymore. I'm one of the few people that has suits and ties, etc., but people don't care. People care to have experiences and to be treated in a certain way. And so that's the trend. The trend is huge volumes, and you have to spread them around the territory. Otherwise, they're going to destroy the destinations. And some people who are going to want more and more and more, which is why in the cruise industry, I'm very happy that Alejandro comes with a product which is going to be even higher.
Yeah.
Because, of course, he has to set much higher prices. And so I can do very well.
We will.
Selling against his prices, giving a good product.
We will.
So I welcome his success. Especially as you bring in new to cruising.
Yeah.
Don't take my passengers.
Yeah. I won't, but no, I mean, I fully agree. I mean, for us,
I mean, you've just launched,
yeah,
what was it, 4 weeks ago?
last week.
Last week.
Last week I was in Malaga, Spain, a very proud moment for the brand because we launched our first Four Seasons yacht.
And you have a suite at what, $44,000 a night?
Correct.
The funnel suite.
The funnel suite. Yeah,
Okay.
that's correct. But it's to Manfredi's point. I mean, if you build the right product to the right quality standards and provide the right service, the clientele that we target are willing to pay that. And for us, it's been more a thoughtful extension of the brand, meaning that we have always been known about the service we provide in our hotels, but now we extended years ago into branded residences. So it's sort of have the Four Seasons experience when you live with us. And then our next extension has been expanding to travel. We did the Four Seasons private jet, and now we're doing the Four Seasons yacht, getting into the cruise industry together with Manfredi. But what we hope is to continue to, I mean, because in so many ways I see it as an evolution of the cruise industry, because we're not going to compete with the big cruises. I mean, ours is 95 suites. It has a very specific offering. We talk about the possibility of connecting different routes, connecting even with Abercrombie and Ken, connecting with our hotels, and with that, elevate the offering that we provide to our guests.
Okay, so just
One word.
Okay, I'm going to exercise my moderator authority here. Just a second, because I want to come to a final question. We only got a couple of minutes. They cut down our time a little bit. So,
Yes.
so we're talking at this conference about capital in motion. And all three of you are building probably the most expensive hardware in history, in the history of travel, in yachts, mega airports, new cruise fleets. And is the future of travel actually in physical assets, or are you just building beautiful containers for data and software, and you haven't figured out how to monetize that? So what is it? Is it physical assets, data? What is it?
For us, and I'll be brief, for us is the experience, the guest experience. I mean, ultimately, our brand, the promise is having a great physical asset, but ultimately what drives the experience, it's the people behind. I mean, we have this concept of having an amazing, consistent culture of service. And you can have the best asset in the world, but if you don't deliver on the guest experience, it's going to be worthless.
So that's music to my ears. That's about branding.
It's about
branding and customer experience. Manfredi?
No, I would add, there's more things to it. So there is certainly the experience. Mm-hmm. There's also the quality of the assets that you're going to provide, and the product has changed. When I was started in cruising, the spa did not exist on the ship. Now it's an essential thing. But it's also the perception. So if I organize travel and I say, I'm going to bring you in a Four Seasons, independently from the quality which is there, immediately I'm upgraded. And so with a new asset which is built in a certain quality, you immediately upgrade your experience. It's part of the total package where you're giving something more than whatever is available for everybody. So that's it. So you're part of an asset. Your brand is part of an asset.
Last word from you, Marco, from
Sir Martin, it's a really good question. Airports are extremely regulated today in general. So we have to have a mix between guest experience, regulations, and developing the right assets. So everything is a mix with one mindset, the best guest experience. We're looking to bring 100 million passengers. I have to be sure that each of them is going to have the best experience coming to Riyadh.
Okay, so I hope that the audience has understood that it's really all about marketing, premium, brand experience, and advertising. Thank you.
Thank you.
Thank you.
Sir Martin, thank you very much, and thank you to your panel as well. So private capital has been getting bigger, more global, and more sophisticated. Now it faces a different test, how to get out. With trillions that are locked in mature assets, there are challenges to liquidity and timing, and whether the market has finally found a path to release the pressure. Up next, our panel with James Fontanella-Khan. Please welcome him.
Oh, faster. We're missing some of our fellow panelists. Hello, everyone. Thanks for my panelists for being here. We'll get straight into it. Nelson, we're talking behind the stage about why companies are, or fewer companies are going public sooner. And you're at NASDAQ, one of the most prestigious kind of exchanges. Why are we seeing companies kind of taking longer to go public than before?
Great. Well, thanks for having me here. This is a wonderful panel to be on. And this has been a debate now for maybe 10 years. Now, this is not a new debate. So I think you look at companies, there's two different classes of companies. Companies that could go public really at any time. And they want to delay that because they look at the public markets as a bit of a distraction because they can get liquidity in the private marketplace. Their brand is already established. So they take this time as they think about the public markets having to deal with quarterly cycles, having to deal with, again, the distraction of being public. And they can really go at any time. And we have a whole cohort of those. And I think the challenge there that we have to look at as a public exchange and the regulators is how do we make the public markets more attractive? And we do have the most constructive SEC that we've had in years. The administration is very focused on this. So there are areas around semi-annual reporting changes from quarterly considerations around the proxy process improving, other areas that will make it more efficient to be public, but you're still going to have to deal with those quarterly cycles. So I think we're going to see some of that get fixed and move in a better direction to make the public markets more attractive.
Do you find those as kind of structural?
There's a structural bucket, and then we hopefully have tokenization coming, which will reduce some friction points. So it's all about how do you reduce some friction points in the public market, but you're still going to have that moment where you say, well, companies still want to have that opportunity to grow and scale privately. And yesterday, some of the panelists talked about the democratization of that and how do you think about the private markets. At NASDAQ, we're a very scaled player in the private markets as well. We have some of the most liquid platforms for both corporates and for private funds. We have a very large data business. So I think you have this blend moving of private to public that was reduce friction points. There'll be some opportunities, but this is a long-term challenge. And then you have companies that are stuck, which I think our other panelists will talk about, just some of the challenges that the backlog of private equity funds see in their portfolio. So I just would summarize by saying there is the most momentum I have seen on the regulatory side to make the public markets more attractive. We're also seeing states such as Texas, Nevada, having consideration around more friendly corporate environments that'll help. And then we need to think about just how the markets get more constructive, which they started to this year.
Yeah.
And now we're a bit of a pause. So we'll see how that plays out. And I'm happy to address more of that as we proceed.
I'll come back to some of those kind of changes that are being discussed in DC. Stephen, like you're advising both private and public companies, like what are you advising your clients, or what are you hearing from them? What are the issues that they raise to you?
Look, I think the principal issue has been an evolving nature of the toolbox that many of the issuers have. I think NASDAQ have done an amazing job in providing one form of liquidity, but that form of liquidity and exit has evolved over time. Importantly, and something you're raising is policy formation must meet that. And I do think with the toolbox expanding, this year you've seen capital markets, even in a volatile environment, act extraordinarily effectively for exits. You've seen ECM volumes are up north of 20% this year. Corporates are getting ready for an exit protocol, whatever that might be. You're seeing an extension of continuation funds and secondary funds that enable a different route of liquidity. So I see the toolbox as expanding dramatically. I think making it easier for corporates to exist in the public domain is very important. And that's why policy formation with our regulators is extremely crucial to navigating that path, to demonstrate that life in a public environment can be robust, it gives you a currency, and has all of the advantages and maybe more than existing in a private marketplace.
Thank you. Mika, like, from your perspective at Mizuho, like, again, you dabble in both public and private markets. Like, what is your perspective? And like, do you think private markets have just kind of improved over the time so people are happy to stay? So it's like, we posed the question of the $3 trillion exit problem, but maybe the question is it a problem?
First of all, is it public or private? I don't think it's an either or. I think it's an and. I think that markets tend to be pretty efficient, and we have seen the pendulum swing one way as private capital asset classes exploded, I should say, over the last 15 years from 3 trillion to 17 trillion, so it's maybe fivefold. And we've seen that in other markets as well when we talked about private credit backstage and then the broadly syndicated loan market. So the markets do tend to go back and forth. What I would say is that given the backlog that we have today, the IPO markets on their own could not unlock that, I would say, jam or that backlog that we have today, and you're going to need to resort to the continuation vehicles that Stephen just talked about, whether it be sale of minority stakes or an outright M&A sale process. And so, again, it's an and, not an either or. But I think the other point is, like, what are you trying to solve for? Are you trying to gain greater branding because an IPO is a fantastic branding event? Are you looking for acquisition currency because it clearly is a tool for M&A? And something that has been less than talked about is that after decades of M&A, you have companies sitting, I would say, with a lot of captive businesses, which may not be core to their mission, strategy, and there's an opportunity to carve out, split some of those businesses into standalone publicly traded companies and unlock value while you're doing that. So to me, the first question is, what is the corporate or even the backers are trying to solve for?
And what are they trying to solve?
Say it again?
So what, like, because one of the things we tend to see companies like finding it frustrating to be public, and there's like kind of a sense of the short-termism that comes with it. And so it's like, is that one of the major reasons like where you can see actually greater, if you want to develop something truly innovative, it's hard to do it as a public company. And so is that something that you notice?
Look, if you just look at sheer numbers by themselves, the number of publicly traded companies has halved over the last 3 decades. I don't think it's purely cyclical, which is what I talked about earlier, where you had a massive amount of private capital kind of flowing into the market. There are some of the structural issues that Nelson talked about, where you can improve disclosure to be toward information that's material and meaningful for investment. You can provide, I would say, fast entry into an index by which you provide greater liquidity for a company. And so you're solving that liquidity issue. But I'm going to talk about one other thing, which is hasn't been talked about much, which is the scale. The size of companies debuting into the market has been much larger. And those tend to garner both investors as well as equity research following and what have you. And so it is harder when you are a smaller scale company to try to differentiate and garner that attention, investor interest in the market.
Thank you. Henrik, you're based in the UAE. What can you give us your perspective from, because this is often we're looking at this from a very US-centric perspective. What's your perspective?
Our perspective is that there is a huge amount of capital available for most types of companies. And we're actually probably in a quite unique space. I would call it a renaissance of financing opportunities. So whilst we look at the public markets, if you look at the US, which is probably have most data, 99% of US companies are private companies. And only 13% of those over 100 million of revenue are public listed companies. Now, these companies are getting huge amounts of capital, whether it be public or private. And I think what we'll see is a convergence of the markets between public and private, and that's a great opportunity. In the Middle East, I think into last year, in the first quarter, we've seen unprecedented investment flows coming in, and particularly into Saudi with some of the terrific infrastructure projects, into the UAE, and all of these countries, there's been huge flows. And also on the back of the whole expansion of AI and data centers and economies being at the forefront of the future. So we've seen very deep markets, particularly if you take the bond markets or the liquid loan markets, but also in the Islamic space, the Sukuk market has dramatically expanded. So I think there's a huge amount of capital. We've never had as an opportunity for companies to fund like this previously. The question here is about the 3 trillion is slightly different because that is trapped potentially within private equity funds. And that's slightly different from the ability of getting capital to companies, where I think there's a huge opportunity.
Thank you. Your Excellency, do you think this is a problem of or we are overstating it?
Well, James, I would say we can look at this into 3 distinct questions. One is, given the title of the panel, is how to solve the 3 trillion exit problem. Is it a problem? And if so, is it secular or cyclical? Assuming we answer 1 and 2, what are some likely culprits? If we start with the first, obviously the panel and the title of the panel presents this as a problem. But there is another way to look at this, and to look at this as, if we look at the private markets as an island, the shoreline, as the island grows, the shoreline of this island, which is the meeting point with public markets, is likely to grow even further. So the bigger the industry gets, the more likely it is we are going to have businesses that are waiting for IPO, waiting for exits, et cetera. So this in and of itself is not a problem. What is a problem, and what may be a problem, is some of the points that my panelists have mentioned, which is the average duration of a company going public gets longer. Even more problematic is if the average size of a company going public is larger, which means the public markets are less and less a likely venue for financing of smaller and growing businesses. And this actually leads to my second point. Is the problem a secular problem that we can't control, or is it more cyclical? There are 2 pieces of evidence that might point to the fact that it is cyclical, not secular, and I will share 2. One is from our own experience in Saudi Arabia, because in Saudi Arabia, we have been actually moving in the exact opposite trend of what many other markets, particularly a market like the US, has gone through. In the past 10 years, or 10 years ago, we had one of the smallest number of listed firms anywhere in the world, particularly given the size of our markets and our economy. And as a result, in the past 10 years, we have actually been one of the most active markets in terms of number of listings, amount of capital raised via the equity capital markets, et cetera. So it is not irreversible. The second point is with relation to whether it's secular or cyclical, is the effect of technology. And we must remember that what we are going through right now is in the midst of an AI boom. And whenever you have a concentrated sector of investment and quantum of investment, it is obviously faster to finance that very selective investment via the private markets than the public markets, particularly if there are business model concerns about what the likely steady state venture, the best venue for this is the private markets and not in the public markets. Now, this leads to potential culprits. What are potential culprits? Definitely my panelists talked about regulations, and one of the biggest challenges of regulations is historically regulators have thought of liquidity as an on or off switch. So in other words, you are either listed and you have a lot of liquidity, but you also have a lot of constraints, or you are not listed at all and you have limited liquidity and limited financial disclosure and governance requirements. I think the more and more we look at liquidity as a spectrum and say we actually start to graduate disclosure requirements, graduate governance requirements as the level of liquidity grows and the level of exposure grows, it helps us be a lot more refined about this experience. And the last culprit I would like to mention is actually the more fundamental issue, which is fee arbitrage. We have had an industry in the public markets that have become commoditized as a signal of the large passive industry. And as the industry have commoditized, asset managers have looked for more fees. And generally, the 2 and 20 model for the past 20 years has been a big attractive point to create more private asset management as opposed to public asset management. And again, thinking of fee basis more as a continuum rather than I move to the privates to get private fees and I cannot get private fees or higher fees in the public market is likely to bridge that gap even better.
That's fascinating. But we've seen in the US, I think, Nelson, you were mentioning that briefly, kind of the conversations with the SEC, there's talk about reducing kind of the quarterly reporting to biannual and that's from the shareholders' perspective, that's seen that kind of not that great, to be frank, but maybe I'm wrong. So like, what's your view on this?
There's so many great points that have been made here, and I agree with so many comments about this.
And please feel free to comment.
Yeah, I think that one thing to remember is the public markets are massive. They're over $125 trillion in capital, more than that likely. Private markets are between 12 to 15 trillion. Private markets are going twice as fast as publics, but the public is still a very massive market. So, and it is attractive. Companies do want to go public. So I think this idea of how we think about the graduation from a regulatory perspective and access to liquidity does come with transparency as well too. So how, if you want more liquidity, if you want more access to shareholders on the retail side especially, you're gonna have to think about the transparency side and what information you're willing to disclose. So the other point I make on the retail side is that the retail market in the US has become very smart and very big. So 10 years ago, they represent 10% of trading on a daily basis. Today, it's an average of 25% or so. And they're very educated. They're very educated in the options market. So as you think about this idea of graduation and what one of the problems we hear a lot about is that the retail investor does not get access to these large private companies if they stay private for 20 years. So I think you're going to see, again, this is going to take some time, but it will be this gradual evolution of more disclosures in the private markets, more liquidity in the private markets, and then hopefully this on-ramp to being public because it is the most consistent liquidity you're going to ultimately get. And I think you'll have some advantages that will happen there as securities become more tokenized. They'll become reducing friction points as well as the regulatory side. So this is an evolution. I think there is a wonderful opportunity for all of us to think about market structure reforms and how this helps companies and investors really get to where they want to be as hopefully a large scale public company. But I mean, one more point I'll make is on the size of public companies, you're spot on, is that the average size of a company, although they've declined quite a bit in number, they're getting much, much, much larger. The buy side demands these billion plus companies. So that's going to be that feels to me somewhat irreversible. But
I completely agree. I mean, we're in a period where there'll be some structural change because we also have digital assets and other things. But the concept of having an exchange has existed for hundreds of years. Banks have actually been doing private credit for hundreds of years. I know the last 10 years is now some relabeled, but a bilateral loan is a private credit asset. So how the infrastructure evolves is super important. A lot of what financial institutions and banks do is we provide rails or highways or infrastructure to connect capital and investors, and having an exchange around that is super, super important. So I think you're going to see something where these private public come together. There's been some initiatives around it, attempts at ETFs and other things. We're in the early days, but I think we're going to see in 10 years' time, a lot more capital available for a much wider range of companies. It's just a function how that operates.
And I don't think it's a question of whether to report or not to report on a quarterly or biannual basis. I think it's what are you reporting? When you have the cost of being public ranging anywhere from 2 to 10 million annually, and you have audit, legal, compliance, D&O insurance, what have you. So the question is, how do you construct a system whereby you can provide investors with salient information that's going to provide them with the data to make an investment decision while at the same time not tax a company? And the other thing we hadn't really talked about, which is kind of this inherent tension between short and long-term objectives. So on the one hand, you have the investors very much focused on returns, margins, capital allocation versus companies that are looking to prosecute on their long-term strategies and are looking to make investments which may in the short term compress your margins. And so providing some sort of like a gradation system, I think, like which is what Nelson was talking about, or rethinking about what information do you really need to make decisions, I think is where you start bridging. It is not black and white. I kind of view it as a whole range of gray.
I agree with that. And I think His Excellency made a fantastic point about the gradation, because we're looking at a $3 trillion problem, and yet not all of that $3 trillion is ready to be in the public domain.
Absolutely.
And that's why I believe that not only the access to an increasing toolbox, but policy formation around that, very clearly articulated to the managers of the corporates, gives them a route looking at that gradation of where they can find liquidity. So I do think that as you think about what is stuck, we really have to understand qualitatively who is ready for the public domain, who is ready for the private domain in a different form. And I think that becomes a big challenge back towards the investors. I also think that markets price risk and quality very effectively. And I do think that exchanges are able to provide a framework of exit along qualitative lines where investors are very focused on the qualitative nature of the asset that is coming into the public domain.
Absolutely. I mean, one point that you made earlier about, is this a private equity problem? In the sense that there's a lot of these private equity owned companies, before the model, you keep them for about 5 years and then you sell it on. Now you see some of the private equity companies like holding on to them for longer. Some things people say that they like the asset. The nature of private equity has changed. But the other problem is that there's no other private equity firm or strategic that wants to pay the valuations that are out there. Is that a problem, Your Excellency?
So what I would say is the industry itself has grown quite a bit. If I look at our experience in Saudi in terms of graduating these types of requirements, I know a lot have been discussed around, for example, the SEC's proposal around quarterly financials. I think there is an approach to look at this as part of this graduating level of spectrum. So I mentioned earlier that we have had a dearth, high level of activity in terms of IPOs and listings over the last few years. One of our biggest tools in our toolbox was the creation of our Numu market in 2017. Now, Numu is Arabic for growth, so it is our growth exchange. And actually, as a matter of fact, that exchange has biannual reporting, whereas our main board has quarterly reporting. And that is part of this graduating approach of higher levels of liquidity means higher disclosure requirements. Interestingly enough, even though we have had biannual reporting in our Numu market, which today houses 125 businesses, markedly different from our main market in terms of size, in terms of maturity, in terms of growth prospects, et cetera. Interestingly, many of the businesses still elect to file quarterly financial statements because they would like to get themselves ready for graduation into the main markets. I would like to also point out to a specific practice that has a big impact in terms of this private versus public dichotomy, and that is this notion of earnings guidance. While regulators don't get involved, it has become market practice, particularly in markets like the US, for corporates to provide earning guidance. And I think more than anything around regulations, forcing a business to quarterly, every quarter, to say, my earnings are 2 cents or 3 cents, is likely to divert their focus on that earnings number, meeting that earnings number, coming up with that earnings number, rather than talking about and looking at long-term prospects. I think it is the role of the analyst community to come with earnings guidance, and it is the role of management of companies to work on long-term perspective. And I think we shouldn't fall into the trap of catering for the beast of the next quarterly financials. I think
that's interesting. What do you think about this idea of like it should be the analysts rather than the companies giving that guidance?
So I just want to finish. You talked before about private equity. We've forgotten that we have 1,500 of unicorns out there. You have probably a larger number than the 30,000 of trapped PE companies that are sitting there in VCs. So you asked about a problem. There is this large cohort of companies that are looking for an exit. You also asked about valuations. Is it a problem? Well, it is if you have not come to terms with the fact that we had just gone through this massive tightening program that started in March of 22, which really has reset the cost of financing and a result of that reset valuations. And so companies have stayed private longer. Question is, has their growth slowed down? Is their exit multiple going to be the same as the entry multiple? I think we know that. And then we haven't talked yet about kind of the AI factor, which could be the AI tax. And what I mean by that is that every industry, every company is figuring out how do they address the AI challenge or AI opportunity. And today, the winners have yet to be defined. And so investors may be sitting on the sidelines somewhere trying to figure out which company is going to be disrupted. I think you bring this all together, and it does bring the question what is the right valuation? And I would put it out there. I've been doing this for 30 years, and IPOs are a milestone. They're not the destination. And so it is part of trying to balance, I would say, how do you create long-term compounded value versus short-term greed? You're not supposed to take the last dollar off the table at the time of IPO.
I think one point being made, though, is the volatility has increased. And with the earnings can come quite violent swings on those days. Now, there's many reasons why market volatility has increased, and more recently, correlations have also broken down. And we've had new areas. We have prediction markets opening up. We have new trading platforms. So there's a lot of things contributing to this. I think the markets will find a good way through it. But the volatility has increased, so that does create a little bit, if you're a CFO, the board, a chairman, does create concerns. Longer-term reporting may or may not help that. Obviously, all investors want transparency, due diligence, and that's the root of what we're really looking at.
Yeah, I'll just make a quick comment that it's not the quarterly versus semi-annual will be consideration, but it's largely what you do need to report. So right now, if you look at I completely agree with the idea that the quarterly cycle gets to be very challenging. As a public company, it's very hard to put something back in the bottle that you've already disclosed. So I think as we educate companies when they are going public, getting the right form of disclosures and KPIs that you are comfortable with I don't mean to be offensive, not what the banks are maybe telling you you have to do. You're the CEO, you're the manager, so live with that. So I think that, getting that education properly calibrated for companies about what they want to disclose, what they're comfortable disclosing, and then, you kind of get in a rhythm of how the market might react to that. But certainly the demands that have been put on companies, if you look at the disclosure, the risk factors in an S1, it's how many pages now? There's so many things out there that I think narrowing that would be very helpful.
Stephen, you have 20 seconds, and then I want to leave His Highness the option to a quick comment, closing remarks.
I think there is a very significant opportunity. The kingdom, obviously, before current events, had a demonstrated history of showing an exit protocol across a vast different spectrum. And I think that as volatility subsides, qualitatively, there is a portfolio of businesses that are ready to come to market, and markets are very efficient. It's providing that exit route.
Your Highness, last remark.
So I would just add two things. In discussion around exits, a big source of exits has historically been M&A. And actually, in many respects, M&A has been an even bigger source of exits than IPOs and listings. And I think one of the sources that is a bit worrying is that M&A has also decreased in the past year or 2 years as a potential source of increase, and whether this is a signal of something more problematic in terms of divergence around future expectations. The second is the emergence of platforms. Is an increasing number of platforms are now bridging this gap in terms of platforms for trading secondaries in fund units, securities, et cetera, and being able to think through these platforms, again, not in this binary approach of you are listed or you are not, and you offer continuous trading or not. Maybe we offer periodic trading, weekly trading, anything that is not continuous with fewer disclosure requirements to bridge this gap even more.
Thank you very much. And thank you to the whole panel.
Technology is racing geopolitics to define what comes next. Companies are being forced to rethink how they plan for the next decade, especially as 95% of generative AI enterprise initiatives fail to turn a profit. Yet investors, driven by a mania-like desire not to miss out on the biggest breakthroughs, are pouring unprecedented capital into artificial intelligence. The physical manifestation of AI in the form of robotics is emerging as central arena for high-stakes competition. In this global marathon, capital in motion is reshaping where AI technologies are funded, built, and scaled. The United States continues to anchor early-stage breakthroughs through venture networks, leading universities, and corporate R&D. Latin America represents one of AI's largest untapped opportunities, combining growing technical talent with expanding digital infrastructure. Asia is leveraging industrial scale. Europe is advancing applied research clusters. And the Gulf region is deploying sovereign capital to accelerate new platforms. Yet despite the momentum, the fundamental question remains: where will AI's real return on investment come from? And who stands to benefit the most?
AI is moving at extraordinary speed, but the power behind it is highly concentrated. So what's the role of government when the most important technology of the moment is being shaped faster than the state can respond? Please join me in welcoming to the stage Director Michael Kratsios and Dr. Fei-Fei Li.
Well, it's great to be here with you. I know we first started working together way back in 2017, 2018, and I think we've come a long way.
It's been a long time. We should talk about what's new, but Michael and I were saying backstage that this is a format That's very interesting. We'll just be interviewing each other. Yeah, so Michael, maybe we should start with you because I still remember meeting you in OSTP back in 2017, 2018, when the first Trump administration started talking about AI. I was still a Stanford professor, and at the beginning of our Human Centered AI Institute endeavor, and we came to White House to talk to you about it. What has changed?
Yeah, well, I think back then, I spent most of my time trying to convince everyone else at the White House to take artificial intelligence seriously. And today we sort of take it for granted that it's the front page story on every newspaper. It's what leads every broadcast every day. But the reality is, just a few short years ago, it was something that was still science fiction and still something that people didn't fully embrace. And a lot of credit to the president for signing the first ever executive order on artificial intelligence in 2019. And that set the stage where we essentially said, this is a technology that the United States must lead on, and kicked off a bunch of programs prioritizing research and development in AI, workforce development programs, our international engagement on the topic. And then ChatGPT happened, and we've been running ever since.
Yeah, so one thing that from a technology point of view is that, ChatGPT only happened about less than 4 years ago, November of 2022. Has that completely changed our national policy on AI?
It's put sort of front and center the desire and I think the responsibility on the sort of desire of American people and the responsibility on Congress and the executive branch to actually put forward one national framework for the country. And I think it's quite justified. The American people look to their government and say, look, we have this transformative technology in front of us. We have to be responsible policymakers and do our job to deliver kind of a national framework. We at the White House released our vision for that framework on Friday of last week and essentially challenged Congress to take up this framework and pass national legislation. And the core kind of overarching philosophy of the framework is that, as many of you know, many states around the United States are passing their own state-level AI rules. And in reality, sort of large technology companies may have an easy time being able to hire lots of lawyers and be able to comply. But if you're a young innovator or a startup, having to deal with sort of this broad patchwork of regulation all across the country is actually quite challenging. And our hope is that through one framework, we can provide the necessary regulatory clarity to so many of our innovators. And packaging with that are kind of the key themes that Americans care about. How do we protect our children in this era of AI? We need to provide tools to American parents so they can see what their children are doing online, what they have access to, what they don't, who's trying to communicate with them. There's lots of stuff in the framework around energy. How do we create a sort of permitting environment where we can continue to build out the necessary data centers while at the end of the day protecting American ratepayers from increases in electricity? There's a lot of work we talked about relating to copyright and kind of providing clarity that the outputs of models that cannot, if they use the sort of name, image, and likeness of anyone or of copyrighted material, that is illegal, and we need to protect American creators. So there's lots of facets in this, and I think, and what we're most proud of is it's the first sort of holistic AI framework we believe ever in the United States.
That's awesome. One of the things, Michael, you and I have worked on together is actually, as someone who has been in this whole America ecosystem of technology, I started my career in academia, have been a scientist and professor in, first Princeton and then Stanford University, but then went to Google as a chief scientist and Google Cloud AI, and now I'm an entrepreneur, founder, CEO of World Labs. One thing I really genuinely believe is incredibly unique and our almost we should call secret sauce, not so secret sauce of our society is our public-private entrepreneurial industrial ecosystem. And frankly, this is a fragile ecosystem. I remember I was working on the National AI Research Resource, the legislation. for years trying to work with the government on resourcing academia as well as incentivizing entrepreneurship in addition to the big tech companies' effort and investment in AI. What do you think, for me as an entrepreneur right now, we should be doing and how to collaborate with the public sector?
I think the first thing is we have to get the rules right, as I talked about. We need to create an environment where brilliant scientists and entrepreneurs are focused on their technology and building their business, not figuring out how to navigate a patchwork of AI regulations. I think the second thing, and this is where the government can play some role, is we talk a lot about exactly what you said, the unique innovation ecosystem in the United States. You have one part academia, one part private sector, and one part government that all kind of work in tandem. The federal government funds early stage basic research that ultimately is taken up by young entrepreneurs who then try to sort of commercialize that, and ultimately that sort of grows into a larger company. And this sort of passing the baton from one piece of the ecosystem to another. And the government is uniquely positioned as kind of being the convener for those folks. And it can find places where the private sector isn't necessarily best optimized or incentivized to provide the capital to work on some of these projects. And I think today that our posture on how the federal government invests in AI is very different than it was in 2017 or 2018 when we first prioritized it. Right now, the amount of capital that is going into AI R&D, for example, in the private sector is astronomical. And no matter what the government was able to contribute into it, it would almost be just like a drop in the ocean. So for us, we have to be nimble to be able to think about places where the private sector isn't doing as much. And a great example of that I think has come up in conversations here is this question of quantum computing. That's an area where you do see some private capital, but it's still very early stage. So the government can continue to fund that early research. But I think to me, one question that, you're the most brilliant person in this whole room right now. So I have to ask you about where you believe the future of this technology is going. There has been this incredible focus and unbelievable set of breakthroughs has happened in large language models, where we've essentially taken the totality of sort of the written language in the world, whether it's online or even sort of on paper if it's been converted to online, and trained these unbelievable models that I think everyone here uses to do things they couldn't imagine 3 or 4 years ago. But if you think about it, that is just written language. The world isn't just written language. There's so much more. I know you work on this. So when you vision ahead and think about where we're going, how do you see it playing beyond just the large language models of today?
Yeah, thanks for asking that. Actually, this is something that's really exciting. When ChatGPT came out, November 2022, as a researcher, I personally was both simultaneously surprised, but not surprised. Not surprised because we've been seeing this transformer of technology going before the public saw it. Surprised because I personally did not expect the kind of explosive reaction and later on use cases. In the meantime, I've been thinking, if you look at human intelligence, it pretty much is bucketed in two really broad areas. One is linguistic, language-based intelligence. And AI, when we try to think about have AGI arrived, right now we're thinking very much in that bucket. And depending on who you ask, we're pretty much there or not there, is that we have powerful language models now. But the second bucket is even more ancient, evolutionarily primordial capability that pretty much was the beginning of the entire animal intelligence, which is perception and interaction with the physical world, is how we see the world, how we understand it, how we reason from lifting an object to understanding the body language of my friend here and understanding what's going on, all the way to changing the environment, creating new environment, and building a civilization on top of this. And this is what I call spatial intelligence. This is a technology that, this is a capability that human creators use. This is a capability that every day we use it to cook breakfast, drive, play with our kids and walk our dogs. And if we have this, if machines also can have this capability, it can help human creators to superpower them. It can bring robots to the world. It can really superpower, from healthcare applications to manufacturing to education. So that's what I'm truly, truly excited by. It's the next frontier. It's beyond language, and I think we are going to start to see a race between private sector, between different parts of the world, between startups on this particular technology.
Do you think to fully leverage where we're going, it's a combination not only of the software itself, but a whole new generation of hardware breakthroughs that need to occur in order, that are also ultimately powered by these models? Is that fair to say?
Yes, actually, that's a really good point. What makes this harder than language actually has a lot to do with hardware. I know that most people, when they think about hardware for spatial intelligence, they immediately think about robots. You're not wrong. Robots is part of this story, but it's more than that. First of all, there's the sensors. If you look at language, why is it so much easier? Is because keyboards let us type. It has let us type for more than 100 years, and computer keyboards had led humanity to type and create that data on the internet in our servers for decades and decades, and that's a very easy form of sensing. Whereas collecting data from the physical world, from movements, from motion and interaction, is still at the beginning. So sensor itself is part of the next generation of hardware. Then the next thing is the robots. It's not just robots. It's also how we interact with the virtual world. I know that people I know we have been collectively holding our breath and haven't seen the breakthrough of, say, headsets, of glasses, the AR, VR, XR, but they will come. Technology will mature. And how to experience virtual world, virtual 3D world in a multiverse kind of way is part of the hardware breakthrough. And of course, last but not least, robots, right? Robots are sensors themselves, and they're actuators or movement makers that themselves, and that's still a emerging technology. So all this combined, both the software modeling side as well as hardware side, makes this super exciting, but it's also earlier than language models.
Well, many of you may have seen we had the first humanoid robot at the White House just this past week with the First Lady, which was.
I saw that. Do you remember more than 10 years ago that the Japanese government leaders would always walk on stage with a humanoid robot?
I do remember.
Remember the Honda robot?
Yes.
Yeah. So we have been on this for a while.
We have, yeah. I hope we can make that breakthrough. But I think for us as a U.S. government, as we view these progressions broadly in AI, one of our core focuses is on how we can share that technology with the world. There's great innovators like yourself. It's developing great American technology. We have the best models. We have the best chips. We have the best applications. We truly have the best AI stack in the world. And what we're trying to do very hard is to make sure that we share that with all of our allies and partners. We want the whole world to be able to leverage this great technology and deliver the benefits of AI for all of their people, no matter where you are. In July of last year, the president signed an executive order creating the American AI Export Program. And the whole thesis behind that is we want to share our best technology with the world. So if you're a government or a country out there that wants to bring it out of your people, if you want applications for your hospitals that leverage AI, if you want to power your governments by AI, we can help do that. And here in the audience, I think we have the head of the Export-Import Bank, for example, and Development Finance Corporations involved. And we want to leverage all of the financing capacities of the US government to support the export of this technology, make it as easy as possible to get people to use it. And just a fun little announcement we had actually in India at the AI conference last month was we launched something called the US Tech Corps. And this was actually the first new program of the US Peace Corps in decades. And the thesis behind it is today, the most powerful tool that you can give a government around the world to help them improve their country is actually help with technology. So in this new program at the Peace Corps, we're going to be bringing tech-savvy entrepreneurs or tech-savvy folks as volunteers into Peace Corps and send them out into the world to help actually do that last-mile adoption of the AI that we're exporting. So we're excited, and I think as you guys think about it in your community, I mean, do you see that there's this demand of the same opportunity we think is out there for AI adoption?
Oh, absolutely. First of all, I think the opportunities of AI is really real. I think it's been, from where I stand, it's been a dream of 70, 80 years of several generations of computer scientists. Really, this dream finally coming true. I entered the field in the beginning of the century, thinking it's just a personal niche curiosity, and just seeing that even my own technology bringing this modern AI revolution to life is such an honor, to be honest, and a sense of responsibility. And I do think, Michael, that given the time, one last topic I really want to hear from you, and I think it's really important for this audience, is this tension between the opportunity and the change, the anxiety for change. I personally think, I don't know if you can say this, I'm not a government official, so I can say, I personally think the rhetorics of AI is too extreme right now. It's either total doomerism, all jobs replaced, and killer robots and all those, or total utopian, as if there's no side effect of any change of technology, and they swing the public vibe as the culture. They actually have an impact on even policy making. Yeah. Whereas as a technologist, I know with my total faith, this technology can empower human creators, can empower productivity, can help elderlies and students. But in the meantime, we are going to face shifting job landscape. So how do we together, me helping you guys and also you guys telling us what you need to help our public America navigate this so we have hope, but also have a sense of responsibility?
No, I think you're right. And our path forward, we believe there is a middle ground where there are genuine real concerns that Americans have, and we need to address those. But we also need to create an environment where the U.S. will continue to lead in this technology, and the benefits that's ultimately going to be afforded are ones that the U.S. is able to absorb first. And in our case, the framework I talked about at the beginning of our discussion tries to do just that. American parents are concerned about what their children are doing online. So we should pass comprehensive legislation that allows them to have the right controls over what their children are doing. Americans are justifiably concerned about rising energy prices. And there is a pathway forward where you can ensure that any data center that's being built is required to build, bring, or buy their own electricity. And that actually protects American communities. And American creators that are seeing this technology sort of take hold, they justifiably have some questions. How can I continue to be incentivized to do all the great things I've been doing my whole life, creating music, making movies, writing books, and still believe that I'll have control over that asset? And I think that's, again, a part of the framework. So to me, there is a middle ground, but it's something that we need to do more discussions like this to share that, because I think Americans want to see the benefits, but also I think they're asking important right questions for government.
The middle ground is the hardest path, but it's the most hopeful path.
Absolutely. Thank you so much.
Thank you, Michael.
Thank you very much, Dr. Lee and Director Kratsios, for such a fantastic conversation. Our next guest is Yi-Shun Hung, the CEO of State Street Investment Management, who's here to discuss how the asset management industry is being transformed. Please welcome her. Yi-Shun, welcome. I want to start with how the industry is changing. State Street pioneered the ETF, which seems amazing, back in the 1990s with SPY. Since then, there's been this explosion of private market investing. What is the next big trend that is going to change the industry?
You know, I think the pace of change has been accelerating, as we've been hearing about. And when I think back to the 3+ years ago that I joined State Street Investment Management, our conversations with clients was about the macro environment, different kind of oil shock, but also it was mostly focused around performance. I would say fast forward now 3 years, we're now closing in on $6 trillion in total assets, but the conversation is much more about promise of our size and scale. How do we take that and deliver much better tracking error, lower fees, ability to absorb the complexity of our clients? And so the bar, I think, in many ways have risen, but in a very good way. And what we're seeing is the use of ETFs has grown dramatically. Record years in last year and the year before, and it looks like today we're on pace to create yet another record year in terms of flows. And it's created the opportunity to start to bring really innovative exposures inside of ETFs, and that's one of the things that we've been busy doing. You talked about S&P 500. We delivered gold inside an ETF 20 years ago. And we partnered with firms like Blackstone to bring bank loans inside of ETFs, Apollo to bring investment-grade private credit, and firms like Bridgewater to bring their all-weather strategy to everyday investors.
So does the continued expansion of ETFs mean an increasing expansion of passive investing? Or actually, are we going to see more and more active ETFs emerge? What's actually going to happen in this balance? Because obviously you can't have the whole market passive, because then no one sets the price. So how does that work?
That's right. So I do think that the growth of index and passive continues. And if you look at flows over the last couple of years, and frankly, even in the month of March, the amount that's going into passive has just continued to grow. But to think that passive is sort of a buy it and hold it is not really the right answer. In large part, we see our clients thinking about dynamic asset allocation and using these building blocks as either a core exposure or to express their views, whether it's a sector tilt or hedging or providing tactical asset allocation. So it's a combination of very active views at the top, leveraging these building blocks, and then using their risk budget for private markets exposure or other areas where they see greater dispersion of returns.
And what are you seeing at the moment in terms of if people are sort of using passive to reflect their views on what's happening in the world? What are you seeing in the last few days? You know, we've got obviously a big question mark hanging over markets with the energy prices and the impact of the war in Iran. You know, how are people trading this right now?
Yeah. So I would say the markets today seem to be pricing in about a 50% likelihood that we'll have a ceasefire by the end of April. It grows to something like 2/3 by the end of May. And the concern, obviously, is with elevated oil prices, what does that do to inflation? And then ultimately, what is the path of the Fed in terms of rate cuts and other central banks around the world? Now, there is the other 50% that is concerned about this being an extended conflict, in which case then we're talking about likely economic downturn and the potential for more of a stagflationary environment, because back in 2022, when we had the oil shock, labor was in a much stronger position. Demand outstripped supply. Today, it's just the reverse. And so, You know, you could say it's 50-50, but then given where we sit, and State Street is one of the largest custody banks in the world, about 15% of the world's volume comes through our doors. And with our SPDR ETF franchise, we get a firsthand view of exactly what our investors doing. And it's been a very market shift already in the first quarter. In the first 2 months of the year, we saw basically an even distribution allocation to US and non-US. Equities outpaced fixed income on a ratio of 2 to 1. We obviously had a pause when the conflict started, and then March has been roaring back. And the amount
So
of
when you say
flows-
roaring back, people are buying the dip. They're
Risk
seeing an
on.
opportunity.
Absolutely.
Okay.
And it's moving back again into the US, a little bit away from the Mag 7, so it's more diversified. And equities are basically outpacing fixed income at a ratio of 3 to 1. Passive is very significant. And of course, a lot of the sector ETFs are doing quite well to try to reflect where people see opportunities or want to really protect their positions.
So when people are, excuse me, when people are taking advantage of these sell-offs to buy in, which sounds like what you're saying, which industries are particularly benefiting during those returns?
Yeah, in particular, I'd say energy, for obvious reasons. For those that are concerned about what the future may hold in terms of, reduced growth, it's a greater focus on some of the defensive sectors like utilities or consumer staples. We also see continued elevation of cash and sort of the short end of the curve. And I think in large part because the longer end is more at risk. Because if we have extended periods of inflation, likelihood of a steeper yield curve, same thing is true if we see a stagflationary environment. But yet, if growth really slows down, it probably goes the other way. So there's a great deal of uncertainty in the fixed income market.
Okay. So let's talk a little bit about AI, big topic we've just heard about as well. How's this affecting the business and broadly? I mean, is it changing the investment process, the costs, the personalization, the compliance? I mean, where's it actually hitting right now?
There's two key areas I think that AI is going to impact the asset management industry. One is really this notion of straight-through processing. When we think about the investment engine, whether that is rebalancing or trade execution, compliance, client reporting, all of those really lend itself tremendously to AI. Same thing, obviously, with software.
And is that about taking out cost or increasing the speed or both?
It is both.
Right.
But I do think it reshapes sort of our economics and the amount of operating leverage these businesses will have. Now, the expectation is, of course, I think, that our clients are going to want us to take those savings and convey that to them in terms of a value proposition. If you then add on to it tokenization, that will also take out additional costs because everything that happens post-trade in an atomic settlement scenario goes away. So that is even further cost savings. But the exciting part is AI enables mass customization at scale at significantly lower costs. And then if you think about tokenization, we're already seeing many asset managers, ourselves included, coming to market with tokenized money market funds. In our case, we're in the process of launching a new one with allocation to stable coins so that we can provide 24/7 liquidity. But following on that will be funds and ETFs being tokenized, and ultimately hard assets and private assets. And that will only increase the addressable investable universe for investors, and it will bring meaningfully more liquidity to the marketplace. And all of this will benefit a larger swath of investors. So it's a very challenging time because I think we've heard a lot of panelists speak about it's very difficult right now to assess which companies, which sectors are actually going to be winners and losers. We think in large part being really diversified and maybe index-oriented is the right way to think about that. But ultimately, those companies that are able to harness these technologies and create a sustainable advantage and compound value over time are the ones that are going to survive. So not all will, but I think many will.
And the industry has been very consolidated around a few names over the last few years. Will this technology change and the explosion of AI allow smaller companies to prosper, or will it accelerate that trend towards bigger companies?
It's a very good question. I think at any point that you have sort of a disruption, if you will, or disruptive technologies, which is what we have, I do think the larger firms are better positioned if they really approach this with intent, with focus around those areas that generate value. But at the same time, I do think those companies that have that mindset of moving towards this future vision have the potential also to be very meaningful in the path ahead. And I suspect that investors today are not only thinking about where they're allocating, but which partners they're going to allocate with, and assessing which companies, just like we do at any company in any sector, how adaptable and forward-focused is management.
And technology is obviously used very heavily in investing already in decision-making at different firms. I mean, are we going to get to the point where asset managers do start to get replaced by technology? I mean, how's that process going to play out?
You know, it's a very good question, and I've given a great deal of thought to this. I think the most important elements that asset managers provide is fiduciary accountability. I don't think that goes away, nor do I think governance, trust, brand.
But I mean, in terms of the decision-making,
matters.
the actual investment decision-making.
I think in terms of, there's two parts to decision-making, right? There is what is a client's objectives and constraints. I think that is human judgment needed. But the pure execution of rebalancing, portfolio implementation, I think that becomes replaced by machines.
Right. And then we have time for one more question, just to finish on AI. Obviously, it's been a huge investing theme over the last year or two. Companies have got enormous valuations, huge amounts of capital going towards that. What is your perspective and the firm's perspective in terms of whether that's become too concentrated, whether that's gone too far, whether there is a danger of a correction in that sort of AI rush?
Yeah. So what we have seen over the last 5 years is that many of our institutional clients have continued to increase their exposure to private markets. We heard 2 panels ago that 85% of companies here in the U.S. With 100 million or more of revenue are basically private today. So there's enormous value creation still in the private markets. But increasingly, not surprisingly, that exposure has been towards energy infrastructure, digital technologies, and data centers is where a lot of that has happened. Now, of course, we've had some hiccups in the private credit market. And so, you know, over time, this will ebb and flow, but the direction seems very apparent.
Thank you very much indeed. Thanks for a great conversation. Please welcome next Maurice Dubois to the stage.
Thank you. Good morning, everyone. Honored to have Josh Harris here, founder of Apollo, a storied career as an investor, successful owner of the Washington Commanders, who are up, I think, $1 billion over the last couple of years. That's not bad. Not a bad deal. Good to be a sports owner.
Sports are great. Good place to be in a volatile world.
Yeah. Let's talk markets, shall we? And the economy as a whole, worldwide. What do you make of the way markets have reacted to the situation in the Gulf thus far, including yesterday, which was a little rough?
Yeah, so first of all, when you're living in what looks like a more volatile period, you have to be humble. You have to realize that, events are unfolding and you don't really know where it's going to go. And you have to also, just saying up front that, unfortunately, we think every day about, the innocent lives and the troops that are fighting right now. But when you talk about markets today, I think that they've been a little bit complacent. You look at, the S&P off, mid-single digit, from its highs, credit spreads off, 19, 20 bips, investment grade. high yield spreads off 50 bips. I mean, they're not this sort of elevated level of volatility between obviously some of the tensions going on in the world, geopolitically, obviously AI and what it's going to do to various industries. Obviously, some of the issues we've had in credit and private credit, markets aren't really pricing that in my opinion, in a way that makes sense. And so you have to watch that. And this feels like the early, and I'm seeing some early signs, we're seeing some early signs of the beginning of capital flows, kind of pulling back, whether it be the banks pulling back, whether it be retail pulling back, and that's causing other ripples. But we haven't yet seen it priced into the markets. And so we're beginning to see the opportunities that you get when you're in a situation like this, if you have the right capital base.
You expected more of a sell-off, is what I think I hear you saying.
Yeah, I'm just saying that there's a very elevated level of volatility, and I don't think that we've reflected that in the discount rate. And as I said, you're starting to see, whether it be the announcement out of Barclays or some of the banks saying, okay, we're going to be a little more careful lending to some of these vehicles. Whether it be the retail outflows that have occurred and that are hitting private credit now, and the volatility we could see with energy prices. I don't think enough of it is priced into the markets right now. And so, we have to be cautious, but we're starting to see opportunities that aren't necessarily reflected in the broad-based indexes, such as we took, there was a hung bridge situation. We stepped up with our platform and helped out with that. One of the private credit players had to sell some stuff because, they were under pressure from retail outflows. They sold it at their mark. But so the broad, things that you see out there don't reflect any of this, but we're starting to see some opportunities show up that are unique that we think could signal that, okay, there's some cracks.
Could you talk about some of those opportunities as we speak?
Sure.
Yeah.
Yeah, so I would say, first of all, you look at, and again, Electronic Arts, big, massive buyout, $25 billion financing. Markets absorbed it great, took it down, right? SFR plus 350, great pricing. So most of everything is going on, but I'd say for us, example would be, a $3 or $4 billion buyout. Banks couldn't get it financed. We stepped up with our platform. We have an integrated platform, and we bought a bunch of it, helped out, took it off the bank's balance sheets. I obviously shouldn't say the name of it. And as I said, one of the big players that you're reading about that has retail outflows, we had a series of names that overlap with their names. And they needed capital, right? And we said, look, we'll buy them below your marks. They said, no, we're not going to do that. We bought them at their marks, but we were able to add high quality positions to our portfolio that we wanted more of. And so that's kind of what you have to do. In today's environment, you're at the beginning of something that could be interesting. So you have to go very slow. You have to be very high quality. And you have to be, in the markets and have, we have, 60% unspent capital. Right? We're fortunate to be a young firm, no issues, and we have yet to see a default in private credit in our book, which is multiple billions. But there are others that are less fortunate. You just have to be there and be, kind of opportunity, be there when there's value buys to be had. And that's the kind of stuff we're seeing in the markets. And we're also seeing companies and private equity transactions start to transact at lower prices. So, we're buying at about 7 times EBITDA versus 10 or 11. And so all those things are kind of starting to happen right now. And I can't tell you where the world goes. I can just tell you that there's a lot more volatility than we've experienced over the past 5, 10 years. And the monetary authorities, the Fed and others, they're in a they're in a harder position.
For those who say this is the beginning of a recession, you don't have a crystal ball, no one can really predict this, but what does it feel like to you?
Yeah, I think that if energy prices stay at a sustained, I think right now the economy is relatively strong in terms of the big beautiful bill, in terms of a lot of the AI spending, the data center spending, the infrastructure spending. And so I think that the economy is strong. I think that for the economy to weaken, right, you would need to see a pretty high sustained level of energy prices. And so really, I'd be focused on that, and how the unfortunate conflict that's playing out, keeps unfolding, right? And obviously, we're going to hear a lot about that from, people that are much more informed than I am. But thinking about that and having a view of where that heads, that gives you a little bit of a way to think about it. I'd say, that's in the U.S. In Europe, it's harder. Europe is skating, at very slow growth, right? And they're very energy dependent, so that's probably easy, for them, in Europe, it's probably, a little bit maybe easier, or they're closer to something like that.
What's an investment idea that you feel confident about over the next 5 years, regardless of the situation in the Gulf?
Yeah, so I would say sports. I mean, I hate to talk my own book here, but I really think that, so live content, so you think about everything that's going on, you think about AI and what it can do to various businesses. And the reality is that we all have to be humble. It's pretty unpredictable. And so live content, and you think about social media and the breakdown of community, right? And live content, live entertainment, experiential events. These are massively growing sectors, and people can't get enough of it. And so you've got that mega trend, plus you have the globalization of media content. And AI actually, the NBA just signed, as an example, signed a $75 billion media deal. One of their partners is Amazon. We're all going to be able to watch sports and see. If we like gaming, it'll be gamified. If we like betting, and I know not everyone in this audience likes that, you'll watch it that way. If you like statistics, you'll watch it that way. If you want slow motion or a focus on a particular player in whatever sport, so the way you watch it will be enhanced greatly. And then you have obviously the advent of stadiums and arenas becoming massive things in cities, and people wanting to work around them and live around them and go to restaurants around them. So that's an area where I think that that area will elevate. Even though the volatility, everything, it's be very hard to predict what does well. But I think the sort of experiential retail, live entertainment, live content.
Yeah, we should also point out you're a co-owner of the Philadelphia 76ers and the NHL team in the New York area, the Devils.
New Jersey Devils, and then a Premier League franchise called Crystal Palace.
Absolutely. What are people ignoring mostly? Where are you focused on that people are ignoring in terms of investment?
Yeah, so we're focused on the upper middle market. So if you think about middle and upper middle market, so you think about the markets today, right? And the top 10 stocks in the S&P 500 are 32% of that index. The bottom 400 stocks are less than 10% of the index. And then you have thousands of companies below that. And so where the equity markets are going is they don't really care about anything other than the biggest companies, the NVIDIAs, the Metas, the Apples, or incredibly fast-growing companies. And so where we're focused is the smaller companies that really are being left behind by the market structure that exists. So that's one area. And you know, look, we're able to buy, you know, mid-teens cash flow yields. Another thing to do is to look at the big trends like the AI trend and to play the derivatives or sports and play the derivatives of those trends. And so, for example, we bought this company, Archkey, a electrical contracting business. They provide all the electrification for data centers and for stadiums. And so you're able to like draft behind these big growth areas. In sports, we set up you know, a company with George Pine called Bruin to buy the picks and shovels behind sports companies, whether it be catering, whether it be people that fix stadiums or any number of things. So the picks and shovels way of playing these global growth trends. So we don't have to pay 100 times EBITDA, we pay 8 times EBITDA, right? And so that's kind of, and then I'd say honestly, like private credit, right? Unfortunately, when you're reading lots of headlines, I don't think private credit has outperformed public credit for many, many years. I don't think that's going away, but I think that it's become more of a company-specific, industry-specific, you know, credit picker market, right? And so I think when you're reading headlines about retail exiting, about banks exiting, that's when the spreads widen, right? And so we're still seeing the ability to make 10% returns, literally, net, on companies where we're the top third of the capital structure. So there's 65% equity below where we are, and there's 35% debt. And our debt is very safe, very secure, senior with covenants. And we earn 10%, and that compares to the high yield market where you earn 7, or the levered loan market with 7 to 8. And so you're getting that 200-300 basis point spread pickup for something that is very secure and way up in the capital structure. And so all those things are good things, and then obviously there's some others, but those would be the ones that I would point out.
Do you feel like you're quote unquote insulated against the disruption of AI in terms of building your portfolio?
Yeah, so I think, again, you have to be humble. I'd say that when we look at AI, you know, every week something new comes out. So we were all, no one was talking about Claude. All of a sudden, Claude comes out. Google just came out with something that is obviously going to impact substantially enterprise storage. And so, you know, what you have to do is think about things that are going to be as insulated as possible. We're not walking away from software investing. If you have software, so you have to stay core to your principles. You have to buy well. You have to buy value. And you have to come up with things that, you know, you really think about that are protected. So, for example, if a software company has proprietary information that's not on the internet, if it's embedded in a corporate structure that's not on the internet, if it's regulated, there's ways to play software that aren't going to be affected by AI, but you just have to be a little more careful, a little more deep in your diligence, and a little more nuanced. But look, I don't think any of us know where this is going. There's, if you look at the effects on the economy today, it's just beginning, but the projections are that it's going to add, you know, a lot of value to the economy, but also cause a lot of disruption. And so I think you just need to be cautious, stay true to your principles, and really think about those sectors that are the most insulated.
Excellent insight. Josh Harris, thank you so much for giving us the stop sign.
Nice. Thank you very much, Maurice and Josh, for that great conversation. Next up, we are going to look at the aerospace cycle. And is this the next billion-dollar or even trillion-dollar super cycle? So please welcome my new guests to the stage. Sabrina Gonzalez-Petersky, professor at the Peterson Institute for Theoretical Physics, Eric Martel, president and CEO of Bombardier, and Fateh Osman, CEO and owner of Sierra Nevada Corporation.
Thank you.
Welcome, everybody. Eric, I'm going to start with you.
Okay.
You took over Bombardier. Many of you will know Bombardier in the audience, the maker of private jets. You took over during COVID, during a tough time, and it's been this amazing turnaround and huge growth since then. Are we now in a super cycle for aerospace broadly that's going to kind of get rid of the cycles we've seen in the past and is now sort of set in for the next decade or so?
Yeah. I think we are, and we do clearly foresee that this cycle is going to continue going on for a while, and for multiple reasons. First of all, the wealth creation is quite significant. If you look at people that have, access to $30 million, they will grow by about 6% per year over the next 5 years easily. So that's another 30% more people that can become customer for a private jet.
So what's the threshold for a customer, roughly? When do people start thinking about a private jet?
I think at 30 million, and sometimes it could be earlier, it could be later, but people, they may not own their own plane, but they could start flying maybe with fleet operator. Think of NetJet, think of VistaJet, think of these guys. So I think it's been, and if you just take the fleet operator, their growth since 2019 is by more than 60% right now. So they're flying 60% more hours because people are adapting flying private, for all kind of reasons. We all know how difficult it is to get through security, get through the airport, especially these days. We all know that, it's a productivity tool. You could do things that you will not be able to do if you fly commercial. I'll give you my own example. Last week, I left North America to go to Europe. I did 4 countries. I was back in North America Thursday night and went to the office Friday morning. I would have never been able to do that, flying commercial. I would probably not even be here yet. So I think it's a productivity tool. People adapt it. It's so easy. You leave when you can, and you decide on which hours and how you fly. So I think we could see moving forward that growth continuing quite significantly for all the reasons I just mentioned.
And at times of disruption, like we're seeing now in the Gulf with the hubs in the Gulf, does this just accentuate people's desire for this?
Yeah. I think, the first experience was COVID. COVID was an accelerator for business aviation. A lot of people, wanted to travel still, and they adopted private aviation. And it's interesting to see that things that are happening right now in the Middle East could be an accelerator also, because, airports are more difficult for all kind of reason. People feel security is also another thing. You have a lot of board these days that are asking their executive to fly private. So for all these conditions, that could be another accelerator for us.
So we want to spend most of this session talking about the defense side of aerospace, given who's on the panel. Just to segue to that, can you talk a little bit about how you've seen that as an opportunity and how you've gone into that with FATF?
But I think Fadi and I are collaborating already on a few programs, but there was a clear demand. First of all, the demand is significant. We all know that right now, every single country, or pretty much every single country, are looking to increase their spending in the military side. And here has come a platform. We do have the Global, we do have the Challenger platform that, have unique capability. And we used to have big airplane, to do mission like surveillance mission or that type of mission, AEW, surveillance or communication. We used to have, significant and sizable airplane to do those missions. But because of the equipment, of radar and communication becoming smaller and smaller, there's no need to have those big planes anymore. So people are coming to see business jet that are used primarily to do private aviation. But it's interesting because our airplanes are very often offering more capability, more performance. Our jet can fly sometime up to 51,000 feet. They can fly, our Global 8000 can fly at 0.95 Mach, also giving speed also. And we're flexible, we're agile, we can fit these equipment into our plane. So, and of course, for the defense, for the country, you know, it's a reduction in cost, so it costs less, the acquisition cost is lower, but also the operation cost after is much lower, and you have even more capability. So it becomes a bit of a no-brainer right now for a lot of the military to adapt to private jet being modified, you know, with, you know, a company like Nevada Corporation.
So further, if you look at the, you know, we've had this war in Ukraine that's gone on for now many years. We're seeing what's happening in Iran, particularly around drones and that technology. How is that changing how innovation and investment is happening in defense on the aerospace side?
Well, a lot is changing because, first of all, I'm looking at this title, Aerospace Next $1 Billion. It's really a $1 trillion super cycle. So, and that's between the commercial and defense lines are all converging. And given the geopolitical challenges taking place and the technological revolutions coming into place, like AI and machine learning and robotics, automation, it's really a very different place. I've never seen it for, I mean, many decades like this, everything coming together at once. So there's a super cycle taking place. And as Eric was saying, one thing you haven't said is it's very cost effective using commercial platforms for sometimes defense reasons. So we call it dual use. And this current administration is really focusing on a lot more dual use. How can I bring commercial assets that is a lot more affordable? He has service centers around the world, so we don't have to have, you know, custom-made service centers. So there are a lot of new efforts taking place. But and other things that Ukraine, for instance, the world have changed, the threats have changed. First of all, the United States, we have a peer competitor now that we never had. So the world has never been like this. So it's, in a way, it's a dangerous times to, if you think from, for instance, from the nuclear perspective, both Russia and China rising nuclear power, we have not seen this before. So it's not a good, Iranian effort is another place. So what we have seen is things like drone warfare is a new construct. So you don't need these expensive bombers sitting there. Exquisite assets is really being taken over by these small, inexpensive, cheap drones. So it's very asymmetrical change that taking place. And on top of this, I will mention space. Space is the ultimate frontier. I think there's a lot more growth and excitement and both commercial possibilities as well as threats developing in space. I mean, there is publicly acknowledged now that there's warfare going on in space. There are people use terms like dogfighting in space, which never been talked and mentioned before. So space is both a dangerous place and an exciting place. I mean, you talk about $1 trillion. We are about to see a SpaceX IPO, $1 trillion plus. So the market is really commercial space, developing you know, organs in space, 3D printing of, or the AI data centers in space. So when you combine it all together, air and space together, there's a very exciting cycle taking place. But at the same time, we should be aware of the threats that are taking place because this order can change very quickly. Again, it's publicly acknowledged that there could be, people are worried about having, you know, nuclear electromagnetic pulses, things like that in space can shut down the entire communications. What most average person doesn't understand is if something happens to space, I mean, 90% of our financial transactions, navigation, there's so many things that coming through space that it's transparent to an average person. So it's a very, again, I'm very hopeful about the future. At the same time, we have to be very careful about how dangerous it could be. That's why I think that you see the defense spending in the United States going up to $1.5 trillion. The record numbers you see in Europe, that famous 5% GDP, countries are climbing up to that amount. And in the US, we are not even there yet. $1.5 trillion is not going to get you there either. But so there is that defense spending taking place. But commercial also, as Eric mentioned, there's so much potential in aerospace that airplanes are getting better, cheaper, more effective. So I'm very excited about the next super cycle.
We'll come back to space in a minute. Sabrina, I just want to come to you and talk a little bit about AI. You are in a slightly different field in terms of you are kind of cutting edge theoretical physics as a researcher, so it's a slightly different thing. But can you talk about sort of when we go into AI, how that is being used in your world to really push new advances?
Absolutely, yeah. I like to think it's the same confusion of like how slightly different like high energy theoretical physics is from aerospace is the reason I'm actually in this field. So basically, the closest thing I have to I guess private aviation and private aviation related to defense was being a kid flying in a Cessna 150 over various like nuclear power plants with a Geiger counter to try to like do a science experiment back in elementary school. You know, it's like, it was like the coal power plants that were the worst. So it was very much like, oh, like these little like airplanes can go and like see if someone is doing something bad. It was like the pitch for the thing as a 12-year-old or something, pretty young. But my heroes were these aerospace guys, and there's a lot of just things you can do, like you can put together a kit plane or things like that, where it's just like, oh, cool, I have a product. And then when I started doing internships, I was kind of disillusioned by the fact that, like, what if the innovations are coming from outside of the field you're studying for? And when you're an executive in a company, you can always, like, you know, integrate different subfields and bring that technology together. But when you're one researcher, what do you want to bet your time on? And so I went the opposite extreme, which is like theoretical physics, because I thought, well, you know, string theory seems like less hype than quantum. I don't know. It should be a joke. But basically, the thing that I find fun now, and it's a very exciting time, is that, like, at the level of like the cost it would take to like bet that like we need to bring, like, say, computer scientists and these researchers together. Like, it's not clear that you can make that case if you don't know what's going to come from it and you can't point to a precedent. But we really are, like, democratizing this kind of, like, ability to R&D just a little, like I can code something for, like, data science for my field or something like that myself and then see it work and try to scale. So I'm super excited for the fact that you have this kind of lower cost R&D that, like, any individual researcher can do. And then I think that the most exciting thing when it comes to aerospace isn't the physics that's like at the very like short distance fundamental things where it's mostly like kind of like semantic search and whatnot that I think is going to push the boundary there. But the extent to which like somehow the fact that the laws of nature are like highly compressed probably is why these like numerics work super well when you're trying to change how you're actually like doing numerical like fluid dynamics computation. So it's a very fun time.
And how do you, I mean, how's the world change when you think about not just pushing the boundaries of research, but the interaction with the private sector and government for research? Has that shifted?
So I think that Canada is an interesting place because I don't think that somebody would give $100 million after they founded BlackBerry to create a theoretical physics institute betting on blue sky research. And it was this fascinating, really like excellent like private-public partnership where it's like I never understood the kind of giving pledge attitude, like why are you just like promising to give your money away? But if you can really leverage that with like government partnerships, it's amazing what you can do when you have that kind of entrepreneurial drive, plus you have that stability of that large scale funding. I think the thing as a researcher that like, it's unclear how do you make, like, it seems like there's opportunities, but they don't know as one person how to do it, is really seeing like how to get an innovation pipeline where it's not just say industry, seeing these experts in academia and coming out. The thing that I would like really love to push towards was like how can it be the different disciplines that are the experts really bringing in the entrepreneurs as consultants and trying to see how do we find the tech in it. Because I think there's this kind of bias that like academics just want to teach or they want to the research and they don't want to have applications. But it's more like sometimes you don't see it because you're not trained to think of like the business case, for example.
Right.
So I hope that there's just such a big disruption that we can all like learn from each other.
Thank you. Fatih, what are you seeing in terms of the relationship between sort of government and business and academia? Obviously, we now live in a world, and we saw this, or we're seeing this in Ukraine, of constant iteration, you know, the need to be constantly updating strategies and technologies in drones, for example. Has that changed the way that you interact with government in terms of contract structures? The relationship has to be not, you know, I'm going to buy 100 drones for 5 years' time, but I want to have a constant conversation about what those are actually going to look like and how you can supply them when we need them. So can you talk a little bit about how this has shifted?
Yeah, I think, first of all, what you said about academia and the research is so critical to the future of aerospace, and there are so many areas. To give one example quickly is we have this one major contract, which is the first time called Doomsday's plane, that 747-800 airplane, and we are working that in collaboration with the University of Wichita. So all these research centers are very critical to digital engineering and leveraging that academia and the industry and the government all together. And some of it is public-private partnerships, what have you. But in terms of drone warfare...
Well, hang on. Before you go on, do you want to just say what the Doomsday plane is? I think people might be interested in what that project actually does.
The airplane?
The Doomsday plane, yeah.
Yeah, I mean, it's a terrible name. But if there was a nuclear war, hopefully we'll never see one, but the last resort is you have to have a command and control center. You have to have the continuity of the government. I mean, you can think of it as a flying White House or Pentagon, that all the decision makers are flying in the air 24/7. There's only a handful of these airplanes. It's like an Air Force One, except it is a lot more radiation hardened and proof against all the different things. So the worst thing happened in the world. There's a movie called House of Dynamites. If you haven't seen it, Netflix movie, I recommend it. It's scary, but it's real. The government, the Secretary of War talks about that and everybody else. So there could be those scenarios. Unlikely, but you have to be prepared for worst case scenarios. So it's another example of commercial airplane, 747, being adapted to the government use, military use, that is going to be very critical for the future of humanity, I will say. You have to have, and what's interesting about defense is really deterrence. You know, you heard about the term peace from strength. So to deter, you have to be prepared. You have to be, I mean, it doesn't all have to be offensive either, but you have to have all the right systems in place, because we don't realize how fragile the world balance is. I mean, you see it Iran and Ukraine, but it could get a lot worse.
So, sorry, I put you on a tangent there. So go back to drones. So how's this changing the nature of warfare, what we're seeing happen in Ukraine?
Drone warfare?
Yeah.
Well, it changes significantly. I mean, right now, you talk about not just a few drones coming in, but swarming of drones, and then you throw an AI to it, automation. So they're going to be self-flying. I mean, imagine clouds of drones coming here, and how are you going to shoot them down? Do you have enough weapons and counter UAS systems to deal with it? And I would not limit drones to just the airborne drones that we hear in the news about, Iranian drones coming in, what have you. There is surface, unmanned surface vehicles, there's underwater surface vehicles. So there's a whole host of unmanned drone platforms that are changing the warfare the way it was done. And even in space, you know, they get smaller, cheaper, and the barriers to entry is much lower. So for any rogue nation or terrorist, what have you, you have to, they have tools that they never had before. Yeah. So it's really important for us to, I mean, there's a organization formed inside the Pentagon right now, counter UAS systems. The government is all trying to bring all services together, because every Army, Navy, Air Force, everybody's trying to do their own anti-drone. There are major events, World Cup and Olympics coming in, so we are trying to prepare for putting these, we all heard about the Golden Dome, the big dome around the United States, but there's also mini Golden Domes to protect cities, critical infrastructures, and so that is a new area that's evolving very, very rapidly, and you can't have expensive, you know, Patriot missiles or fighter airplanes.
And are we going to have, and I'm going to come to you, Eric, on this as well, are we going to have much more autonomous, are we going to end up with autonomous decision-making of drones rather than operators? I mean, how far away are we from that happening?
Well, that's, I mean, you just heard the OSTP Mike Kratsios talking about how do you control AI. The ethics of AI is a whole different story that we have to be extremely careful, because you can't, I mean, right now, at the end of the day, the final decision in terms of lethal consequence is still the operator. It has to go, the government, they have to push the button. I mean, we all heard about the Predators, Reaper drones during the Iraq, Afghanistan wars to sitting from Nevada, somebody monitoring, pushing the button. Now that's changed. It's not all the way changed, but you get smaller things, just loitering munitions. In Ukraine is happening right now. I mean, you got drones swarming over and they see a tank, they decide it's a tank, they go for it. There is almost no operator. Sometimes there's no operator. So I'm concerned about the overall ethical consequence of what could happen, because as the machines get smarter, AI is getting better, we are trusted more and more, but
So it's going to slowly go. And are we ever going to see your jets without a pilot?
Yeah. No, but I think this is clearly something that is going to become probably starting with the military first, to have unmanned airplane. I think eventually we'll see it in commercial. It's a bit more complicated also to achieve because of certification and, of course, and for safety reasons that are very obvious. But I think today the technology is there. So it's a question of probably be on the commercial side being more comfortable with it and get the authorization to do that. But there's so many possibility today that we could do better job, using AI to better integrate system platform. You could see easily an F-35 flying with drones on the side, called wingman that they usually call them, that can fly much faster. So we'll need to go also to another generation of drone that needs to have the aerospace capability to fly faster, follow these type of equipment, carry load also, which those are things we could at Bombardier, of course, because of our knowledge, contribute. But things are developing so fast right now. I have thousands of engineers at Bombardier and PhDs and people that do all kind of research to develop better technology. But AI gives us also the possibility, to your point, to develop faster, to go to the solution much easier, to simulate also, instead of building a rig, which takes months and testing it, we can do it virtually more and more. So I think we're investing significantly, into those tools, first of all, that will bring us new technology and access to those new technology much faster than they've never done before.
And you've moved from commercial to defense. Are you going to end up in space like Fatih, that actually this all links together at some point?
Not in the plan right now, but we'll see, what comes up. It's always a question. We need to understand what our core skills are and our core contribution. We think we can definitely contribute to drones so that they carry more load again and fly faster. Space is something we haven't done, but eventually we may consider if we can contribute, with the knowledge we have.
Brilliant. Thank you all very much indeed.
Thank you so much. Thank you.
Thurl, thank you very much. And of course, to your panel as well. So up next is our interview between Mr. Richard Attias and Donald Trump Jr. and Omid Malik. So please join me in welcoming them all to the stage. Okay, you're good.
So we have a fan club here. So,
okay,
how are you guys?
Good. Doing great. Yeah. Thank you for having
me. Happy to be with you, and time is flying. Last time we met, it was in Riyadh in October.
That's right.
But I would like to start first by asking you a question. What has changed in your perspective for the past 2-3 years? Before we talk about your business.
A lot's changed. I mean, when you used to come to conferences 2 or 3 years ago, corporate leaders would talk about how they have Native American lesbians on their board and that Exxon should get out of fossil fuels. So the culture's definitely changed at conferences quite a bit. And now Don and I talk about patriotic capitalism. So I say that's a pretty big shift. Do you agree?
100%. I mean, the world has dynamically shifted. People are no longer following the woke agenda of globalism. They're understanding that capital makes sense. We're controlling our supply chains for the first time. We've realized that 50 years of total disregard to that, that some of the bad actors that we sent those jobs really the American dream was our biggest export for decades. And so bringing that back to the United States, making sure we control that, I think has been beneficial, not just for us as a business, but for the world.
Let's talk about 1789 Capital. My God, first time we met, you were managing 300 million. Now you are close to 3 billion, plus. We talk later about the portfolio. Do you have any magic touch here to go so fast? What is the key of the success for you guys?
Well, I mean, I think the thing to understand is that we're thematic investors, and Don and I have been doing a lot of this together, speaking, but for a long time, all the way dating back to 2020. So when we thought of the idea, we were certainly, as I was joking earlier, not in favor. But I think that one thing to understand about our investment philosophy that now spans growth equity, real estate, special situations, is that we are very much thematic investors. And I think we were able to identify shifts in culture and politics a lot earlier than other people. And just like a macro investor in public markets invests based on what's going on geopolitically, we invest based on a thematic thesis that we have. And we started expressing that through working together back in 2021. I remember all the way back to October of 2020, he and I penned an op-ed that you can find online, where we were probably the first folks publicly to call for a ban of TikTok 4 or 5 years before that became in vogue. And we're trying to provide American solutions because of this threat we saw emanating from China. And the most troubling aspect about that was that so many of our corporations in the United States were complicit in that they were benefiting from America's rule of law, and yet taking funds and putting into a country that was certainly becoming our adversary. And so when you ask about our magic touch, it's that within politics, we started backing people that other people didn't see where the wind was blowing. We hosted J.D. Vance's first fundraiser back in 2022, when I think he was polling 5th.
He was number 5th in an Ohio Republican Senate primary, and we think we recognized the talent. And I think that's perhaps what we do differently. We understand those trends quickly, but more importantly than that, because I imagine so many of the people in the room probably see those trends, we were actually willing to act on them when they weren't popular. For me and our businesses, before that, it was actually almost a jailable offense, or at least they would try. So we had the guts to actually go after these things that made sense, to try to bring common sense back into investing. And I think it gave us a lot of credibility with the world. And so I think that was a big factor in our growth. People saw us doing this when, again, it was not popular. We're continuing that thread. Other people seem to, they jump in, they see where the political winds are, and maybe they're here today, but they may not be again in a couple weeks or a couple years. We have that consistent thread that we're going to stay there with our ideology.
Yeah, and I think one anecdote on that, to bring it back to our portfolio, would be an example of a company that a lot of people know about.
In terms of portfolio,
Poly Market, yeah.
I want to.
We got to get the pitch in there early, Richard.
Right. That's why I was trying to get the pitch before he did it.
Get the pitch in. I mean, come on, what's going on?
About portfolio, I'm so impressed because you are almost investing in all leading private technology companies: Databricks, Anduril, Ramp, Grok, Cruiserway, SpaceX, Polymarket, and many more. So.
Yeah, I think each one of those represents, again, a certain theme that I want to go into today, because I think that's what this audience is interested in. But one thing I'd point out, just to close the loop on kind of the magic touch, as you put it, or the foresight, would be an example of a company called Polymarket that a lot of people know about now. But when we met Polymarket, this was before the election had even happened. It was actually during the campaign. And it was that sense that we felt that polling was not something that could be trusted. Don points out the great example of Iowa, where they had a pollster who said that Kamala Harris was going to win. We knew that that was not true, but it was meant to demoralize. So many of the pollsters were hired mercenaries, and folks were looking for truth. And we thought the way that Polymarket and other prediction markets were acting was an innovative way to try to search for that. And that's why we got into that company way before it was a mainstream idea.
Yeah, it wasn't just sexy. It actually served a utility. The utility was essentially democratizing truth. That was something that was missing. Obviously, we're invested heavily in XAI. We were approached by some of the other big AI companies that everyone knows about, and everyone, frankly, would love to be on the cap table of, purely from a financial standpoint. We actually said no, because we didn't believe in the thesis. Woke AI to me is more dangerous than woke internet, more dangerous than woke media, because ultimately it will program people to think a certain way in a way that they're not even recognizing. When you turn on the news or you see academia and you had a rainbow hair teacher, you can probably start saying, okay, I know where they stand, I understand where the bias is. AI is going to be so intelligent that it's going to be able to manipulate people and propagandize ideas in a way that people won't even recognize until it's too late. And so we were very ideological at the expense of, probably billions of dollars, but it makes sense to make sure that that truth remains, that it is not taken over by one side of the political spectrum.
What happened with Anthropic?
Well, it's public now, so the Wall Street Journal reported on it. But what happened there is, I think, exactly what Don's talking about. I get entertained by people who think that somehow this is a Johnny-come-lately entity. It's actually just the opposite. We've proven time and time again that we were willing to do things when it was not popular. And because we predicted where the winds were changing, now we're in a position where I think we've been vindicated. The Anthropic example, I think, is notable because it's a microcosm for the broader issue I'm describing, which is, in this case, we were approached to potentially invest in the company. But what it exemplifies and why we turned it down was you had a company here who, in our mind, had the audacity to think that you had the right to be a service provider of the Department of War, but not actually act in the benefit of what the Department of War wanted you to do by utilizing its term of service. And to me, that's a completely antiquated way of thinking. We have a historical issue with technology. Many companies historically would not want to work with the US government, but we're happy to do business with China. That stuff has to end. Thankfully, I think the culture has caught up with it. We were one of the first venture capital firms to really go into defense tech, which has now become a household sector that everybody knows about. But again, we were doing it during the Biden administration when it wasn't popular. In the Anthropic example, we did our due diligence and did not believe that the management team had the kind of values that we thought were appropriate. And ultimately, I think, again, we're vindicated in their behavior with the US government. And to Don's point, I think there are plenty of other options out there in AI. One of them is a company besides XI, which we're invested in, is called Reflection AI. This issue with Anthropic creates a broader point around open weight versus closed weight models. If you are a sovereign, as a state or even a large enterprise that's regulated, it's very dangerous having all of your data off-prem. America needs to have open weight solutions. The ones that most people here are using or know about that are open weight are out of China, which goes back to how I started this conversation. So most people here heard about a company called DeepSeek. What I see playing out here is the same controversy we had around 5G with Huawei a few years ago. You simply cannot have Chinese technology be at the foundation layer for our government or important industries. And so we backed a company called Reflection AI with NVIDIA, DST, and a few other prominent companies. They just announced another round, which we're also participating in at $26 billion, where we believe that Reflection AI will become that American open weight model that we so badly need.
Let's talk about real estate, which is one of your core expertise, Don. Yeah. So your 1789 real estate fund raised $1 billion in less than 3 months, so which is one of the fastest paths to $1 billion owner for any inaugural real estate fund in history. So is it thanks to your DNA?
I think it is. We took a little bit of a journey into politics for a few years, but ultimately to be able to bring it back to real estate made so much sense. And it's really a bifurcated approach. Obviously, as a former citizen of New York City, political refugee to the free state of Florida from the People's Republic of New York, we saw the opportunity, but it wasn't just for us and what has happened in Florida real estate. It's going to be the continuation of that as the baby boomers start retiring. That migration from the Rust Belt to the Sun Belt makes so much sense. You see the growth. We have the opportunities. We partner with some of the best developers in the area to be able to capitalize on that in terms of luxury real estate, the health and wellness component that's really being amenitized into real estate from a luxury development. But also we have a bifurcated approach where so many of our portfolio companies are actually dependent on the real estate side of things. They run data centers, they're running AI, they're doing compute, whatever it may be. They don't want to deal with the real estate. So we have actually the teams in-house to be able to do that and build the real estate for them, where we would do 15-year triple net type leases, take care of the real estate component. And unlike a lot of the real estate funds, we're actually doing that in-house, the development's in-house. So it's not just, hey, you're investing with this, who's the manager going to be? Well, we'll tell you when we have the deal. We're actually doing that all in-house. So it's a really interesting approach because it's very divergent, but it creates a great sense of diversity and also really capitalize on that same thing. Focused on red states, places where things can get done, environments that are friendly to business, not overly regulated, not taxed to death. And so for me, just very excited to be able to go back into the space that I really grew up in my whole life.
You are becoming almost the gateway for Invest in America, guys. So can you tell us more about where do you see the opportunities? How far are you going now with this concept of investing in America?
Well, I mean, I think it's key. As you see, there's a lot of geopolitical issues that are happening in the world right now. America remains, I think, the safe haven of assets. Everybody around the world wants to invest in America, and I think that's proven out again and again. When I say that we're investing in the most innovative companies in America, I therefore mean the world, because America is a unique country in that often, if you look around the world, you have countries that have natural resources or some geographical advantage, but they haven't really innovated as a result of that. America is unique in that we have these natural resources, geographical advantages, and we're innovative at the same time. I've seen now, because of leadership, we've been able to do that. Saudi Arabia and some of the Gulf countries have done that too, with strong leadership and natural resources. You see that's a very formidable combination. And so I think foreign direct investment in the United States has become a staple of this administration. The president has successfully, through the use of tariffs and other diplomacy, acquired almost $9 trillion over the next 10 years of foreign direct investment, which is just so critical and part of the overall economic agenda that we very much support in the private sector.
Last question about 1789 after we talk about something else. It's not an only two-man show, correct? Because I see each time I meet you guys, you introduce me to new colleagues.
We get to be the dancing monkeys on the stage, but the team is very formidable, 100 years of Wall Street experience. A lot of people also, frankly, that wanted to do something ideological. They got stuck in the big banks and they had to conform to a set of rules that never made sense to anyone. Here we gave them that freedom. It was actually very difficult for me when we started doing this thing. I came from a world of real estate. We were building in urban environments, definitely left-leaning. We were in hotels. You want to cater to the 100% of the market. And all of a sudden you get into the political game a little bit. Even just voicing your opinion was enough to basically ostracize 50% of your market. That was really scary at first, but what we realized once we committed to that, so many other people actually had that ideology. You had to open the door for them to make it okay, and we realized very quickly it was actually, much better perceptually to be a king to 50% of the world or 50% of the market than agnostic to 100%. Not very intuitive for someone came from my background, certainly Omid, from a big bank perspective, but it actually worked. People got it, they understood, and that ideology really was enabled us to bring in the best of the best across that spectrum and enabled the growth that we've had.
We have over 24 employees. As I said, we have over $3 billion in our management, but we have over 33 portfolio companies on the growth equity fund alone. We've allocated over $1 billion already. We are extremely active. Our team comes from Wall Street, lawyers, public market investors, private market investors. We have a best-in-class institutional platform. And it's exactly to Don's point, when you had the largest corporations in America during that woke period, basically acting as thought police and indoctrination centers for their employees, it made sense that if you provided them a solution or an offering where they could just focus on doing work and not being in some version of 1984, that might be interesting. And so that's why we get inundated with CVs and resumes all the time, and I think it's going to be probably the easiest thing we do is talent acquisition.
Don, do you think that today capital is following politics, or is politics now chasing capital?
I think capital is following politics. You see that in terms of deregulation. You see that in the ability to conduct business. I mean, we basically did everything possible over the last administration to make sure that capital wasn't coming to America. Whether you look at innovative technologies, you look at just crypto. People wanted to be based in America. They wanted to do that. They didn't have a framework by which to even function. I mean, to me, that's ultimately going to be the future of finance. And I don't just mean Bitcoin or Ethereum, I mean, stable coins, the transactional side of that, the utility derived therefrom. All of that was there, and yet we were sending that to basically third world nations that may not share our ideology, may not share our ability to regulate properly and make sure that things are done well. And yet we basically forced them when we got into that game, and we didn't get into the game because we were innovators in that, like all the things we're talking about. We got in out of necessity. We were debanked. We were thrown off of every major platform in the world. We woke up one day with 300 bank accounts gone, and we said, we have to come up with a solution. We don't just crawl into the corner, put our thumb in our mouth and cry for mommy like so many of the people in government that were going after us with lawfare would have wanted. We decided we're going to utilize our platform, which is also very big, to be able to speak up about this, our balance sheet, to start something new. And yet you could go to the greatest white shoe law firms in New York and say, hey, this is what we want to do. Oh, that makes a lot of sense. That's wonderful. Well, we don't know if you're going to go to jail or not because there's nothing there. And so creating a regulatory environment that is favorable towards investment, favorable towards utilizing the resources that we had in the ground, whether we talk about rare earth minerals, whether you talk about oil and gas. But for some reason, we were unwilling to do it. You saw Joe Biden killed the Keystone Pipeline, and basically his first executive order when he took over, he said he wasn't going to do it 3 weeks before that in a debate, didn't matter. They killed that. And instead, we're importing oil from Iran, the world's leading state sponsor of terror, and Venezuela, a regime we didn't even recognize when we had it in the ground, when we were able to create great jobs for hardworking Americans. It's insanity, Richard. So having a regulatory environment brings that capital in, and now that we understand the critical importance of those supply chains and not just saving 0.2 cents on a widget by sending things that were literally critical to that supply chain to people who don't necessarily share our interests and in many cases would be considered enemies by any way, shape, or form, bringing that all back into America, I think creates an incredible opportunity for the future.
The hypocrisy knows no bounds. I mean, I want to pick up on a point. First of all, I think it goes culture, politics, then finance. So the money flows in that order. But if you look at the previous administration, or the Obama administration for that matter, it's kind of funny how they say, oh, well, this administration is taking such an active role in investing in industry. What are they talking about? When they were there, they were running a Green New Deal scam and investing in EVs, getting us out of fossil fuels, while at the same time thinking they were doing something to the environment when China and India were allowed to pollute as they saw fit. It was like absolutely insane. And on the other end of the spectrum, you have the Trump administration that actually has the foresight to see, we've spent 25 years outsourcing industry that is imperative for national security. We cannot make our pharmaceuticals in China. We saw that during COVID. That has to come home. You cannot give the entire rare earth market, 90% of it to China. We have to invest in these companies. And so if private capital wants to invest in those sectors as well, we should be encouraging that, not investing in things like Solyndra that go bankrupt for Obama donors.
Well, we dealt with it. I dealt with it this week. We invested in a company called Vulcan Elements doing rare earth mineral stuff for magnets that you need for our military infrastructure. Democrats this week wanted to subpoena me and try because we invested in an American company that does rare earth minerals. There are not many
with a
of them.
dozen other institutional investors, by the way, just to be
correct.
clear. Great.
By the way, also took a loan under the Biden DOD. All of these things, it doesn't matter because we saw the critical importance of it, because it's so limited in America. We had the guts to fund that. They want to go after me. They want to go after us, not the people who basically spent 50 years making us dependent on China.
Exactly.
I mean, who's the criminal here? I mean, it's absolute insanity, but we're used to that, right? We've seen that. We saw it with Russia. I'm sure that cycle will go again, and they'll keep trying. But there is a difference between the truth and the narrative. It's just not often disseminated to the people.
Where do you see the smartest capital moving in the next 5 years?
For me, I think, and I think Don agrees on this, is that we've all been talked to death about AI. It's an incredible time period, and trust me, we're huge investors in AI. I think that's going to create an enormous amount of productivity and be a part of a real boom, almost a new industrial revolution, a technological revolution that we're at this cusp of. We should be very excited about what's going to come of that. But for me, none of this happens without energy. And so one of the biggest exposures I think we have as a country in the United States is our grid, electrical grid. And so we've seen a couple ways to play that. One is we invested in a company called Base Power, which tries to utilize the grid in a way that it saves a lot of the energy during off-peak hours. So that's one innovative solution. We need to do more, but that's a private sector minor solution that we've invested in. And then with the electrical grids or these kinds of hyperscalers and data centers writ large, which obviously put pressure on it, it's not a foregone conclusion that every state wants one of these in there. And so it's become kind of a political issue. And so we're big investors in SpaceX, where Elon is probably the only person who could try to send these data centers into space and try to create solar power that way. That, I think, will be the largest IPO in history later this year, potentially a couple of trillion. But I do think that it is what Don said earlier, regulation and the political climate is going to be the difference as to whether we make it or not. You see it in AI right now. The president put out a great plan, one set of rules for AI in America. how do you ever think you're going to take on China, which is a central planner in AI, if you have 100 different 50 different states doing 100 different types of regulations on AI? You've got to have one. It's a national security issue.
Energy is everything. Obviously, AI is a little sexier right now. Quantum's going to be incredibly sexy. None of it functions without energy. And if you look at us relative to China, their focus has been on the energy. You can have the greatest AI, you can have the greatest algorithms, you can have the greatest. If you don't have the energy to power it, none of it matters. So it's probably, if there's 10 or 12 major AI players, there's going to be 3 or 4 that end up winning. The one thing that they're all going to need ultimately is energy, and I think that's probably the safer, conservative bet for everything. Because whether it's AI, whether it's the other things I mentioned, they're all going to be dependent on power, and we need a lot more of it.
Last question: what is your definition of leadership?
Of what?
Leadership.
Strength. Just the ability to do what is required when it's required. I see that a lot, with my father. The difference is we live in an American, in our system, and it's the greatest system ever created. And yet we have people that make trillion-dollar decisions that have no business making those decisions in the first place, but they're making them to win an election in 2 weeks at the expense of our children and grandchildren's futures. He's one of the few people that has the ability to make the decision that says, hey, this may be a little tough right now, but in 50 years, 20 years, it's going to pay the dividends that we need. And so the ability to do that against the political grain, I think, is the fundamental thing that's going to separate this administration from others. It may not always feel great at the moment, but I think history will look kindly on those who are able to make those long-term decisions, as difficult as it may be at the time.
I just want to, yeah, I mean, I couldn't agree more with Don. I obviously said that a few times, but I do think that has been the difference. If you look throughout history, countries with similar GDPs at the outset or their inception, the difference maker, Libya and Singapore had the same GDP at one point. What's the difference there? One country has a resource that everybody wants, the other doesn't. It has to be leadership. And, we see that in America right now, which is why this is such a critical period when you have a strong military, energy, and a strong leader. We have to take advantage of this time in the private sector and come together. And just want to thank you and FII and obviously PIF and everybody from Saudi Arabia for putting together such a great conference that brings all of these intelligent people together. It's really a pleasure.
Thank you so much. Before you leave, Don, do you talk business with your father?
I don't. Frankly, it's interesting because I did my whole life very much understand the way he thinks, but right now, he's taken that job so seriously. He understands the importance of it. Building a billion-dollar building is no longer exciting for him when you're doing trillion-dollar decisions, each and every day. He didn't need this job, Richard. Frankly, there are many a times when I'm, in the crosshairs of the insane people in our government, saying, we probably didn't need this either. But there comes a time where someone does actually have to step up when they see the mistakes that are being made. You've watched him since 1984 talking about failed trade practices, talking about that exporting of the American dream at the expense of our middle class. To have him step in the game, as brutal as that has been, he understands the magnitude of that, and he couldn't care less about business, frankly. The business is really what's good for America, and that's running a big business.
We are looking forward to hear from the president later today, so we hope to see you again later. Thank you. Ladies and gentlemen, a round of applause for Omid Malik and Donald Trump Jr. Thank you.
Gentlemen, thank you. For decades, diplomacy has been understood through the familiar tools of statecraft, security and trade and energy and hard power. But one of the more interesting questions is whether healthcare could belong in that same category. So today, we examine different systems of health diplomacy to look at how innovation and research and access are reaching across borders, what that could do for relationships, and ultimately even deals in the private sector. Please join me in welcoming my guests as I take my seat, His Excellency, Dr. Majid Al-Fayed, and Dr. Mehmet Oz joining me.
Thank you.
Thank you, gentlemen. We'll jump right into it. May I start with you, Your Excellency? Talk to me about the definition of medical diplomacy. What is it exactly?
Thank you very much. Glad to be here. As far as I'm concerned, the medical diplomacy is basically describe the use of health-related activities, whether that's in direct patient treatment, transfer of technology, bio industry, pharmaceutical, and more importantly, in training and education. They use as a tool or to build and strengthen relationships. And the relationships could be between organizations like hospitals or individuals and communities, but most importantly, between nations. And the medical diplomacy falls in the gap between health and foreign policy. And I think what is important about medical diplomacy is it transcends, unlike diplomacy in general, but medical diplomacy transcends borders. It covers all walks of life, nations, background, language, all of that. So it is borderless, and it is something that has been very effective over the years. It just needs to be utilized more.
Dr. Oz, is there only then upside to medical diplomacy, or is there a downside as well sometimes?
Oh, there's definitely a downside risk. And just to underline what Majid is saying, think back in the early 70s when Nixon was trying to open China. He brought ping pong players. Why? Because sports are a way of connecting with people, even if you're not aligned from a political perspective. We have that reality now in the world. There are many countries who we don't really have relationships with. We certainly can't negotiate with them, but health is a universal concern. And so the ability for us to use health diplomacy as a way of building bridges so that one day, maybe if you align on those topics, you'll be able to get more aligned from a broader policy perspective is wise. But let's talk about two places where it's not necessarily going to be easy for everybody. The first is most favored nation drug pricing. And just pretend you're living in this middle part of the United States. There's a 1 in 3 chance if you go to a drugstore, you will not be able to buy the drugs you were prescribed because you can't afford them. You're not going to get a lease in a car because you're worried about affording those medications. You're not going to get a house because the mortgage payments are too high to leave you the money to buy these drugs. So the president goes around very appropriately and says, part of the reason that this is such a crisis in our country more than other countries is because, and listen carefully, we spend 3 times more for the exact same drug made in the same factory, even here in America, than if it's sold overseas, even into a well-developed nation. So for good reasons, Americans don't like that. And so part of the medical diplomacy is to say, okay, health issues are a global concern, which we'll speak to. But let's take the simple example of chronic illnesses, which drive 70% of healthcare costs. That's what my job is. I'm the person who has to run the government health insurance system. So I know where the money is going. If the president can get us, and he has done this successfully, to drop prices here of pharmaceutical branded items, which are on TrumpRx.gov now. Anyone should be checking that before they buy a medication. You can save Americans money so they can afford those other things. Other countries have to pay a little more for that to happen. So this is actually real hardcore diplomacy driven around a medical issue. And here's the value proposition, that if you're willing to pool money, we heard in the earlier panel, 5% of NATO countries' GDP should go to defense. If you're willing to do that to fight an external threat, what about an internal threat? What if there's a cancer attacking you? Are you willing to invest also in that regard? And right now, America spends 0.8% of its GDP on branded prescription medications. The rest of the world, in Europe, for example, OECD countries pay closer to 0.3% of GDP. So less than half of their percentage of GDP. That equalization of that is the new version of medical diplomacy.
When these relationships exist, is the goal to improve health, or is the real goal actually soft power and to develop a relationship that can lead to a benefit for the person who's giving?
Yeah, well, it's a tough question and it's a complex problem. And just like Dr. Oz said about the complexity, that's one aspect of the complexity. But it's not really a binary question. It's either or. It is more of a duality. It's for medical diplomacy to be successful in transferring knowledge and improving healthcare globally. It has to be combined by the strategy, the national strategy, and the political will as well. When they are aligned, then medical diplomacy will be successful. And there are very good examples on that. But medical diplomacy alone can be interpreted otherwise. Unless it is built on trust, unless there is strong governance and a framework that would ensure that this diplomacy is conducted fairly and to the benefit of both parties. Otherwise, if it is one or another, then if it is only a medical problem, then it's probably not going to be sustainable. And if it's only a political problem with window dressing of the healthcare for the soft power only, then it's non-sustainable. It's more like a marketing scheme and photo op.
Is the impact then big enough, Dr. Oz, to really move the needle when it comes to geopolitical issues after the medical issues?
So that I'm confident that medical diplomacy is a powerful tool that's being increasingly used. And I'll give you one very simple example that's, I think, relevant to this gathering. I've been to Saudi Arabia many times. My family is of Turkish origin. And I've actually have an honorary doctorate from Al Faisal University, which is the university partner of King Faisal University, where Majid presides. And if you ask, and it's true for you, but it's true for millions of Saudi health professionals, they trained in North America, or at least overseas. And so my colleagues who I work with in Saudi Arabia all had several years where they learned how the West does things, and they brought a lot of that wisdom back. So when the rapid change started occurring, a lot of these individuals, they weren't guessing what the future could look like. In fact, interestingly, they could leapfrog beyond us because they saw what we had. Some of our legacy ideas were stuck. They knew where they could go faster, and they knew where we had it pretty worked out. They wanted to copy it. So I've seen much of the medical culture in Saudi Arabia, which is a spectacular, high-quality program. It is benefiting from a generation training here, but we're learning as well. So when I go to Saudi Arabia, for example, there's a medical city, and they have a stack of floors that look like you're at NASA Control Center. And on the walls, they have, correct me if I get this.
You got it right.
They have all the vital signs of the entire country on health. We don't have that. If we did, I'd use it. And they will, if you cancel a hip operation in Jeddah because you're missing a screw, they know what happened and who didn't supply the screw, and was there a problem in the bureaucracy, or did the supplier get held up? Like, what went wrong to cancel one operation in a faraway, because this is in Riyadh, the main center. So, and the ability to track that, or Alula, or anywhere else they're looking, is important. Those numbers drive their decision-making, which therefore is more up to tune. And in part with that wisdom, we, in America, the billing system we use for Medicare. How many of you know about Medicare? Most people? Good, everybody. Medicare, which takes care of our older people, the billing system for it was designed in 1979, Soledad. You weren't even born yet. And it's a COBOL-based system. We don't have engineers who know how to program it anymore. And all I'm trying to do is catch up to what you already have, because if we had that data, it unleashes artificial intelligence and a lot of other opportunities. Most of the major medical advances that I'm aware of happened because doctors got together and met each other from very different backgrounds and created ways of doing things differently because we could be able to break through barriers. That is a wisdom you cannot discount, and leaders see it.
Yeah, if I may, many people probably sort of know little about medical diplomacy, but I sit here as a product of that diplomacy. Saudi Arabia and the United States build that relationship. And from that relationship, many people, many physicians like myself, get the opportunity to come to the States, learn, and we came back home in order to sort of help primarily with health, but also to produce the leapfrog that you have mentioned. And I would say a lot of the transformation that we enjoy today back home and the Vision 2030 is based on the outcome of this medical diplomacy that happened in the 70s. And in turn, we back home also trying to help others and do the same thing, just like paying it forward, I guess, in trying to build such relationship with other nations in the region. So I think the relationship between Saudi Arabia and the United States, especially in the healthcare area where I can speak loudly, is a testament of successful medical diplomacy.
Talk to me about other examples. We were talking backstage about a couple.
So one of the programs that brought me to tears is a program by the King Salman Center for Humanitarian Aid, where we send doctors and nurses, technicians to implant hearing aid for children in Syria. And that was before the Syrian government, the new Syrian government took place. And that was about the first program that started. So these physicians, these doctors and nurses, they go in, they pick up children who are at an age where it is very critical to reestablish their hearing by implanting a cochlear implant, which is an expensive technology, yet if it is done timely and correctly, then you gain a productive member of society, you relieve a disability that is really significant on child learning and sensory input, and then you relieve a family. So seeing the tears of happiness on those families, it's all caught in YouTube, you can go and log in and see it, and the surprise in these children's faces was just build a relationship between the two nations right away. Now, with the new government that started in Syria, then the relationship became much easier. And I think that whole relationship started behind closed doors, in rooms, but as far as nations and people and communities and society built, I think that medical diplomacy started the whole equation.
And the goal is what at the end?
I think as a physician, as a healthcare leader, as a hospital director, for me, I look at nirvana. I want happiness and I want healthier world. Medical diplomacy may not be able to produce that alone, but a healthier society and world cannot be produced without medical diplomacy.
Dr. Oz, where have you seen gaps where you'd say medical diplomacy could work in this place and help us in politics and help us bring business into regions?
I think we need to have an epiphany about the value of health. And I'll give the data for the United States. If we could get the average American to be so healthy, so fit, so wanting to live with the agency they should have in their life, that they want to work just one more year, which most people in this audience would think, I could do that. Many Americans would do it if we gave them the opportunity and built a system to make them healthy. It's true for Saudi Arabia and the like. In this country alone, that is worth $1 trillion to the GDP. The power of health is almost immeasurable from a moral perspective, but financially it is measurable. And when you have those kinds of numbers out there, you realize that you cannot really be a wealthy country if you're not a healthy country. So the upside of being able to tackle some of these problems and maybe do them in some places more than others, but change the ideas work. So you have, for example, evolution. I see Jerry Inzarello there, who took me to Saudi the first time. But Prince Saud and Mohammed Jamashari, they took me over to evolution. Healthy evolution is, I think, one of the top longevity research entities in the planet. It's supported by the Saudi government and the Saudi royal family, and it is very successfully looking at ways for all of us to live longer. That unlocks a massive amount of value for all people. So when you want medical diplomacy, you can get to the half of the population who cares about longevity, they do better. You also begin to revisit things that are holding the bottom half of the health pyramid down. Many of these are acquired habits we can do better on, and this country has been copying Europe of late. That's medical diplomacy. We see that in Europe, they don't have the same additives in their food. When you eat bread in Europe, you don't get sick. And you have bread here, you seem to put weight on, your stomach hurts. What's different? And now that's anecdotal, I don't know, but people talk to each other, doctors observe this, and they begin to exchange best practices. And it builds bonds where otherwise people really wouldn't want to talk right now. And so instead of finding differences, we find similarities because we're all destined for the same fundamental biologic functioning of the most narcissistic thing we do, which is studying ourselves.
For the nations that you each represent, do you think that healthcare is treated as a pillar of national strategy, like we talk about defense or energy?
I could take that, but I would.
No, please.
I think certainly in terms of spending, we spend much more in health than we do in let's say, defense. However, in closed room discussions, I don't think health diplomacy is on the top of the table before, let's say, trade discussion or defense discussion and others. And I would argue that it probably should, considering the fact that talking about longevity, one of the most important improvement in longevity was with clean water, food, vaccination, antibiotics. But now it's about the utilization of data, how we can build on the information, and having more engaged in that through engaging more countries and more data points would improve on that, would improve on longevity, just as an example. So data, transfer of healthcare, but there are some sort of, I think, maybe obstacles and misconceptions. And one of them is government tend to look at health as cost, where I see it, or we see it, as a platform for innovation, a platform for development, and the direct and indirect contribution to GDP is tremendous. So if we flip the equation and look at it rather than cost, we look at it as an opportunity, I think that will change. Also, when we look at infrastructure, we see infrastructure not only as building, labs, equipment, as important as those are, but also in the development of the human, in the setting of the policy and in the environment. And when we look at that, then we see health is not as cost. However, healthcare is a long-term game. It's not a one-cycle election or a one period. It is a long-term investment that would be fruitful over the long run. So that's part of the reason why it's not in the top of the table, and I think it should.
So that I must say, there are some countries who completely understand what you're saying and others don't. China is a good example of what's happening when a country puts all of its effort into improving biotechnology innovation. They went from being a background player in the development of life-saving pharmaceutical solutions to now being maybe a third of all the new ideas coming out. They're studying patents put out in the United States and probably the Western European countries as well. They rapidly use AI to build patents around those. They're doing clinical trials at a fraction of the time. So we can complain about that, or we can realize we're in a race. It's a space race, but in healthcare, and we have to accelerate our ability to do innovation in the West, or they will take over the space. And just like in AI and space and some of the things we've been talking about this morning, I beg people to put health in that list, and this administration does value that. The president took me and health folks to Davos. We spoke there with many leaders of health organizations of other countries on purpose to be able to negotiate things like most favored nation drug pricing, but also to look out there and see where are the opportunities to continue to shepherd our leadership in health innovation. It is a massive export from this country. It has huge value from diplomatic channels. And for that reason, other countries want to take that from us. And there's going to be some competition along those lines. I see bright, but I see darkness, to your point as well.
Dr. Oz, thank you very much. Dr. El-Fayed, thank you as well. Appreciate it.
Thank you.
So we move now to talk about critical minerals, which have moved from the margins of industrial policy to the center. What's at stake is not just simply access to lithium or rare minerals, but control over supply chains that will underpin the next era of energy and defense, advanced manufacturing, and technological power. This session brings together leaders working across some of the most consequential fronts in that race, from lithium innovation to large-scale resource development. Jim Caravala is our moderator. Please welcome him to the stage as well with his panel.
Thank you very much. Welcome, good morning, ladies and gentlemen. It's my pleasure to introduce our esteemed panel here on critical minerals today. I'd like to introduce Emily, John, and Oliver from our critical mineral supply chain. So let's dive straight in, and we'll have some interesting discussions today. So I'm going to start off with Jonathan, if I may. You know, we've got a hard reality of domestic supply chains. Tell me, what was the issues as you've been developing Thacker Pass? What are the production and supply chain challenges that you've had? And how has that developed? And where are the critical bottlenecks that you've seen today?
Well, outside of permitting, which is normal course, financing is very difficult in this industry, especially for minor metals, because it's very, very cyclical. Private investors don't like volatility, and then companies struggle, and actually what you get is undersupply, and it's because more volatility. Folks up here, we're not talking about copper, we're not talking about iron ore, we're not talking about oil. These are markets that are not very well understood, and I think as everybody knows, the processing is mainly done in China, not that the resources are in China. And hitting the windows is very, very key. In our case, we're very fortunate to have the US government as a big backstop, the largest ever critical minerals loan for $2.3 billion. That also attracted General Motors, who's invested nearly $1 billion in us as a joint venture partner, and on top of that, Orion Resource Finance. So that public-private capital partnership is actually what we are, but it was very, very important to have the government as part of our capital stack to attract that. That's probably the hardest thing, and we've been lucky versus some other companies is that the timing for what we've been doing is in the right windows. If you're not in the right window, there's no capital available, and you can have all the permits you want and so forth, but building these takes a long time and it's expensive. Our project is $3 billion to put this asset in place. It's world-class. It's the largest known and measured lithium deposit in the world. In northern Nevada, we have it here, and we have other minerals here, whether they be rare earths, whether they be titanium, whether they be samarium, antimony. They're very difficult to get financed if you don't play the market right, but also don't have the right sponsorship.
And I mean, that's interesting. I mean, you cite a number of other mineral groups and sectors. In that experience set, you mentioned capital stack. So between capital stack, ore body, offtake customers, government anchors, which would you say is most important for new sector entrants to try and mobilize to the same level that you have?
If you don't have money, you can't do anything. But what underlines that mostly as well, too, is the deposit itself has to be economically viable. I'm not asked about ESG here. As private investors, you're going to want a return on your investment. So the underlying economics has to be something that's going to be competitive. First, whether it be the first quartile or first half, to be able to survive the marketplace. On top of that, you need to have capital, which if you're going to go get private capital, would be quite expensive, especially now with higher interest rates. But having someone like the government or somebody with a big balance sheet like GM or Orion, who has a long-term view, they're probably the leading resource private equity company in the world, work with the DFC. They have a 10-year view, and you need those markers because without the capital, you can't get started. And yes, we are in a race that we've been losing for a long time. So time is of the essence.
No, thank you, Jonathan. Oliver, just jump to you. You're in a very different field of mineral harvesting and exploitation. It might be well said that for seabed mining, the regulatory environment is the big unknown in the frontier. What is the big signal that US government or another entity could give to enable the uncertainty to be overcome?
Well, I founded Impossible Metals 6 years ago to really unlock the critical minerals on the ocean. And I think that big signal actually has already happened. President Trump signed an executive order April last year about unleashing critical minerals from the ocean. And that has been a game changer. And so now I think there is a clear regulatory path. There is funding. There is just a real realization that we cannot outsource all of these minerals to Chinese control. We need to go to the ocean. And one of the things I'd like people to understand is that this is not dissimilar to offshore oil and gas. If you think about the 60s and 70s, it was almost all on land. But yet technology and innovation made it practical to go to the ocean. And now it's maybe a third of the whole market comes from offshore. Exactly the same dynamics are playing out in mining. And with new technology that we've invented here in America, we can do it with far less environmental impact. And that's really the focus of Impossible Metals.
And so now that you feel you've got that demand signal from the government, what's your next biggest challenge or bottleneck that you're looking to overcome?
Like all mining companies, it will be capital intense. We will need to build a fleet of our autonomous underwater robots, and that will ultimately, at scale, need billions of dollars. So unlocking that funding, I think in partnership with the government, is a good strategy, but we do need investors to come in and see that there is a huge opportunity here as we take control back from China.
Interesting. And now let me switch again to Emily. You founded and leading Pure Lithium, and this is not just another battery company, it's just not another technology company. You've actually managed to innovate and compress the entire supply chain of lithium battery development to an extraordinary minimum of a few days as opposed to over a year. How is that feeding into the existing battery supply chain and industry? What impact could it have, and what are the bottlenecks to the opportunity?
Yeah, well, it's really a fascinating technology. We combine lithium extraction, anode production, and battery production in one place. And for those of you who may not know this, half of your cell phone's battery is made of graphite, and 99% of it comes from China. But in 1977, the Nobel laureate who won the Nobel Prize for the lithium-ion battery invented a battery called lithium metal while working at ExxonMobil, of all places, that just used pure lithium on the anode. This battery is 10 times more capacity than our lithium-ion today. It's going to be the next generation battery. In our lifetime, we've had 2 batteries commercialized to gigawatt-hour scale, lead-acid and lithium-ion, and lithium metal is next. So going directly to metal and then making the battery really does eliminate the Chinese-based supply chain. And thankfully, we have companies like Lithium America who've worked so hard to supply lithium salts in the United States that we really can have a closed-loop U.S. supply chain. So it's not just about getting all these materials, it's about using technologies that you can, resource materials that are local and bring them to market.
And, thank you, Emily. A question for all here. We're talking about either extraction, supply chain, batteries, and applications. In the industry, in the US, we're all recognizing this urgency and criticality of the mineral supply chain and our availability. What are the big issues that we may be missing? What else is needed for the US and Western allied countries to actually gain that whole supply chain sovereignty? What are the other gaps that are needed to be filled?
I can start. I mean, I think it's well documented that over the last 25 years, China's kind of taken control of the critical minerals supply chain. Not that the minerals were in China, it's just that they provided the funding in places like Africa and Indonesia, and then they very much focused on the processing. And what they have been doing recently is actually manipulating price. There's a very good congressional report on this where they will dump and they will subsidize, and it basically makes it very, very difficult to compete. And so I think what we need to do is invest in assets that are inherently low cost, because otherwise it's a race to who can subsidize more. And that is a difficult game to win. And so, in my view, we have to go for valuable resources that are very, very low cost so that we have some protection against the price manipulation from the Chinese Communist Party. And then we just need to invest. We also need the permitting reform. It cannot take 29 years to build and permit a mine into production in the US. We need to realize that, yes, we do need good environmental protections, but it can be done in a much faster pace, like countries like Australia and Canada.
Jonathan?
Pricing transparency is very key. Look, that very hearing I testified at with MP Materials, and there was found that there was dumping in the marketplace and price manipulation both for lithium and also for rare earths. It's one of the reasons why private capital hesitates, because you default to Chinese pricing as opposed to looking at what the actual fair pricing should be, because as you've said, 80% of the batteries come from China, more than 90% of the processing of rare earths and 75% of lithium and many other metals come from China. They resource it from offshore, Latin America, Africa, and so forth. And then they control the price because you control the supply and you control the demand at the same time. So the government's working on projects like Forge, which are very helpful in that. And you're already starting to see breaks with the Chinese now because, look, we're speaking here as a variety of different minerals. I'll speak for lithium, and what Emily's doing in batteries is super important. This isn't an EV game. This is our grid. Every data center needs power. Folks like Tesla and Caterpillar actually are working together because sometimes data centers need 2 gigawatts of power. You feed it through a battery. It's behind the grid. Right now, every battery, every gigawatt hour is about 900 tons of lithium. So our grid security actually is at risk here with important materials like this. So don't think this is a renewables game or whatever else. This is a keep the lights on game. Pricing transparency is key because what should happen is private capital wants to underwrite this. We're very fortunate the government here has a long-term view, kind of like the Chinese government in our case, to give us a 20-year loan at the 20-year bond, U.S. Treasury bond with no spread. China's been doing this for decades. And we revert back to short-termism in our Western markets like we have, and we're left, as a previous with Mr. Trump Jr. up here earlier, we've ceded it to the Chinese. You could see it coming. Pricing transparency is key, but also private capital needs to come off the sidelines as well. What we do, you can't AI. Maybe the workers, but you're either going to dig it up or you're going to grow it. Everything in this room either came out of the ground, what you're eating was grown. It's an industry that's, you've seen the theme, heavy asset, low obsolescence. This kind of stuff you're going to need to go forward, no matter what happens with artificial intelligence.
Jonathan, well put. That was robustly framed. Which then, then back to you, Emily. Just with that framing, that sense of urgency, that criticality, and I sense from both Oliver and Jonathan, not necessarily frustration, but just a recognition that so much more needs to be done and a sense of urgency needs to be key in our minds. Pure lithium has got an extraordinary value proposition. I'm surprised that I'm not seeing a dozen pure lithium factories churning out batteries with your supply chain innovations when we hear so much about the critical mineral urgency, the national security imperatives, the geopolitical strategic weakness that we have in the United States and the West, because China has played a very good game over the last 25 years, a little bit with some own goals, I think. What more does pure lithium need so that by this time next year, I'm seeing a dozen factories breaking ground?
Yeah, well, that's a great question. And for pure lithium, we need to deploy our technology as fast as possible, and it's ready. We're scaling the technology right now and building a prototype line. But our batteries are used in everything from drones to data center and beyond. And why is this important? The US military, generally on a good day, has between 10 to 20 days of batteries stockpiled, and we buy them all from China. We all know that's a bad idea for a myriad of reasons, right? We need these batteries that are made in America where we can control the technology, we can control the supply chain, and we can deliver them to the military that needs them, deliver them for critical infrastructure like Jonathan was speaking about, data centers, backup power supply. It's really, really important. So we're working with the DOE, with our national laboratories, and with private capital to bring our batteries online as fast as possible. Right now, we actually have 2 megawatt hours of lithium metal stockpiled at Argonne National Laboratory, which is where the Manhattan Project that solved World War II happened. We're sitting there with our lithium, ready to make our batteries and deploy them.
Amazing. Looking forward to seeing this next year in place. I think we've all heard a lot of metrics about where AI is going, where the agentic evolution of the use of LLMs and generative AI is taking us. I've seen metrics that we're going to need 2 to 3 orders of magnitude of power over the years to come to service the data center requirements for this new agentic workflow. This is not including robotic applications, and this isn't including the potential of quantum intelligent computing as that all emerges. And that's just on the AI side. As we move into the physical AI domain of robotics and automated systems, the need for electricity as our power source is going to emerge ever stronger. There is no uncertainty in this. What would you say in our closing couple of minutes here? What would you say would be the key metrics that we need to get across to the investing community that they should take on board when they're looking at the absolute benign harvesting methodology of impossible minerals, the growth curves and the scaling that you're doing with Lithium America, and the pure lithium, the innovation that you have on the battery side? What are the innovation metrics that they should really keep to heart that gives them the confidence to move forward?
So I can start. I mean, the market is just absolutely huge. You know, we're focused on 4 metals, nickel, cobalt, copper, and manganese. That was like a $500 billion TAM last year, and it's going to go to $1 trillion. So there's a huge amount of money to be made here. And, you know, these critical minerals are the foundation of civilization. You know, nothing exists without them. There's no technology, there's no energy, there's no infrastructure, there's no defense. These are absolutely essential for our way of life. And we cannot just outsource that. We've got to do it here in America. And that's what I think all of us here on the stage are focused on. And unfortunately, I think this administration is also very focused. So I'm actually very optimistic that we can build together the new critical mineral infrastructure built and operated here in America.
I think you hit the nail on the point with an electrified economy. Going forward, everything is going to require more and more electricity, whether it be data centers, quantum computing, which would be a whole bunch more with the cryogenic, like absolute 0 Kelvin type of approach that you have to have. You had mentioned robotics, even aerospace. All these things take critical minerals. They are minor markets, though. Think of minor metals as salt and pepper on your meal. Not the mashed potatoes, but the salt and pepper. So they're often forgotten about, but they're just as important as the main commodities that you see today, which are hugely important as well, like copper. I think it was mentioned earlier on a previous panel. We have a transmission problem in this country, a huge one. I mean, PURPA deregulated that anyone can start up power plants around the country, but how do you get the power to another marketplace? Even the management of our grid, all this stuff is interconnected with magnets and copper and wires and all sorts of other things. What's often looked at is just the military, and the military is great to look at, but the volume, you have to look at it holistically when you look at your business cases. Like my son builds jets for Lockheed. F-22s, there's less than 200 of them. They have 1,000 pounds or so of rare earth metals, but we don't build 5 of those every single week. Every Dyson vacuum cleaner that you have in your house has a rare earth magnet in it. Your car locks. Everybody has a lithium battery in your car, whether you like it or not. Most of your cars are actually mild hybrids now. All this stuff is in your daily life every single day. Your phone's in your pocket. They have rare earths, they have lithium, they have all sorts of things, silica, you name it. It's oft forgotten about. And the other thing we can't have is NIMBYism. We live in a democracy. If 9 people like something and 1 person doesn't, I'll go back to permit. I have no qualms about permitting in the United States. We went through it, but it took 4 years. The project that we have now that's actively in construction and will start up next year has taken 19 years to get here. 19 years.
Very good.
Wow.
Emmeline, last 30 seconds, quick wrap up.
I mean, I think what everyone here is doing on this panel is excruciatingly important, and we need to learn from each other, accelerate, and don't think of batteries and these materials as any kind of greenwashing or woke. We need these batteries to power society. We need copper for transmission. We need all of these minerals. And as my dear anchor investor, the mining entrepreneur Robert Friedland likes to say, everything that you see is either grown or mined, right? So we cannot be afraid of mining, we can't be afraid of minerals, and we can't be afraid of hard tech. We need to just make it our own and be leaders in this space.
Very good. Very good. Thank you very much, panel. Thank you for your attention. So you heard it. If you want to preserve our way of life, let's go. Thank you.
A big thank you to our panelists. So, our next conversation is about new energy deals with the context of both energy security and increasing demand. With greater energy needs, there's greater pressure, obviously, on the grid. So, what partnerships are actually working? And what does and what could the future look like? We're bringing out Maurice Dubois again with his panel.
Thank you so much. As we talk energy, we're talking about an enormous need for energy in our world. Demand is going up with each passing day. We need it, and we need it now. So let's jump right into it, because we're the only thing standing between you and lunch, as it turns out. So Dr. Farouk, I'm going to start with you. You told me that the issue is not energy availability, but it's extracting it and doing so safely. Please explain.
Yeah, sure. Yeah, I believe the most important part, as we have seen over the last few days, that still fossil energy plays a very important part into the formula. And one of the important part is having the assets to be able to extract that in a reliable manner, and more important, in affordable manner, because at the end you can get it very expensive, which is not affordability is a key. And part of the fossil today is the offshore, and a big part is the shallow offshore, and having the availability of rigs to be able to go to the locations, extract and develop those wells and get them in a sustainable manner and affordable manner is key. One of the issues today we face is having the number of assets which can do that. Because of the supply demand, there isn't new offshore built assets today in the market. So there are very limited supply, which makes utilization goes up to 90+% of the overall fleet. And to do new build will cost a hell of money. So that's where we are addressing this by providing this assets at the right place, at the affordable place with the right cost structure.
And doing it safely too, correct?
Exactly. Safety is a very important part in that formula, because we have seen, maybe people still remember the incident in 2011 of the Macondo, which has been a very big blast into the industry. And since then, the movement on safety and getting the safety of people, safety of assets, and safety of environment is really key.
Mark, I want to ask you, you see taking this to a whole new frontier, a whole other way of thinking about this, out of this world. Explain that for me.
So at Overview Energy, we do space solar energy. So complex concept, but in a simple execution, actually. So you collect solar energy in space, where the sun is 24/7.
In space?
In space. You bring it down to the ground as invisible, safe, near-infrared light to an existing solar project.
You beam it?
We beam it. So, okay. And the key there is the existing solar project on the ground. So if you have a large-scale, utility-scale solar project, one of the big issues is seasons and nighttime. And that's what makes it a non-dispatchable asset. So we can bring that energy down right to your solar project and make it work 24/7. And that fundamentally changes the reality of it.
What's the time frame for this being fully up and running?
So we're looking at first megawatts on grid 2030, gigawatts 2035, and the sky's the limit from there, quite literally.
What about, the jokes are endless here, what about the costs? So to the end user, to the consumer, to the businesses and so forth?
So we're looking at being competitive with existing terrestrial solar plus storage. One of the big things that we can take advantage of is you don't have to overbuild. If you're building a large solar project, you have to put in so much more and a whole bunch of storage to deal with the fact that the days are shorter in the winter, for instance. With Overview, you can just simply add supply when you need it. So the satellite can send to you, or let's say it's the middle of the day in summer, we can send it to a different solar project that's in the evening. Our satellites can see a third of the planet at a time, so you can just move gigawatts around in seconds, and that's fundamentally different than any other type of energy out there.
What about storage?
We actually play extremely well with storage. So one of the problems with storage right now is you charge up the battery during the day, you use it in the evening, and then you kind of deplete it at night. But what if you could charge it again at night, use it in the morning peak? So in effect, by being able to move the supply around, you can actually equivalently move storage around without actually physically moving the battery.
Wow. And you keep environmentalists happy, too.
Absolutely. So we firmly believe in dark and quiet skies. We don't want to upset astronomers or wildlife or anything. The beam is entirely safe. You can stand in it for the rest of your life, stare at it with binoculars. You can't see it, and it's perfectly safe.
Okay. Fred, where in the world, here on the ground, geographically, do you see the power that we need coming from?
So, I mean, you have, just take the US as an example. Today, the AI industry estimates it's going to need 40 gigawatts of power. Well, in the US grid, you have 72 gigawatts of power available based on a university study done by Duke last year. If the data center can curtail 2% of the time, we only ever use peak power 2% of the time in the US. Now start moving to places like the Kingdom of Saudi Arabia. Huge amounts of energy available, not just solar, but also obviously fossil fuel based. You could create data centers as digital embassies in the kingdom, where essentially you can provide sovereign control over data center assets because they have low-cost energy, very high-speed internet connections. It's a logical place to build that. We today operate, for example, 250 megawatts in UAE with our partners and are very actively looking at the kingdom for additional projects. But you also have places like Australia, South Africa, most of Saharan Africa, if you would, Morocco, huge opportunity for solar and renewable energy. Plus, you still have other forms of energy. I'm a big proponent long-term of space, but I think there are many impracticalities still. For example, the biggest fault today with energy generation and consumption is you generate energy somewhere where the consumption is not. So the supply has to be transported to the demand. If you can put the demand where the supply is, you don't need transmission capacity, which is why the notion of data centers in space is much better than transporting energy to the ground to run data centers on the ground. Granted, there are issues with gamma radiation and chips, et cetera. But I think longer term, data networking speeds will become much faster than trying to push electrons over multi-thousand meter distances from space down to the planet. Plus you have the issue of low orbit congestion already and other things. So I'm a big believer that we have more than enough energy on the planet today to more than suffice our needs. Equipment will become more energy efficient every year. That will drive further demand, and I think you're going to see a virtuous cycle over time. But listen, 1972 peak oil was supposed to be 1980. Here we are in 2026. I think we love to doomsday predict things in straight lines that things are going to happen, and they never do.
Mark, you want to respond?
I think it's agree and disagree on some of those points there. I think you hit on a very important one, which is transmission is the hard part. The usual joke I say is a square kilometer of land is easy to buy unless it's 100 meters wide and 10 kilometers or more long. So one of the big things with overview that we're looking at is proliferating solar projects is actually extremely easy. Solar is the fastest thing to go from greenfield to power on site. Well, if now that's a dispatchable asset and a baseload asset, you can cut out the long distance transmission, which is actually the hard part. And the way we do it, since it is environmentally friendly and safe, and we actually get the efficiency up there, I think it'll actually turn some of those assumptions upside down and actually make it where it is appropriate part of the mix. So agree and disagree, but I think it's actually a mix of both, and it solves that transmission problem.
Okay, we'll leave that right there. Rajit, how do you make sure we're optimizing the use of energy, and how do we address environmental concerns as well?
So look at DataVolt. We are primarily focused in Saudi. We are one of the private sector entities of Saudi focused on build-outs of the critical infrastructure of data centers. So we focus on scale and impact. And how you measure impact can be a series of different metrics, but for us, the most important way through which we measure impact is affordability. That means we eventually target to be the lowest cost of compute. Today, or for the last couple of years, the world has been far more focused when it comes to compute power on availability. Grab whatever intermittent power is available for the next 3-4 years. But we have to transition to two things. One is to make sure that the whole energy strategy that underpins this critical infrastructure of data center is sustainable and survives over the next 20-25 years, which is the life of those data center infrastructure. And it's not just about fitting the temporary availability of power at a given point of time to solve for an immediate problem. While the growth of AI, we recognize, is so much driven by the whole economic input of compute, but compute, in turn, is driven a lot by energy. And what we are trying to do is to democratize this whole growth of AI by bringing compute closer to the source of energy rather than make the energy be found as a solution for unlocalized AI growth. And Saudi, as you know, is at the cutting edge of developing reliable power, affordable power. It's the lowest cost of energy producer in the world. And when I talk of energy, I'm talking of power. And it's all about integrating the whole system of power and compute together in order to deliver the lowest cost of compute.
Speaking of AI, Dr. Farouk, how do you use AI to make operations safe? That's a critical aspect of what you do.
Sure. We started like 3-4 years ago by automating our assets, offshore assets, by putting these cameras all around the rig and getting real-time images which make them available for AI algorithm to start monitor the operation and make sure that the people are safe and they are doing safe operation. The assets and the dynamics itself of the development is happening in a safe manner, and start giving alerts to the people on the rig and people actually off the rig through what we call operating command center, monitoring real time all the assets. We have like 120 assets monitored real time, and get messages which make sure that our people are running a safe operation. And that's one of the new development happen, and it has proven that it cut our safety or incidents to almost half. So today we are one of the best performing all over. Actually, we have 20% of the offshore assets globally, and those run in a very safety compliance records compared even to the standards. So we are able to deploy this AI to make more safe operation, which I think is very important for our people and for our assets and for our clients.
So this was something that people used to do. They would try to monitor the cameras, the video.
Yes.
But now you're saying AI is monitoring.
Exactly.
What's going on, and then alerting the people to watch it.
Exactly. And we start getting lessons learned from situations to start improving even and drive operation more safely day after day. So this is something which I have to say has been recognized by the top NOCs and IOCs. So we operate for all those clients, and they are very happy with this, and they are trying now to take it and duplicate this from our operation to other competitor operations.
What about the environmental concerns? There are emissions on the rigs.
Sure.
Does AI play a role in monitoring that?
Sure. We are using AI to monitor the loading on the units and start, instead of using engines, which usually consumes a lot of emissions, we start to kick in batteries, which is more or less emission and more environment friendly. And that substantially has reduced almost 20% of the emissions we are using in our rigs because of this new systems which are using batteries instead of engine at a certain loading dynamics, which I think is very useful to improve emissions and to increase the sustainability part.
That's very interesting. Fred, when it comes to AI data centers, something people don't talk about much is the lifespan of these data centers. They're not forever builds, correct? These aren't going to be here forever. What do you see?
Well, you can think of an AI data center the way they're built today. You have a building that's basically a refrigerated box. The technology that goes in that building, so the compute, the racking, the power supply, and the cooling, all essentially are being obsoleted every 3 years right now. So you build this data center, you have a tenant who's going to rent it for 15 years. Well, every 3 years, you have to rip and replace a lot of the insides. And that is the bulk of the CapEx that's going to get spent on that data center is compute, power, and cooling. The shell itself is maybe 25%. The rest is this very expensive compute. And I think part of the problem people, today they look at investments in data centers and they think, okay, it's one investment. I have it for 15 years and I'm going to harvest this. They don't realize that to keep it relevant because of the technology obsolescence that NVIDIA is doing on a daily basis. Plus, NVIDIA now has many competitors for chips, AMD, Microsoft, Meta, Google, et cetera, all trying to eat into that business. And then you also have this transition of inference, which is moving towards the edge. If anybody looks inside an Apple iPhone, it has one of the best AI inference tools on the planet in it. The chip that Apple has is a mix of GPUs and CPUs. Most of the things you need an agent to be worrying about are data points related to you. Where are you? What are you doing? What have you been searching? Who have you been talking with? Your emails, et cetera. All that's at the edge. It's not in the cloud necessarily. And so I believe that you're going to see a lot of inference moving to the edge. And these big, large cloud data centers are primarily going to be focused on hyperscalers who have to consume their own data. Google uses their own behavioral data on what you search for every day to know what ads to serve you. Same thing with Amazon. Same thing with Meta. What's going on WhatsApp? What are you doing on Instagram? They're going to figure out what ad to show you. They're doing all their own inference, which is why they need these big data centers. I'm most fearful for the people like OpenAI, where they're relying on people wanting to put their data into a cloud, which I don't think people want to do long term. There's a huge push for sovereign data. Companies don't want to put their data in the cloud. Governments don't want to put their data in the cloud. They're worried about the US Cloud Act, especially outside the US. They're very worried about the long arm of the US government coming in and touching their data. So I'm a big believer in inference at the edge, data centers that are highly decentralized.
Data centers, is there a scenario where they become obsolete? Is that even a thing?
Well, everything happens in cycles, right? We had mainframes, then we had the PC, then we had client-server technology, then we had the web. Now we have Internet of Things, we have all these smart devices, we're now building physical AI, cameras that have AI built in them, robots that do visual things, factory equipment that is intelligent, has built-in models that AI is embedded in. Data is going to be processed everywhere. Things will become more and more intelligent, and there'll always be a need for data centers.
Anybody want to put some final thoughts on this? We have about a minute to go, or less. Our energy outlook.
Oh,
how about you?
Yeah, I think a couple of points on that. I think that it is going to get more distributed. I think it's going to be bigger loads. I think we've only seen the beginning. AI is the canary in the coal mine for how much energy that we need to change things around. And to your point about like the lowest cost energy, I mean, we have a MOU with Aqua, and one of the things that we're looking at for the kingdom is the 30 plus gigawatts of power that Saudi is installing over the next 5 to 6 years. If you added overview to that, that's all the power needs of the entire kingdom. So what I think you're going to see is a transition to adding supply as opposed to shifting it around so that you don't have to predict where you're going to use it in 20 years. You'll have the power. Now you can use it where it's going to be needed.
That's our panel on energy. Gentlemen, thank you. Thank you so much.
Thank you.
Appreciate it.
Gentlemen, thank you very much. So this concludes our morning program. Lunch is served at the POW in the Faino Hotel. If that's at capacity, you can head over to Los Fuegos restaurant. That's also in the Faino Hotel. The breakout sessions during lunch are in the cabaret at the Faino Hotel. This is important. Everyone must exit this building. You cannot stay in this building. This building will reopen at 2 p.m. This building will reopen, and the sessions will resume at 3 p.m. This area and access to the plenary is now heavily controlled by security. If you plan on attending the afternoon sessions, including the presidential address, we recommend that you arrive early and be very prepared for security to take some time. Thank you and enjoy your lunch.
Before capital moved at the speed of light, it moved at the speed of institutions. It flowed through banks, through stock exchanges, through sovereign balance sheets. Value was built in factories. Power was held in institutions. The world moved forward, but slowly. Then something changed. Technology broke the walls. Platforms rewrote industries. Code challenged capital itself. Value was no longer only extracted at scale, it was created at inception. Before the IPO, before the market, before the world noticed, capital was no longer only raised, it was engineered. Capital was no longer only raised, it was directed. 10 years ago, a simple but radical idea was born in Riyadh. Not to follow capital, but to ask, where should capital go next? That idea became a platform, a movement, a signal, the Future Investment Initiative. The world changed. Supply chains fractured. Economies realigned. Certainty collapsed. And capital had to adapt, from conversation to coordination, from dialogue to deployment. FII became a global platform. Riyadh, New York, London, Hong Kong, Miami, Rio de Janeiro, Tirana, Tokyo, multiple cities, one mission, to shape what comes next. And today, we back in Miami. Not to celebrate the past, but to confront the future. We are entering a new era of capital. Artificial intelligence, energy transition, infrastructure reborn, sport, cryptocurrency, new industries, new power, new responsibility. Capital is no longer static. It is not regional. It is not sectoral. Capital is in motion. And the question is no longer who has access to capital. The question is, where does capital truly belong? From concentration to disruption to realignment to intelligence, we are entering the era of capital with purpose. FII Priority Miami is not a destination. FII Priority Miami is a movement. The next decade begins now. Welcome to FII Priority.
أهلا وسهلا بمبادرة مستقبل الاستثمار ميامي 2026. أهلا وسهلا بكم جميعكم. أتمنى أنكم استمتعتم بالغداء. سنبدأ فورا. الموضوع الأول هذا المساء هو النظر ما هي المراكز المحاسبية التي تفوز في الموجة الجديدة من الذكاء الاصطناعي. الرجاء أن ترحبوا بجاك هيدري الميسر والذي يتحدث مع ريان فايز وهو المدير الدائم المدير التنفيذي في نيوم في المملكة العربية السعودية. أهلا بكم جميعكم إلى الجلسة الأخيرة من مبادرة مستقبل الاستثمار ميامي. من رائع شرفنا أن نراك هنا السيد ريان فايز. أنا سعيد لأن أكون معكم اليوم مع صاحبي ريان فايز وهو نائب المدير.
And let's talk about AI.
But let's talk about AI, not in the abstract, Ryan, but let's talk about it in terms of the physical manifestation. We cannot have AI just somewhere in the ether. It has to be manifested in data centers, with energy, with capital. All that has to come together. Tell me about your perspective as you see all these different factors come together to make AI real and alive. And then let's talk about why the kingdom.
Thank you. Thanks, Jack, and thanks to the FII leadership for inviting me here again. This event has always been a really special one, and this year didn't disappoint. So thanks, Richard and Cecilia, for all the good work that you do here. Over the last couple of days, we've heard a lot about the challenges and opportunities around AI. And I think when we think about very specific and distinct data points that I picked up that really highlight where the challenge is. Number one, more than 150 zettabytes of data is being... Zettabytes.
That's big.
A year, and that's expected to grow more than 10-folds in the next 10 years. We've all seen this number, $2.5 trillion of AI investment in 2026 alone by all, the big hyperscalers and the ecosystem as a whole. 300 gigawatts of power and energy needed in 2035 for AI data centers.
Let's just put that one figure in perspective. You mentioned 300 gigawatts. Give us a sense of the magnitude and capital of that kind of energy intensity.
So the full ecosystem spend on 1 gigawatt for a data center is $30 to $50 billion.
So 30 to 50 billion just for 1 gigawatt, and now you're talking about 300 gigawatts.
Yes, I'm sure over time there will be some efficiency captures in the system, but this is what it costs today, which is a significant capital spend for that asset class. What effectively this means is that a couple of years ago, chips were the bottleneck. A year ago, compute was the bottleneck. Physical infrastructure today is the bottleneck for the success of AI. And we've heard that a lot, whether it's energy or capital or even land that is available for AI data centers. We've heard a lot about the challenges. I'm glad to be sitting here sharing some of the opportunities. I'm not being very biased here, but I'll talk my book as to where we feel the opportunities are in the kingdom and in NEOM in particular. What we have in NEOM today, in Oxagon, which is our industrial city, a really purpose-built value proposition for AI at scale to be set up in NEOM. We have energy at scale. We already have 4 gigawatts of renewable energy for the NEOM Green Hydrogen project.
One of your partners is Aqua Power.
Correct. They're the ones who built it, actually.
Aqua, I think, manages $100 billion of assets, including now in NEOM.
I don't know the number, the number is, but in NEOM, they've done a great job building this in record time. You should visit at some point. Massive infrastructure that was built to support the NEOM Green Hydrogen. But we also have a master plan and identified sites for more than 20 gigawatts of renewable energy in NEOM. So it's not only energy today through the interconnection with the grid, but also renewable energy coming in the master plan for any future demand.
Diane, let's also talk about the storage of energy. One of the hallmarks of what's happening in NEOM that is at the forefront, at the frontier, is deploying batteries at large utility scale. We've seen batteries deployed in homes. For example, the Tesla battery system is deployed in homes across the US. But in terms of utility scale, this is really a new level of achievement that's happening in NEOM. And battery chemistry brings us to physical AI. Jensen, just last week in the GTC, talked about AI for the digital world, which is ChatGPT and other chatbots, but then AI for the physical world. And that includes battery chemistry and innovations that are happening. Can you talk about that?
Yeah, I mean, the energy ecosystem as a whole is very primed for use of AI in the physical world, whether it's battery storage and chemistry, intermittent issues around solar power, grid utilization and grid management. I think what we're seeing right now is AI pushing really technology from being reactive to predictive to, in the future, autonomous, running effectively the energy grid. I think what we're seeing even within NEOM through our energy and water subsidiary, NOAA, the utilization of AI, not as a support function, but as a decision-making layer.
Core.
As a core decision-making layer to decide where electrons are more efficiently directed.
So let's now pull back from just NEOM to the kingdom itself. The kingdom and its leadership have made AI a core priority, maybe the highest priority we can even say. And tell us about the role of AI as you see it across the kingdom from the leadership and its impact on the economy of the kingdom as it rises up.
Let me just finish a couple of points on NEOM, which feeds very well into the kingdom's value proposition. We have significant infrastructure built and invested in digital infrastructure. So we have 2 subsea cables, one landed already in NEOM, one coming later on this year. More than 600 kilometers of cable, both subsea as well as carrier neutral network. This gives us less than 60 millisecond latency to 50% of the world as we use NEOM as an export hub for data centers. We also have scale. The same applies to the kingdom, by the way. NEOM itself is 26,500 square kilometers. So the master plan today offers for around 10 square kilometers of data center ready land, but you can see how that could scale up to something a lot bigger. When we look at the proposition, what all of this offers is a time to market for a very much needed infrastructure that competes at a global level, whether it's at a cost of energy and energy availability, digital infrastructure scalability, land, and capital, obviously. So when we look at the kingdom, and we've heard this across multiple sessions, the success of AI infrastructure is driven by energy, capital, and talent. I think we talked enough about energy, and we talked enough about capital. I think on the talent side, there is a significant investment being made across the board for AI to be native across all the ecosystems. Obviously, infrastructures and organizations such as Humane, Sedaya, and others that have been embedded very deep into the system and actually compelling many of the government organizations to adopt AI as a native system rather than as a support function. I cannot overemphasize enough how much of that is embedded deeply in every conversation we have at the highest levels. Now,
Diane, just because we have to wrap up soon, speaking of time, I want to get to time. Energy, capital, human capital, and the ability to come to NEOM and get things done in a very compressed time frame compared to anywhere else, in terms of the permitting, in terms of the turnkey, in terms of getting it all that done in a very compressed turnkey way. I think that's also one of the key components you and I have talked about.
Definitely. I think having a single point of contact to deliver on all the needs of investors is really a key competitive advantage. We've been having discussions with many of our partners and friends, some of whom are already here in the audience, and I think it's resonating quite well. We're waiting now to see how to activate that and move it from just an idea and land, shovel-ready land that is ready for data centers to seeing data centers erected and up and running.
So, Rand, to summarize in our last few moments here, we have AI for the digital world. We're all aware of that. Now, NEOM is taking it, AI for the physical world, physical AI, the batteries, the energy, both renewables and traditional, the scale, the time. I think it's really interesting to see this frontier edge push forward, not only in the general ether, but now physically in the real world.
Definitely.
Thank you so much, Rand, for being with us. Thank you all very much.
Thanks, Jack.
Thank you, gentlemen. So, what makes Marvel extraordinary is not just that it produces successful films. It builds mythology, expanses enough to compound across characters and formats and audiences and time. AI, gaming, and new distribution models are beginning to shape how entertainment is now financed and built. Building a worldwide mythology, not just a blockbuster, is the topic of our next session. So please join me in welcoming our moderator, David Eisman, in conversation with David Meisel, the CEO of Marvel Studios.
It's an honor and a privilege to be on stage tonight with Marvel founder David Meisel. I can't think of a better person to talk about the future of cinematic universes than David, who had the vision and a drive to create the Marvel Cinematic Universe, which we all know and love. But to set the table for talking about the future, we wanted to spend a few minutes and talk about how it all happened. David, let's rewind the tapes back to 2003. How did this all happen?
I think that's the right place to start, to have the context of why I was confident in Marvel launching basically the first cinematic universe about 22 years ago. And there was a lot of elements, but there were 5 key elements that I had developed as a model to help me think what could be possible. And I like to mix creativity and analytics, which is not something that often is done in Hollywood. You normally have to choose one side or the other. But I think that was part of the ability to get confidence to dedicate that part of my life to it. The first was, what is a good asymmetrical risk reward? I had studied the industry and had the fortune to work with people like Mike Ovitz at CAA and Bob Iger at Disney and Ari Emanuel at Endeavor. And we all study that's the way you can learn how Hollywood really works. And the first movie business is risky, no matter what anyone says. There's things you can do to minimize the risk, but it does have a significant degree of risk. So if you're going to do one of those, most of the ones that come out, some don't have a sequel, some might have 1 or 2 sequels. The concept, the dream, was what if after the first movie, if it worked, there was dozens and dozens of sequels and quasi-sequels. Sequels and quasi-sequels have more predictability, not certainty, but more predictability, and you're managing profit margin more than you are whether you're going to make profit or not. From a business point of view, I was looking for that asymmetrical risk reward. I found it in that model. And the second part that was important was to do it with IP, intellectual property, that in all my studies, and obviously famously with Disney, was where most of the value in a sustainable basis was. So if you had a long-term vision for a company. And the IP had to be owned and controlled, because otherwise you're just renting it and don't have the benefit of the full upside. With that, then, the third was, what's the right IP? And there's a couple elements there. It was easy for me, frankly, in 2003, because my instinct was Marvel. I've been a huge Marvel fan my whole life, and I watched the company very closely. It had just come out of bankruptcy in the late 90s, and a man named Ike Perlmutter smartly purchased it out of bankruptcy, and it was about 150 million market cap. But Marvel's characters live in the same universe. It's not forced. It's part of the decades of lore for these characters, so it's a natural thing to do. And it also had a degree that I hypothesized was important, and I still believe very much, that the best potential is when you have something that's fresh for most of the world to discover with their friends. Discovery is very powerful. Their family, their friends, others, but it has a legacy as well. So there's some gravitas to it. There's lore that's been around for a long time. There's ability for people to go and investigate and explore the past. And 1 + 1 = a lot more than 2. Marvel had that. At the time, just a comic book company. We were selling 5,000 comic books of Iron Man a month when the film came out. So it still could be discovered by most of the world, and was through the films. And there's also IP that could be global. Marvel was a bit American-centric, but we had a lot of thought in terms of the casting and the stories to try and make it appealing to the whole world. The other element of IP is you want it to be available and not encumbered, right? And that was where I hit a wall. I didn't know anyone at Marvel, and I was fortunate enough to find someone to introduce me to Ike. And I'll tell this story because we have President Trump speaking soon. But I don't think I've told this publicly yet, but I was invited to Mar-a-Lago in 2003, where Ike's a member, for a lunch, to pitch him on my crazy idea of this recently bankrupt comic book company to finance its own movies and not license them to the studios. And the lunch, there was a third person, which was Donald Trump. And so we had a 2.5-hour, very memorable discussion about entertainment, Hollywood, and about Marvel. The only problem was my pitch was going nowhere. And finally, it turned, and Ike and I partnered up for the next 10 years, creating what became the MCU. Once you have all those pieces in place, then you have to get to work. And all it takes is 1 point of error here for it to fail. not as complex as a space rocket, but a similar idea. You have to elevate the IP and make good content. Elevation is important to get people to care about it, to sample it, to be curious about it. Otherwise, they never see your product. That's where traditionally advertising came in, casting came in. We put Robert Downey in. I decided on him both because of, obviously, he's perfect for the role of Tony Stark, but he also won the Academy Award. It made people think, why is an Academy Award winner, a caliber of Robert, doing a comic book movie? And all of a sudden, that attracted a bigger audience and curiosity. Other things we did as well, but once you have that elevation, you got to get a great product, because after Friday night, word of mouth takes over, no matter how good your marketing has been. And so huge amount of our time was spent on that, and many challenges, but one of the biggest one is if you take IP from a niche area like comics, you have to make sure those fans love it, but you have to expand it to other cultures and different generations if you want to have a really big worldwide cinematic universe. And so, for example, Iron Man, which is another studio had the rights for a long time, saw it more as a rocket around a guy. And we made it more a love story. It's Gwyneth Paltrow and Robert Downey. It's one of those stories we've seen a million times where two people love each other, but they won't admit it. And there's 15 minutes of cool action in there. And many people, my mom and my girlfriend at the time, for example, came to the movie because of that, not because I made it. And they left loving the love story, but they also loved the cool superhero stuff and the intrigue and the Easter eggs and so on. And then the last element, which is really important and not really talked about a lot, is being owner-operated. When you're an owner-operator, you care about things way more deeply. You have much a longer time frame. You're all in. You can plan for a long time, which this requires. It took us 5 or 6 years to make Iron Man, and then it was another 20 years that we had planned out, frankly. And we could take bets, we could have patience, we could make it work. And that's what Marvel was. Ike and I were the major individual shareholders. We were a public company, but especially me, I was all in on that and had the tenacity that was engendered by that status. And, you know, Hollywood is normally not that. It's normally about guaranteed paydays, independent of how the stock price does or the long-term health of the company. And a lot of people are doing multiple jobs and switching jobs from one place to the other. So you can imagine it doesn't get the same kind of elevation and focus that being owner-operated is. You know, I think recently with David Ellison, Jerry Carnell's purchase of Warner Brothers, the first Paramount, then Warner Brothers, it fits those criteria still today that I identified back then. You know, they identified IP as a key thing, and they went after it. I think that was even more urgent now because you have less time to develop new IP because it's going to get more crowded with AI and stuff, so better to revitalize existing IP where you have a head start. And they have a team and an attitude and a tech-savvy approach and a youth and a more of a fresh mind to really elevate and make great product. And obviously are owner-operated. So it's nice to see that happening. I think it foretells, I think, very good success. Those were the ingredients that I had to find at the time, and I was lucky to find it with Marvel. I didn't have to go to a second.
So David, that begs the question. Nothing's really happened since Marvel that's paralleled Marvel.
Yeah.
Can it be done again?
It's a great question. I mean, it hasn't yet, and since Marvel was created to a significant degree. There's been some doubles, but not really the grand slam that we were fortunate enough to do with Marvel. And I think it's, you know, without going through individual situations, one or multiple of those elements I talked about weren't present. It was people seeing the success and trying to copy it, adding the word verse to anything, and thinking that made it a universe. And now, that being said, well, I should also say it's harder now than it was. It was not easy when I did Iron Man in 2008, but now you're competing against other diversions like social media, short-form content in YouTube, more video game play, streaming, so many things to get people's attention that the bar has to be higher. Those ingredients have to really be in place, and they have to get the dedication, the expertise, and the love and care that they need. I hope it happens. I think if I had to say where the potential is in comics, the area that I focused my professional career on, I think there's only two possibilities, frankly. Marvel's already, I sold it to Disney. David has DC Comics, which is a huge comic book company, and it's really just Marvel and DC that control most of the industry. And I think with DC and with new ownership and a new approach, there's going to be an open mind on behalf of comic book fans, including me, that really want to see DC work. I'd be so happy as a comics fan. And I think people will give an open mind. There'll be a curiosity. So DC, even though it's tried many times to become a universe, will have another shot to take advantage of with that open mind. And then I was fortunate enough, I said no to everything. I looked for things. There was only one other unencumbered comic book company that I felt had the potential for universe. Frankly, any that even had a broad range of things. The only problem was it was tied up by James Cameron, who is friends with the artist who created it, who passed away. And I was very fortunate that when James got busy with Avatar, the people knew me and asked if I wanted to step in his shoes, and I grabbed it right before COVID. So I've been working on that. I'm excited for the world to see that. It's called Ecos. But I think those two comic groups have the chance for big success. There'll be one-offs, but for a sustainable universe, they have the amount of characters, they have the depth, they have the other elements that I mentioned. And then I guess, lastly, there's a couple other areas, but gaming, is so popular. And I played in that area for a while with a casual game, Angry Birds, and it was a blast to develop a mythology and personalities for what were just circles, and the audience of Angry Birds, intergenerational, really embraced it and was really good for the company. I think the broader games now have similar potential, but they have challenges. A lot of times the characters don't have much depth. With Marvel, we used to talk about our heroes have flaws, our villains have virtues. We were very focused on nuances and depth to all these characters, and we had the benefit of a long lore for that. Games don't normally go that deep. And then also some games are only for a segment of the population. They might be more, a lot of violence or fighting. And to do a universe that's intergenerational, grandparents, parents, and kids, you need to have something, as I mentioned, with the Iron Man story that we came up with, that was dedicated to the fans and good, but also brought it to the rest of the world. Those would be the two areas.
Okay. Well, David, we only have a minute left. Can you give us a little bit of a sneak peek about Ecos and your next universe?
One thing I was going to mention is AI. And I think AI is going to help the companies that have established brands, because we'll be able to make the products quicker and cheaper, and it'll be a better business. And we'll already be established as a beachhead of awareness. It's going to be a lot tougher for new stuff to come because there's going to be so much content out there, I hope something does come, because as we heard in the introduction, it's not just about a cinematic universe. It's about a potential worldwide mythology, something that different cultures can have in common and share and have fun with. I've experienced it this last 3 days here, talking about Marvel with everyone that I've met, and have just gotten a lot of joy, seeing the joy that it brought people from Saudi and people from all over the world. And I think that common bond and joy is so valuable, no matter what anyone believes in the world today. And so I'm hoping there'll be another worldwide mythology. I'm going to do everything possible to help with that. You asked about Ecos. One of the tricks on these things is secrecy and mystery, right? So I can't really go through the details about Ecos here as much as I want to. I wouldn't be doing it if I didn't think it was unique and relevant for today's time. The visuals are amazing. It has a visual DNA that is tied to an artist, so it's very primal. You can recognize it right away. It's a different type of story, very relevant themes. And the bottom line is I'm excited about it sincerely, as excited as I was when I thought about doing Iron Man.
Thank you, David. Thank you for your time. Thank you for your vision. Thank you for bringing us the Avengers, and we look forward to your next universe.
Thank you.
So Saudi Arabia is aggressively transforming into a global gaming and esports hub. $38 billion investing rather, as part of its Vision 2030. Let's bring on His Royal Highness Prince Falzar bin Bandar. Thank you. So what I find interesting is that gaming, I think, as a lot of us know, is probably the largest entertainment category on Earth. But I think what's fascinating is that the fastest growth is no longer coming from the West. And there is this sort of dramatic shift we're seeing in terms of the center of gravity really changing, with the Middle East and North Africa really trying to position themselves as a brand new hub. What does it take to create an entire gaming ecosystem from scratch?
Well, first, let me start by saying thank you for having me here. It's a pleasure to be here. And thank you for all coming out to see me. It's good to see a full house, not nerve-wracking at all. But there's so much that needs to be done to get Saudi to where we want to be as a global gaming hub. First and foremost, it starts with education, making sure from a school and university level, our young men and women are taught the tools where they can take over this industry, giving an atmosphere then to be able to create startups, to create visions, to create IPs, to create stories. Because one of the interesting things that I think often gets mislooked or overlooked is all over the world stories have been told. And two regions that still have stories to hear or that have not been told internationally are the Middle East and Sub-Saharan Africa. Mm-hmm. And that's right where we are, in that where the birth of civilization was and where that birth of history and the dearth of stories that are there that haven't been told, I think is very exciting. And giving our young men and women the tools to start to tell those stories from their point of view, I think is something we're very excited about. And then creating a long-term plan on how to become sustainable. And we're not just looking for one unicorn to pop up and then we're done with our job. We want this to be something that continues, not after 2030, but after the year 3000.
So what does the strategy look like then? I mean, I assume that part of it means, investing heavily in already sort of large established gaming companies, so Nintendo, Activision, Blizzard, I'm sure Take-Two as well, but also investing in startups. But you also have to really try to nurture a domestic industry as well.
Absolutely. I mean, the investment in the international companies through Savvy Games Group and through the PIF have been amazing. Getting a foothold on the global stage, being a part of the global community of games development. But that has to be coupled with what we're doing on the ground. We just signed an agreement as Savvy Games Group with the Ministry of Education to launch educational programs across all universities in Saudi Arabia and across all schools in coding, which I believe should be taught as a language. The same way you teach English and Arabic in schools in Saudi, you should be taught coding. To give young men and women the opportunity, and depending on the university and their history or what their specialization is. I mean, for example, we have a program at Princess Noura University, Art for Gaming. We have a program at King Faisal University for game development, at King Fahd Petroleum University on the engineering behind game development and the coding and So trying to make sure that there's the tools available for the young men and women, and then really to create the atmosphere where we can get out of their way and let them create, and let their creative juices get going, and create that mythology like Marvel that can hopefully come out of our region to the world.
A statistic that I loved, and if I'm honest, I was quite surprised by it, is that 40% of the employees working in gaming overall in Saudi Arabia are women. 40% of the employees for Savvy Games Group are women. 20% of esports players in Saudi are women. Explain why.
Well, I'll start with the games industry first. I've talked to a lot of our young ladies that are in the industry and asked them, why did you come out? Why did you join this industry? Was it a passion for gaming? And for many of them it was, but for some of them, very interestingly, they saw the games industry in Saudi as not a male-dominated industry like oil and gas and banking and some other things. And so they thought they had an opportunity to gain a foothold and build a career. which is interesting to me because everywhere else in the world, it very much is a male-dominated industry. With esports, it was different, though. I was very lucky. Coming out of COVID, we had a champion, Najd Al-Fahad. She won the Intercollegiate World Championship in FIFA. And as soon as she won, we put her everywhere, on our Twitter, on Instagram. We had interviews with her on TV. And she became a showcase to all the young ladies in Saudi and all the families that this is a valid career path for you. And once they saw someone that they could identify with that was succeeding, they came out in droves, and they still are coming out. I mean, 20% of our professionals are young ladies now. We had last year in 2025, I think 13 gold medals. 4 of them were from our young ladies as well, between the Asian Games, the Youth Asian Games, the Arab Games, and different tournaments internationally. And we are using that as a platform for our young ladies to keep being a part of this. Our community is roughly 49% male, and 49% female, 51% male. And all of them deserve the opportunity, and they're all taking the opportunity. And that's the most important thing. It's not just making the opportunities available, but that they're coming out and taking the opportunities at every chance they get.
I loved what you said about representation. And then also very interesting that they didn't see gaming as a male-dominated industry. But what do you think the new gaming markets want that established markets or established studios and publishers are not giving them?
Opportunities. Right now, you're very limited when you're doing, especially a AAA game, on where you can create that game because of the budgets, the manpower, the internet capabilities. But what's interesting, what you have now that you've never had before is the tools are much more egalitarian. With AI and the AI tools available, with the game development tools that are available, you are now able to create a AAA style game at the budget of what was an indie game previously. So the budget is no longer a hindrance. Education for many of these programs is available online. Unreal Engine, for example, does many programs online where you can go in through the engine and learn how to use it. So now it becomes internet access. As that becomes more widespread, that becomes the sole inhibitor for being able to develop and create. But at the base of all of it is an idea. If you have a story, even if you don't have a AAA style game, you will start to be successful. And this is why, while I'm very excited about what we're doing in Saudi, and I think we are getting to a point where we are considered on the global stage as a global region equal to North America, to East Asia and Southeast Asia, I think the next era of growth we will see from sub-Saharan Africa. As internet penetration goes up, the youth is there, the stories are there, the capabilities are there, the opportunity will come with the internet, and you will see an influx of young men and women into this industry that will be a boon to this industry.
As a proud Nigerian, I'm very happy to hear what you said about sub-Saharan Africa. So just in terms, just final question, if you and I are sitting on this stage 10 years from now, what will have changed?
I can almost guarantee if we sit on the stage a week from now, everything will have changed.
Okay, go ahead.
This is an industry that changes on not just a regular basis, but on a daily basis. But I think what I heard a quote from Jeff Bezos that caught my attention the other day. And it was, he said, everyone always asks what will change in 10 years or 20 years, but no one asks what will stay the same. And what will stay the same is IP will be king. So as long as you have a story to tell, you will have a game to make, you will have a comic or a film to make. And 2 is the community. Community right now globally is 3.6 billion people who consider themselves gamers. And every year, as people leave this world and people come into this world, the people coming into this world are going to be gamers. So that is only growing. With, again, advancements in AI, not just in gaming and game development, but in what that means for your daily life, your work life, and the ease of doing business, people are going to have some more leisure time. It's more time to be able to spend gaming. And with the advent of not just free-to-play games where you can get on and play any game, but coming online with things like with cloud gaming and with Web3 gaming, you're now going to start seeing more paid to play, where playing becomes your career, not just as a professional gamer, but just to get on and play games with companies like Sunsoft Sandbox, and many others. And I think that's where you'll see us transition, where it not just be mass market,
Right.
but it'll be people's career to play games, not just play professionally.
Your Royal Highness, thank you so much. Thank you. Round of applause for Your Royal Highness. Thank you. I shake your hand.
Thank you very much. Sorry, I was using the mic.
All right, we now move from gaming and esports to elite sports. Please welcome Grand Slam champions and Hall of Fame inductees, John McEnroe and Mary Pierce.
Oh, this is working. Good afternoon, everyone. This is just so great to be here. Really excited to be here. Thank you to Mr. Atyas for inviting us and having us here and having sport and tennis specifically, live sport, part of this global discussion. So just, when we talk about elite performance, we often celebrate the trophies, the titles, the visible success, but behind every result is something far less visible and far more powerful: grit. In sport, as in business, we're constantly told that hard work pays off, that if you push hard enough, long enough, you will succeed. But the reality is more complex, because effort does not always equal outcome, and resilience does not always guarantee return. So today, we explore a more nuanced question: can elite grit truly guarantee ROI, or does it simply earn you the opportunity to compete at the highest level? And there is no one better to explore this with than someone who didn't just compete at the highest level, but redefined it. Grateful that you're here. It's an honor to share the stage with you, my friend John McEnroe. Welcome.
Thank you very much. Yeah, thank you. Some of you still know who I am? Yeah, all right, yeah. Talent helps too.
Sorry?
Talent, that helps.
Yeah, exactly. So John, talent, well, we're going to get to that. So it's part of the questions. You're ahead of the game, like always. So let's, I want to ask you this first question. When you hear the word grit, what does it truly mean to you beyond the cliche?
It means to me that, you're willing to sort of put yourself out there and overcome that fear of failure and, compete to the best of your ability and do it in a determined way. I learned a lot from one of my great rivals, Jimmy Connors, because it looked like every point he ever played was the last point he would ever play. Rafael Nadal, more recently, those are the two greatest effort players I've ever seen. So I try to sort of model myself after him. I'd look in the mirror, and when I got back to the hotel when I was playing, wherever it was around the world, and think to myself, did I try as hard as Jimmy Connors tried, especially when I played him?
Okay.
And most of the time, I felt like I came up a little short, so I felt like I learned from that. And you got to learn from, obviously, positive and negative experiences.
Yeah.
But that type of, when you witness that in all sports, not just tennis, but when you witness that, it's sort of inspiring and gets you more easily ready and willing and able to go out there and give that type of effort.
Yeah, no, definitely. I agree, because in elite sport, that definition gets tested very quickly. And, was there a defining moment in your career, I'm curious, where grit, not talent, because we know you are just full of talent, ridiculous talent, but was there a defining moment in your career where grit, not talent, made the difference?
I think in a couple of occasions, obviously, when I was in college, when I was at Stanford, winning that NCAA title, which is obviously the March Madness is going on right now, so that's in a lot of people's minds. But when you're sort of the hunted as opposed to the hunter, so that type of ability to overcome that and be able to succeed. I believe there was grit even when I lost. My first match with Borg was like the most memorable match in my career, but I learned actually from what I saw from him, because he had already won it 4 times, and I pulled out this tiebreaker, which was sort of memorable for me and both our careers, and thought I had it won then. And he found another gear and another level that I didn't think he'd have. And I would say that was that grit and determination and just finding something you didn't know you had inside you. So that was another lesson learned.
Exactly.
And so I felt like I did a pretty good job applying that to my career, most of it. I think at the end of it, I started to not able to sort of learn from losing as well as I did early on, because of course in sports you're losing. I mean, even if you have a great year, you're losing a handful of times.
Yeah. Yeah, I think that's an interesting comment because when you lose, you think, oh, well, you can learn so much from that. And even in sports or in life or in business, when something happens, if you lose a match or if you lose a deal, I think those are the moments, like you said, that you can learn probably the most from those moments.
I don't know if I was 20 years ahead of, thinking 20 years ahead like the Marvel CEO was.
Yeah.
A little bit
You're
earlier.
probably just very much
Maybe
in the moment
6
when it
months,
happened.
or a couple of years. In tennis, we had to make our schedules 15 months ahead of time for a lot of that, which was difficult because you're all over the world and you're not going to be sure how you're feeling mentally or physically at certain times. So it's a big ask. I think it's basically in an individual sport when you're making in some way a lot of ways your own schedule.
Right.
That's tricky, and I think there should be more leeway given to professional athletes, particularly tennis players who are out there on their own a lot more.
Yeah, for sure. So that's really great insight. Is grit something that you're born with, John, or is it something you build under pressure?
I think it's a combination that you're born. I believe you have to be born to some extent with it, but I played, Ivan Lendl was one of my rivals as well, and he learned from it, I think, as well as anyone I ever saw. So it's a combination of things that you need to utilize in order to try to get sort of close to the best you think you'll ever be. You never reach it, which is frustrating. You always think you can do better, and in certain ways that's positive because it pushes you, but in certain ways, to me, it's negative because you're never satisfied in a way. My mom used to say to me, I took time off when I had my first child, and she was saying, I never intended to quit. And then she sort of, she's like, are you going to keep playing? And I'm like, yeah, I'm going to keep playing. Oh, thank God, you have enough money to pay for diapers for your son. And I'm like, Mom, how much money is it going to take for you to back off? And this is someone who was supportive of me.
Yeah.
But in certain ways, it felt like she was putting more pressure on me.
Yeah.
I'm like, don't worry about it. Just give me a number, a reasonable number, maybe, not as big as some of the numbers people have out there. But I think, and then let me do my thing.
Yeah.
Because part of becoming a father, your perception, for me at least, totally changed.
Yeah, I'm sure. That's a great story. Thanks for sharing that. So even when you have it, let's say you're born with it, even when you have it, does effort always translate into results?
Effort doesn't always translate. It translates into pride in a way, to me. It's better to try and fail than not try at all. Teddy Roosevelt said that. I'm sure the president will have something to say, hopefully inspire the troops. But you got to go out there and lay it on the line, which is hard, especially if sort of you're getting beaten up and not winning as much as you say you normally think you should, or things have changed, or someone comes along that, takes it to you and you're like, okay, how are you going to handle this? So you're constantly sort of looking over your shoulder, but, finding that sort of peace with yourself that, which I wasn't very good at finding, actually, now that I think about it. It translated to a little anger on the court at times. But, I was sort of searching for that perfection, and if you're a perfectionist, which I believe I was for most of my life, not as much now, I think hopefully coming down a little bit, but it feels like, you're not allowing yourself the satisfaction of, the victories at times.
Yeah.
So it maybe helped in certain ways, but in other times you feel like it's hurting, at least for me personally, it was hurting me.
Yeah, no, I can understand that for sure. So do you think, John, can grit guarantee ROI? Or does it simply increase the probability of success?
I'm going to go with the probability of success. I don't believe that, you keep persevering. To me, like if I see a young kid at my tennis academy now, and I see that he's, listening and giving that, type of effort that you're talking about, that whether or not he becomes a professional tennis player, because 99% of the kids at, the biggest tennis academies in the world don't become professional tennis players.
Right, yeah.
But if they show that type of grit you're referring to, I believe that they'll be successful in one form or another in their life.
Yeah.
So I think that it's, tennis is sort of, to me at least, a microcosm of life. You're sort of learning on the fly. You're getting a lot of life lessons. You're learning discipline to some degree. And you're learning a lot of things that maybe you wouldn't otherwise have the opportunity to do so. So I think it's a great way to sort of set yourself up in case it doesn't happen, if your dream, at least in tennis or a sport, doesn't come true.
Yeah, no, definitely. And because we've all seen people work incredibly hard, what separates productive grit from wasted energy?
Productive grit from wasted energy. Wasted energy usually would be later on in the evening. That could be some wasted energy, We were at our age, the way things are, people look at things now, especially athletes, they're much more advanced. There's analytics, there's, the understanding of recovery and training, and, the things that we were doing weren't helping us recover quite as much as we were. So it depends on the age. Now it's a different time. Everything's changed. The technology in so many different sports, tennis in particular, has changed so much that it's hard to know in a way, what exactly, I don't want to spend a lot of my time looking back. What should I have done?
Right.
It'd be a long list of things probably that I should have done perhaps a little bit differently, but I've got to look, to me personally, I'd prefer to look at the journey I've taken the last almost 50 years in a sport that's allowed me to even be here today.
Yeah.
That I'm going to look at it like as a net very positive.
Yeah, no, for sure. And
at least for me. I've got 6 healthy kids. I got a couple of grandkids. I get to still talk about tennis a little bit at the major events. I have this tennis academy. I love to try to get out there and play. It's getting a lot tougher, but generally I feel proud of where I sort of headed over this 40, 50 years.
Yeah, no, for
Thank
sure.
you.
Amazing.
And another
amazing.
thing. No.
Amazing. Legend. I'm a fan. I've always been a fan. I've always loved watching you, by the way.
You are also a great tennis player, by the way.
That,
Mary Pierce won a few majors herself. Give it up for Mary.
Thank you, John.
Yeah.
Thank you, John.
Absolutely.
So sweet of you. So I have another question. I'm curious. For leaders today, what can business leaders learn from handling match point pressure? We all know what that match point pressure feels like, so.
Well, I think, it's the similarity is that you sort of, I believe, learn from the experiences you had. Like when I walked onto Wimbledon center court for the first time, my legs were literally shaking when I played Jimmy Connors. It felt like I had to experience before I could sort of overcome and eventually win it. I'm assuming that's to some degree the same in business, that, you just had to keep putting yourself out there. You're going to feel a lot of pressure to get things done and get it done as quickly as possible. But at the end of the day, you have to do the same thing athletes do. Learn from, things that won't work out. What are you going to do differently? Prioritize what needs to be done and then sort of take it in that direction. And sooner you keep persevering and working at it, you'll be able to eventually do your thing, and we'll all live happily ever after.
I love that.
I look at my friend Jerry there in Prudence, and then, who would have thought he'd be in Saudi Arabia? God bless you. Good to see you, Jerry, by the way. Yeah.
Yes.
We used to be in the same gym, so we trained together.
I love it. Gosh, time goes by too fast with you, John.
We're just in the first
set. I feel like we're just warmed up. We just did like a warm-up, right?
Someone coming up to speak
is this like 3 out of 5?
That they could kick us off for? Or?
Are we doing 3 out of 5 sets here, or 2 or 3?
I think this is a 1-set match.
A tie break, yeah.
No,
time just goes by way too fast with you. I love it. I've just enjoyed so much sharing this stage with you. It's such an honor. And I think I have one last question. I have so many questions, but one last one, John. If we leave everyone here with one idea, would you say grit guarantees ROI or simply earns you the right to compete for it?
I'm sorry, could you repeat that?
Well, I guess we kind of touched on that a little bit earlier, but I think just one thing to leave everyone here in the room with that, would you say that grit dared...
One thing I want to leave with, because
Yes.
there's a lot of
Okay,
things
let's
going
just end
on
it with
here.
that.
Long
What's
live.
one thing you want to leave
This is
everyone
what
here
I
in the
want
room with?
everyone to leave
Yes.
with.
John's
Long
final
live
word.
live sports. Okay?
What?
Long live live sports.
Yes, yes,
There's nothing like a great sporting event. Thank you.
Yes, agree. Thank you so much, everybody. Have a wonderful afternoon. It's been great
Thanks a
being
lot.
with you.
Whoa.
Thank you, John.
Mary and John, thank you. Terrific conversation. Our next session is how to power and capital flow. So please welcome back to the stage Richard Atias in conversation with Stephen Witkoff, the Middle East envoy for the United States. Gentlemen.
Steve, thank you so much for being with us. I know you have a very busy schedule and you have a lot on your plate.
Just a little bit.
So let's first of all focus on the main thematic. You are an investment conference, so we want to talk about business first.
Can I just give Jerry Inzarella another shout out?
Of course. Of
so
course.
Everyone knows it's
I know
not
he's
just
an old
McEnroe,
friend of
everyone knows
yours.
It's mine. I think I know Jerry longer than John McEnroe does.
For how many years?
Just saying, Jerry. And Prudence, too.
You have many friends in the room. So thank you, guys. So we are, as you know, Steve, we are witnessing a world where capital flows are no longer purely driven by market, but increasingly by political alignment.
Mm-hmm.
So in your view, have we entered a new era where geopolitics is a primary driver or global investment decisions?
Yeah, I think I've talked to His Highness extensively about this, and I talk about it in the Middle East. It's very difficult to finance in the Middle East. Banks are not underwriting where taxes are going. They're underwriting exactly what's happening today, war risk. How do you successfully put up a $500 billion hyperscale data center, 5 gigawatts, that's essential, and a bank underwrites lending against that, and they have to evaluate whether the Houthis, Hamas, or Hezbollah is going to blow it up the next day, or there's going to be a full-out war with the Iranians. So I think you're asking a question that we've been talking about in our administration for at least a year, and now the whole world is waking up to it.
So how do you see the relationship between political influence and capital allocation evolving in the next, let's say, decade?
Well, look at how the oil markets and the stock markets react to President Trump when he says we may have an extension or we're negotiating with the Iranians. People are listening intently because there's a risk premium on all of these different things. So I think it's all correlated.
And in that context, how do you see the role of sovereign wealth funds playing in, I would say, geopolitical actors now, rather than just purely financial investors?
Yeah, I think, look, I know most of the leadership of all the sovereign wealth funds in the Middle East, let's call it, and in the balance of the world from my old business. I think they play a huge part. And I think that as people see flows from sovereign wealth funds, I think they feel that you have very sophisticated, smart capital there that is in touch with their governments and other governments. And so they play a leading role in all of this.
And you are special envoy to the Middle East, but in fact, you are a global player and you will always be. So how should we interpret, in your perspective, the current US approach to strategic regions, like, of course, the Middle East, but also Latin America, Asia, Europe, even in terms of economic partnerships?
Well, first of all, the whole world is correlated now. We see it in the Strait of Hormuz, but we also see it in some of the issues we've had with European cooperation in this operation, Epic Fury, that we have with the Iranians. So I think this is presenting a lot of the friction points in the world, and it has to be addressed.
So you just mentioned Iran. So a few words you want to say about the situation, the current situation? We'll hear from the president, who I'm sure will cover extensively.
Yeah, I should kick the question to the president because then I can't make a mistake.
But anything you want to?
Well, I think the president has said it all. You'll hear it from him. But we have an adjournment. We have an extension. We view it as a real positive. The Iranians, there are some people there who have denied that we're negotiating. I think we know, everybody in this room knows we are negotiating. It's clear. Some ships are coming through. We may have a different definition of negotiating than they do, or there may be people within their system today who just don't have the ability to admit it. But we're talking to them.
What is your definition of negotiation?
Well, my definition of real negotiating would be right here, and we don't leave until we're done. And we've offered that, and we think there will be meetings this week. We're certainly hopeful for it. Ships are passing. That's a very, very good sign. And I think the president wants a peace deal. But he also believes in, and I believe in it too, peace through strength. Without pressure, you never get anybody to the table. And in this case, we're employing a lot of strength. We have a big fleet there, and yet we're prepared to solve it with a diplomatic solution. And our solution is all about what's best for the region, what's best for the United States, what's best for the world. No enrichment. We can't have a second coming of North Korea in the Middle East. It's totally destabilizing to that region and to the world. And we don't get a lot of traffic through the Strait of Hormuz, Richard, but, we're doing this for everybody else. That's why it's curious sometimes to the president when he shows this level of leadership and we don't get cooperation from everybody else, because it's really not our issue. It's so far away, but it is our issue in the sense that we have a leadership platform. So that's how I would answer that question.
Let's talk about, I would say, the new framework that the US administration is doing business. So sanctions and regulatory pressures are becoming, I would say, key tools of foreign policy. So how should global investors adapt to this, I would say, politizations of market?
We're talking about Iran now?
No, we talk just in general.
So anywhere. So look, I think you have to be very astute and a very good investor to understand what's happening out there. And we have a very powerful military. It's unlikely we're going to lose any conflict with Iran. On the other hand, we also have a president who believes in elegant solutions. And elegant solutions are diplomatic solutions. We have a 15-point deal on the table that the Iranians have had for a bit of time. We expect an answer from them, and it would solve it all. It would solve the enrichment question, which is we can't have enrichment there today. It would solve the material question. They have close to 10,000 kilograms of enriched material stockpiled, which they have to give up. It would solve the stockpiling question and the oversight question. So all of these are red lines for us. But we're not looking to see the dissolution of the Iranian people. We think they're very good people. We want them to thrive and survive, and the country to join the League of Nations and to be prosperous and do a lot of business. We just don't want the destabilizing forces that they've generated out there. We don't want to encourage and advocate for non-state terror actors or for militias. I think if all of those things happen, then we'll have a better world. And by the way, we may end up with all kinds of collateral benefits, like normalization between Saudi and Israel. So these are the things we're looking for.
But forget zone of conflict. I am a European global investor. I'm a Latin American global investor. How should I adapt myself now in terms of business with, I would say, the US policies on?
Well, first of all, I would say that the US is a safe harbor, and that's why people are there. That's why all those investment flows are there. You know, if you were a hyperscale data center operator, you might be chasing cheap electric in other marketplaces. We have expensive electric. But if you don't want your data center blown up, you might choose jurisdictionally only to be in the United States. So I think, now, hopefully it doesn't go to that place. That wouldn't be a healthy thing for the world. And that's why we have to, the president believes in peace through strength, Richard. He believes that through strength, through the posturing of it, that's how you achieve a peace. I don't think there's any doubt that with the Gaza settlement, that we would have achieved it without a strong show of strength. I think that demonstrated to Hamas that those hostages were no longer an asset for them. They were a liability. It showed that to them. That was the breakthrough in that deal. So.
But what is the advice that you will give to investors who are operating in a region quite exposed to geopolitical shifts or policy reversals?
Well, I can tell you.
You are a businessman yourself before anything else. So.
I know, but I left that life behind. Now my son, he's right up here somewhere. He's probably going to exceed me. In fact, I'll tell you a story. When he was 16, he interned for someone by the name of President Donald J. Trump before he was president. And the president, he wrote the president after that internship a thank you letter. The president took the letter, wrote on it, Steve, your son will probably exceed you one day. So now there he is. Okay.
So Alex, you still have the letter?
I have the letter.
You have it.
I have it framed on the wall.
Back to you.
Yeah. Look, I think you have to follow positive leadership. I think there's a lot of great leadership out there. President Trump is a pro-business, pro-growth leader. You can be sure that his policies, not just in the United States, but wherever we have alliances, are going to be about pro-growth and pro-business. It's the same thing with His Highness, MBS, who's become a really good friend of mine. And that's what he talks about, a better life for his people, better prospects, better aspirational goals. MBZ talks in the same way for his people. It's a wonderful country. I was just with the Prime Minister of Qatar yesterday, Sheikh Mohammed, one of the great statesmen out there, and Tamim. These are all, really like young but special leaders. And I think that's a beacon of hope for the world. And by the way, the president was close with all of them.
Yeah, you
and I'm missing
yourself. You have become the friend of even Kingdom of Bahrain, all.
And I'm missing some. I mean, look at President Aliyev from Azerbaijan. Completely, directionally turned his country around. And so.
And this is how you build the Board of Peace, by the way.
Yes. Yeah, and I think the Board of Peace is really an amalgam of a lot of people who think in that same way.
So, which sectors do you believe will benefit most from, I would say, this new geopolitical economic alignment?
The sectors?
Yes.
Well, yesterday,
where the people should put their money now.
Well, yesterday at the White House, I was looking at the president called me up. I was upstairs and he said, come on down. I got Sanye from Micron Technologies, and we're going to go look at the hole where we're building the event space. And that's what we did. And it's funny because I didn't know him. It's the first time I met him, but I began to hear the history of his company. It was a company whose stock was at $3, and now it's at 400. It's doing, I think, memory, right? So tech is so big. It's so powerful. And the issue with tech is how it's going to be regulated, AI and so forth. But you listen to all the smart people who are in AI and tech, whether it's the Ellisons, whether it's Jeff Bezos, who I talked to about this, whether it's Sheikh Taknoon, who is a leader in the field. Everybody knows that we're going to have to pay careful attention to how this affects society, jobs, and so forth, because it's a very powerful tool.
Steve, do you think the audience is a big majority business leaders? So do you see a role for business leaders as, how can I call them, informal diplomats in today's fragmented world?
Informal
diplomats.
I absolutely do. Absolutely. It's funny, we had a lunch today, and I was sitting next to Jeff, and that's all he was talking about.
Jeff Bezos.
Yes. How do you give back? How do you take your business ideas and expand them, not to make money for yourself, but to provide something better for society as a whole? And I think that, you know, like in my work, people ask me, why do I like doing it? And I say, because it feels worthy. It feels like we're changing lives. I remember when we met those families of the Israeli hostages, and they were ecstatic because they didn't think their children were coming home. But I was also in Gaza, and I met Gazan families whose children were released from Israeli prisons in exchange. And they were just as grateful as the Israeli parents. So I think business is beginning to become very aware that giving back and participating in those sorts of aspirational goals should be a part of what you do, that it's the right thing to do. And I think that President Trump thinks like that he believes in that. You know, I say all the time that he doesn't like me calling him a mush because he thinks that soft image reduces his leverage, but he's a very good guy.
So you know President Trump very well, and despite the fact that my team is asking me to cut the session, I'm sure that the president is on his way. I cannot ask you at least two last questions. What is his main quality?
What is his main quality? He's a great decision maker. He makes decisions. I'll give you a few qualities. He makes decisions, and he's got an uncanny ability to process a lot of data. But in the event that he's wrong, and it's not often I've seen him wrong, he moves on. That's one quality. Two, he's totally accessible. I've talked to many people from the Biden administration, bright people, who say to me, you had an advantage the day you started working for the president. You could see him. But when I say he's accessible, it's because he wants to hear. He wants to be a part of the solution. He wants to be a part of the discussion, and he understands the math. He takes that whole cost-benefit analysis thing that he was doing his entire successful life in the real estate business, and he applies it to these very, very critical world issues. We sit down, his team, me, I'm a part of it, which I'm blessed for, and we take him through that. And those meetings can last for hours because he's interested in what that solution is about. And he's always breaking it down. It's very impressive to listen to him.
So my last question, Steve, in the world of constant disruption, let's be very frank, and which is the new norm now, and uncertainty. So what is the one truth that you trust while everything else keeps, I would say, shifting? What is your compass?
My compass is I work for a man who leads the most important superpower, and he's a good man. He wants to do good. He wants his legacy to be that he did good, and I have always trusted in him before he was elected, but watching him operate as the president, I have tremendous faith and optimism for the world. I really do.
Ladies and gentlemen, Steve Witkoff, thank you.
Gentlemen, thank you. In an era of viewing audience fragmentation and a never-ending struggle to get eyeballs, how does one build a lasting media empire today? Please welcome our moderator, Jerry Cardinal, in conversation with David Ellison. He's the chairman and CEO of Paramount, a Skydance company. Welcome, gentlemen.
Okay, well, Yasser, I have to say thank you. Only at FII can you go from solving world peace to the future of Hollywood and then to the president. So it's a privilege to be here. Thank you. David, why don't we start with this really intense journey that we've been on together? It's been an unbelievable 3 years that we've been at this. You know, the day-to-day reporting on it sort of belies the fact that actually it's been, you know, a 15 or 16-year journey for you. Just to reset the table for everybody, take us through that journey from, you know, starting Skydance, your background that led you to that, and then it really sets us up well for the conversation we're going to have.
No, absolutely. First, I just want to say, Yasser, it's such an honor to be here and to be here with all of you. So just genuinely thank you so much for having me. So my journey in media started 16 years ago when actually really before that, I mean, I went to film school at USC. So this has been a life's passion for me. But early on, I had the benefit of some truly incredible mentors. My first job was actually working for my father, where I actually built Oracle's website when I was a teenager, which was not the normal summer job, but incredibly educational. And then had the privilege of getting to watch Steve Jobs build Pixar and David Geffen build DreamWorks. And what became really apparent with kind of a foot in Hollywood and a foot in Silicon Valley, and this is back in 2010, mind you, was that this bridge was going to get built between Silicon Valley and Hollywood, and that was going to disrupt the ecosystem as we knew it. And we thought with Skydance, we could build a pure play content engine to really be the tip of the spear of that disruption and really build a next generation studio. You know, over the 15-year journey of basically building Skydance, we started as a motion picture company, then a television studio, an animation studio, and interactive, and ultimately built to a business that was worth, you know, $4.75 billion and put us in the position to be able to merge with and acquire Paramount.
Well, you know, it's I've been investing in the media entertainment industries for 35 years, but I always shied away from going headfirst into this part of Hollywood. And it really was until I met you 7 years ago that I got off the dime to have the conviction to make that investment. You know, what I saw with you was sort of the vision that you had even 7 years ago, 8 years into building Skydance, the way you articulated, you know, what was coming, your passion for the talent and the content creators. I mean, you really love storytelling. You went to USC Film School, you turned down Harvard, you turned down Stanford, and you know that genuine, you know, love of Hollywood is what stuck with me. But the other thing that stuck with me was the way you, as a family owner-operator, approach the business. And I think in Hollywood, that's a huge competitive advantage. Maybe talk a little bit about how, you know, your background and the way you guys, the way your families approached building Oracle and the way you approach building Skydance to get to this point, how that's informed, you know, your decisions.
No, absolutely. So it's, look, I think when you look at the moment in time that we find ourselves in, you really need to do, I'd say, 3 things to be really successful. One is, you need to be able to win in the content space. And fundamentally, you know, that goes back to literally the very, very beginning at Skydance. And we were fortunate enough to get to make a movie called True Grit. People really questioned it. It had been about a decade since a Western had worked, but we loved the script. We believed in the Coen brothers. And it went on to become the most successful Western in the history of cinema at the time, got nominated for 10 Academy Awards. And then similarly on that kind of quality as the best business plan, we partnered with, you know, Tom Cruise and J.J. Abrams and Brad Bird on Mission Impossible Ghost Protocol the following year. Now, Mission 3, if you go back to that period of time, was actually not as successful as the previous one. But we really thought if you said, we're going to aim high, we're going to say quality is the best business plan, and really focus on the story above all else, we really believed anything was possible. And we were thankful that that film went on to become the most successful in the franchise and was the most successful, actually, spy genre film in the history of cinema at the time when it came out. So going all the way back to our roots, we really believe in that requirement of you have to aim high and you really need to be able to win in content today. But But in addition to that, which is really new, given how successful of a job Silicon Valley has done pushing into Hollywood and how distribution has been disrupted, is that for the first time is only part of the equation. What you also need to be able to do is actually build differentiated tech products, differentiated platforms to really be able to compete with the Netflixes and YouTubes of the world and the best and brightest that are coming out of Silicon Valley. And we really do think it's that combination of art and technology really working hand in hand together, which really goes back to the core thematics of how we built Skydance, what Pixar was built on. John Lasseter and Steve Jobs had this great quote, which is, art challenges the technology, technology inspires the art. And it's this phenomenal feedback loop. And I think to really be in a position to win today and to be successful, you need to understand how those two things work together and actually make sure that you have the appropriate talent inside of the organization to be able to kind of transition to the future. So that's one of the things we're really excited. We're doing that at Paramount now. We're excited to do that with the combined company when we get to closing. And the other thing, which I think is really important, is being an owner-operator. We're very proud that we were the largest shareholders in Skydance. We're the largest shareholders in Paramount. When we will be the largest shareholders in the combined Paramount Warner Brothers Discovery when that deal closes. And what that does is make sure that all of the incentives are aligned for really long-term success. And you make decisions not for 2 quarters from now, but from 5 years from now to make sure that you have something that really stands the test of time for centuries to come. And that's what we're excited about. That's what we're motivated about doing. And we're 6 months in and thrilled with the way it's going.
That was one of the things that struck me going back 7 years, which is the technology background and the technological sophistication that you had. You saw technology by virtue of your background, as something you could harness for the benefit of content creators and the overall Hollywood value chain. One of the things that struck me is that Silicon Valley and Hollywood don't really talk to each other. And I think what we've been engaged in the last 3 years with Paramount and hopefully with Warner Brothers, really is for me the pace car for where Hollywood can go and should go. Everybody says that content really has the chance to maximize its potential in today's world where technology is disintermediating, it's disrupting it. And if you can bring those two things together, it's going to inure to the benefit of everybody in the value chain, not only the talent and the content creators, but also consumers.
No, absolutely. One of the most relevant subject matters to that is really artificial intelligence right now. And everyone's talking about how is AI actually going to impact content creation. And I actually look at it as an incredible boom for the industry and think it's absolutely going to impact media in multiple ways. But I really do think it's an incredible tool for artists. It's a phenomenal tool for the creative community. And going back to one of the kind of core principles of Pixar was always be wrong as fast as possible. You get to make a movie kind of 8 times. You make an animated movie. You then get to kind of preview it a few times. And then at that point in time, you're kind of effectively at the point where you have to be done. The thing that I think you're going to see enable basically what artificial intelligence and these model-based kind of GPU pipelines that are in the process of being created are going to allow for is to actually help you tell better stories because you're going to be able to iterate faster. If you can make the movie 15 times, 20 times, get that audience feedback, you're going to be able to tell better stories that entertain your audience. That's one of the manners that we're really excited about. When you start talking about on platform, the way frontier models will actually work with more traditional machine learning to make sure that search, rec, and discovery on platform are more effective. You can get better at personalization. It's going to really improve your direct-to-consumer service. And then when you look at the transition that we're about to embark on, it will have taken us, we're in the process of basically converging Paramount Plus, BET Plus, and Pluto all into one unified tech stack. We're going to finish that second quarter of this year. That'll be about an 18-month journey from start to finish. When you actually start applying some of this frontier technology towards that and doing things basically agentically, you can dramatically reduce that time period. And so I think the level, it's going to help you from an efficiency standpoint. It's going to help you tell better stories. And it's really going to be a transformative tool for the creative community that we're kind of fully embracing and very excited about.
I remember a few years ago when we started to look at the possibility of Paramount. You said something to me that has stuck with me ever since, and I keep repeating it to my guys. You said to me, what's interesting about Paramount is it's a $30 billion revenue company, and it doesn't have an enterprise software solution. And I kind of chuckled to myself and I said, who else in Hollywood talks like that? And that gave me the conviction for what the path that we're on. Now, I would say that we've seen this before in other industries and cycles, and we've seen it, frankly, in the on-prem database industries with Oracle. We've seen it in the music industry. Maybe talk about that a bit, because we're, to a certain extent, we're trailblazing here in the Hollywood context. And if you dial it back out in the more macro context, we're on a pathway that has been proven to be successful.
So look, I think pattern recognition is incredibly important, and I look at what's going on in media right now as to very similar to this time period in legacy tech and this time period really in the music business when it was really disrupted by digital distribution. So I'll go to the one that we had the privilege of living in. My father deserves all the credit in the world for this, but if you go back 10 years ago, legacy tech was really being disrupted. And I kind of define that as, Oracle, Microsoft, HP, IBM, Intel, all had to either disrupt their own businesses or be disrupted. The journey that Oracle went on is it was a predominantly basically on-prem database company that needed to transition to cloud and SaaS. And everybody said that wasn't possible. They said it was too late. There were a bunch of not fun articles that were written back during that period of time. And we really believed that it was possible. And the company told its story to Wall Street for about a year. People questioned it. And we used that opportunity and the company started buying back stock. We invested more. The family's ownership went from 25% to 42%. And when you look at it now, it's obviously at a significant multiple of where we invested today. We really see the same thing taking place today in media, where the actual pie for storytelling and the desire for the audience is only growing. It's really how you're getting that storytelling and how you're receiving it is being disrupted. And so from that standpoint, by putting these two businesses together, you dramatically accelerate that transition from really the cable business to direct to consumer. And when that occurred in tech, you got to record high valuations. When this occurred in the music business, if you go back to when Len Blavatnik bought Warner Music and everything Lucian Grange did with Universal, you saw multiple compressions, you saw reductions, they made bold moves. And not only did they accelerate back to the EBITDA mean of where they were trading, they actually went to highs above that. And I think you're seeing that exact same thing take place now in the media sector, which is what gives us so much confidence about where we're going to be 5 years from now.
Yeah, look, I think that re-rating that you talked about on a multiple basis also is tied to, the other attribute to being an owner-operator, which is an important North Star in our activities, is real cash flow generation.
Yep.
Cash flow is, an important aspect to making sure that we're continuing to reinvest back into content creation. We closed on Paramount in August. We started the process for Warner Brothers, in September, October. And yet, in the short track record that we've had with Paramount, I think you've shown an ability to execute, shown an ability to, realize the synergies that we've articulated, if not overperform, and to harvest great cash flow to put back into the business. Talk about a little bit about that cash flow profile from an owner-operator standpoint.
No, absolutely. I'll start with Paramount. And when we acquired the company, we announced $2 billion of runway synergies at signing, and then $3 billion plus on the last earnings call, really just by operating the company more efficiently. We'll actually achieve 2.5 by the end of the year, so we'll obviously significantly exceed what we initially projected. But what I think doesn't get talked about enough is we did that while significantly investing into the future to be able to grow the business. And the last 6 months since we've been at Paramount, we've taken the film slate from 8 films to 16 when we bought the company, to 16 movies that'll be released this year exclusively in theaters. We've greenlit 11 shows to grow Paramount Plus. We brought the UFC onto our platform, Champions League. We've invested significantly in content. So I think this narrative of you can't operate the company more efficiently by growing is actually a false one. You absolutely can do that. And as we look forward to Warner Brothers, yes, there are the efficiencies and the ability to operate the company more efficiently, which dramatically increases cash flow. And when you look at the combined company on a 2026 basis synergized, you're talking about a business that generates $69 billion in revenue, $18 billion of EBITDA, and well north of $10 billion in cash flow. And that's while investing over $30 billion in content. To contextualize that, Disney invests 22 and Netflix is 20. So we will actually be in a position where we're investing more than our peers, which is great for jobs, it's great for the creative community, It creates more competition. It builds another incredibly robust service, which is really good for the consumer and obviously providing choice. And so again, continuing that thematic of really art and technology working together, improving the operations to really generate cash flow, but also while investing for growth, are all things that we can do simultaneously.
Well, I'm being told we have to wrap up, but I would say that, your friend Tom Cruise saved Hollywood during COVID. And I got to tell you, it's a privilege working with you and watching what you're doing for Hollywood in this next phase.
It's such a pleasure. Again, it's a pleasure to be here. Thank you so much.
Gentlemen, thank you. The biggest global sporting events reshape tourism, they accelerate infrastructure, they elevate national visibility, and they create cultural relevance that travels far beyond a closing ceremony. It's a popular power for influence that carries economic and strategic impact. Few people have a better vantage point on the global reach of sport than Gianni Infantino, who's the president of FIFA.
So, hello everyone. Hello. Okay, that's good. So, welcome to this session about football or soccer. I will have to speak about that in a second, about this, which is the FIFA World Cup trophy, the most iconic trophy in world sport. On the 19th of July in New York, New Jersey, the new world champion will be crowned and the whole world will stand still. And actually, I realized something in the last few months, which has to do with my conferences in Miami. The last two conferences I've been giving in Miami, the last one a few months ago, I spoke just before Leo Messi spoke on stage. And today, I'm speaking just before the President of the United States coming on stage. So, well, nobody tells me this, but I realize now that I am kind of the warm-up act to put you all in a good mood before the star is coming. And it's fantastic. I love that. So with this in mind, I was thinking, well, what can I tell you, right, today? I could tell you, for example, that the World Cup starts on the 11th of June until the 19th of July in 3 beautiful countries, United States, Canada, and Mexico, 16 fantastic host cities in these countries, that 48 teams, 48 countries will participate. They will play 104 matches in 39 days, which is basically the equivalent of, for the Americans in the room, 104 Super Bowls in a little bit more than 1 month. This is the magnitude of the FIFA World Cup. We'll have 7 million people in the stadiums. We'll have tens of millions coming to United States, Canada, and Mexico just to feel the vibe of the World Cup. We'll have 6 billion people, 6 billion people, imagine that number, watching the World Cup. So the world will stand still and everyone will be focusing on what is going on in North America in 76 days from now. It is powerful, it is important. I could tell you all that. I could speak to you as well because we are amongst investors and economists about the economic impact of the World Cup. It's around $80 billion. It's around 1 million permanent jobs, 200,000 of which in the United States. I could tell you all of that. I could tell you as well that North America is, of course, and means show. So we'll have a big show. We'll have pre-match shows with fantastic artists and singers. So come early to the matches. We will have the first ever halftime show in a FIFA World Cup final. We will announce the artists. It's not just one, it's several. It's the biggest, the best in the world. It will be iconic, unique, special. I could tell you as well about, I don't know, ticket sales. This is one of the topics that made us and made the media speak a lot about it. We have received in 4 weeks over 500 million ticket requests, 507 million to be precise, for 104 matches. To put this in perspective, in 100 years of FIFA World Cup, the first World Cup was 1930, in 100 years of FIFA World Cup, FIFA sold around 50 million tickets. In North America, in 4 weeks, we got 500 million ticket requests for 7 million tickets. It means like 1,000 World Cups of tickets could have been sold in only 4 weeks in North America, and this shows how ready this part of the world is to embrace the world, to unite the world, to bring everyone together in what will be a real social event. The biggest show on the planet, the biggest show on Earth. The world will stand still. You know, we all learned at school that the world rotates around the sun and so on, and then around itself. Well, during the 39 days of the FIFA World Cup, the world will stand still. And everyone will be watching and focused on football or soccer. So let me clarify this once again. I said this already. Maybe some of you have heard it. We have to clarify this once and for all, Yasser and dear friends. So we, meaning everyone outside of this beautiful country, we call football a game we play with our feet. That's why we call it football, right? Are there Americans in this room? I think yes, yeah. Yeah, fantastic. You in this beautiful country, you call football a game you play with your hands. Now, I don't know who's right or who's wrong, but it's not important. Let's leave that aside for now. The most important thing is that we enjoy, we are happy, and we have fun. And so instead, I was thinking of telling you all these things. I brought today a friend of mine who is one of the biggest legends, of the biggest players, of the best players ever in football all over the world. And he can speak to you about the emotions and the happiness that it means to be one of the best, to win this trophy. He won it twice. And I would like you to give a big round of applause to Ronaldo Fenomeno. Bella, eh? Ah.
Hello, everyone. Good
Fantastic.
afternoon. Oh, I miss, and we miss in Brazil. It's 24 years ago we won this one for the last time. And yesterday we lost against France again.
Friendly match.
Yeah.
Friendly match.
But
So tell the public, what do you feel when you win this trophy? And what does it mean to all the people as well?
yeah, for me, play with the national team, I was always dreamed since I was a kid to play with my national team. Win the World Cup is like the biggest achievement I have ever have. So I won twice. I lost twice, too. But it's not only the sport, win a match or win the competition. It's for our country, for Brazil, it's like it's 7 days without working, celebrating, and our culture is major football. So we all grow up dream playing football. So playing for World Cup is the best dream ever. So it's coming again, and we are very excited to play this World Cup in US and Mexico and in Canada. I think it's gonna be the best and the most beautiful competition ever made. We all in Brazil, I have a sport market agency in Brazil, and we all come to America to learn how to do an event. So we expect the World Cup to be the most beautiful event in the world.
Fantastic. Yes. Well, a country like Brazil, but that's actually true for many, many other countries in the world as well, during the World Cup, right? And especially during the matches of the Seleção, of the national team of Brazil, nobody's in the streets, I mean, criminality goes down to zero. No crimes are, so we are working for criminality, not just for happiness. You better don't get sick, because if you go to the hospital during that match, nobody will open the door. Yeah. Is it like that?
It's exactly like that. and more. So this next World Cup is for the first time, and I have to congratulate you, President, for the courage to make that happen. The most inclusive World Cup ever. So we're going to play with the 48 national teams, 48 country plays. This World Cup is how many new countries play for the first time?
Four.
For now.
For now, yeah.
Yeah, it's unbelievable, beautiful that opportunity we give to many countries to play the World Cup. So congratulations to you, President, because it's a huge football.
He's a friend, that's why.
Yeah, but it's true. Football is so powerful in the world, and we have to continue to make that happen as a social issue, and we have to do that as our the powerful we have.
Thank you. Thank you. Well, let's give a big hand to the great Ronaldo phenomenon, one of the biggest legends of the world. And I stop here, leaving you with one message, since I'm speaking to a lot of investors. Those of you who don't know yet, you should all know, FIFA is the official provider of happiness to humanity since 122 years. So invest in FIFA and invest in football or soccer, call it as you want, as long as you invest. Thank you very much.
Thank you.
Thank you.
Gentlemen, thank you very much. Real pleasure. So, it has been a packed day. Big ideas about capital and where the world is headed. It has been an absolute pleasure to be your MC for the last 3 days. I'm going to ask you to please stay seated for the presidential address, which is coming up soon. And also, if you would please turn your attention to the screen for a video of highlights from the summit. Take a look.
FII became a global platform. Riyadh, New York, London, Hong Kong, Miami, Rio de Janeiro, Tirana, Tokyo. Multiple cities, one mission to shape what comes next. Today, we back in Miami. Not to celebrate the past, but to confront the future.
I just would like to start with 3 main messages. The Saudi microeconomic and physical position remains strong, stable, and resilient.
Please join me in welcoming to our stage the FII's Board of Changemakers.
Investors would be looking to a few things. One is certainty, resilience, growth potential, and long-term plans.
The most important opportunities are today.
How to deal and how to use AI to make sure that we are more productive and smarter and so forth.
The age of intelligence is going to transform virtually every industry.
How are you going to have an AI governance framework that's observable, traceable?
With the courage to sit at the table, to listen, to challenge, and to build together what none of us can achieve alone. This is exactly why FII exists.
Today, what I'm proud about, who would have thought
Saudi Arabia could export technology to the United States. Who would have thought this is possible?
And just like Yasser started this conference, he said, we don't measure ourselves in quarters, we measure ourselves in decades.
PIF's portfolio is well diversified and structurally resilient. We are a long-term patient investor.
I see a long-term risk in left and direct lending that's not systemic.
AI is a tool. Challenge right now is to make sure kids coming out of school are AI literate.
AI-assisted co-pilots with our comp bio team.
One of the things that no one could have imagined 10 years ago when we had the first FII is how important PIF and other sovereign wealth funds would be in the advancement of this technology.
In the past 10 years or so, we put the foundation for these investments.
The new LATAM order will not be defined by speeches. It will be defined by decisions.
Latin America is entering a period of profound transformation.
Where we are now, we are stable, but we need to grow. We need to go to the second level.
América Latina requiere mayor unidad, requiere mayor integración económica, integración financiera, integración en infraestructura.
Why invest in Ecuador today? It's new investments and investments from around the world to shape the future that we want for Ecuador.
PIF remain committed to its investments around the world.
What does the world still misunderstand about Africa?
You have to give credit platforms like this for us to come and tell the world that there is a place called Africa. Africa is not waiting for the future. Africa is actually building that future.
Zimbabwe is a physical manifestation of Vision 2030 in terms of quality of life, a thriving economy, and a vibrant society.
His Royal Highness is insistent that the development reflects the personality of the community.
Renewable energy becomes a core element of that. That's what we've done at the Red Sea.
So far, the kingdom is moving well.
I remain very bullish, optimistic about the region and the future prospects. And
for Riyadh Air is a digitally led business that enables travel.
Policy formation with our regulators is extremely crucial. Into last year, in the first quarter, we've seen unprecedented investment flows coming in, and particularly into Saudi.
The opportunities of AI is really real.
How do we protect our children in this era of AI?
But the most important thing is the ability to recruit talent and where young people want to be.
Health diplomacy as a way of building bridges.
AI gives us also the possibility, to your point, to develop faster.
Develop new IP, because it's going to get more crowded with AI and stuff, so better to revitalize existing IP where you have a head start.
Giving our young men and women the tools to start to tell those stories.
Learning on the fly, you're getting a lot of life lessons. You're learning discipline to some degree.
Increasingly, not surprisingly, that exposure has been towards energy infrastructure.
I'm a big believer in inference at the edge, data centers that are highly decentralized. America needs to have open weight solutions.
Saudi Arabia as a country is very well positioned to take advantage of AI.
You can have the greatest AI, you can have the greatest algorithms, you can have the greatest... If you don't have the energy to power it, none of it matters. So